I'm going to begin with the revision of the chapter Standards on Audit. So we are going to revise in this particular, we are going to begin this part 2 of the marathon by revising the chapter Standards on Auditing, one of the important chapters from the examination perspective. So before I actually go into the contents of the Standards on Auditing chapter, see, you will not be able to find this chapter called Standards on Audit in the study material. You will not be able to find the chapter with the title Standards on Audit in study material. You will not be able to find it. So then from where this standard has come, from where this chapter has come. So what I will say is, see, the standards are spread across various chapters in your study material. Like for example, if you open the chapter Audit Evidence, in that Audit Evidence chapter, they have included so many standards. Like for example, 501, 505, 510, and there is a chapter called Completion and Review. In that they have added few standards like 260, 265, 450, 560, 570, 550 like that. So like this, the standards on audit are spread across various chapters. And in fact, till now, whatever chapters we have discussed, those are also taken from standards only. Like as I was telling, when we discussed the nature, objective and scope of audit and also ethics, there we actually understood two standards, SA 200 and SA 210. So when we understood audit reporting chapter, in that actually we have covered four standards, 700 series, 700, 701, 705 and 706. When we covered the chapter Audit Documentation and Audit Evidence, we have actually covered two standards. One is SA 230 and the other one is SA 250. Sorry, SA 500. Then we have covered the chapter Risk Assessment and Internal Control. When we discuss the chapter Risk Assessment and Internal Control, we have actually covered two standards, SA 315 and 330. And not just that, in the upcoming chapters, like for example, when I will be revising the chapter Audit Strategy, Planning and Program, there I will be covering the content of SA 300. When I will be revising the chapter Audit Sampling, there I will be covering the content of SA 530. When I am revising the chapter on Analytical Procedures, there I will be covering the content from SA 520. So don't be of a wrong notion that when you see the title of the chapter when you see the title of the chapter Standards on Audit, this is not the only chapter where we are going to learn the standards. We are throughout the subject of the audit, we have actually learned the standards at various places. But what I have done is, out of all the standards which are applicable for your CA inter syllabus, and the standards which are not specifically covered in any other chapters which require a separate discussion, so those standards I have separated and included them under this chapter. Those standards which need a separate discussion, so all that standards I have separated in the study material and added it under this chapter Standards on Audit. And if I have to list out the standards which are applicable, the standards which we are going to discuss as a part of this particular chapter Standards on Audit, the list is there here. So if you could see here, almost we have 13 standards which are required to be discussed. How many standards? 13 standards we have which are required to be discussed as a part of the Standards on Auditing chapter. But as I've told, don't be of a wrong notion. We are not learning Standards on Audit only in this chapter. Throughout the subject of the audit, in fact, we have learned the Standards on Audit only. But in this specific chapter, we are going to talk about these specific standards. Clear, everybody? So having said that, I will go into the revision now. Guys, when it particularly comes to this chapter, I am going to revise the standards from the charts, whatever I have prepared. So if you see here, there are charts. See, for the previous attempts also we have prepared the charts. For this attempt also I have updated the charts. I have added some information. I have added a few new standards to the existing standards. Also I have added some new information in these charts. So this chart book also will be shared with you. Soft copy will be shared. It will be there in the website. It will also be there in the app. It will be uploaded. The charts, the standard charts, whatever are relevant for May 2024 CA inter auditing examination. So that chart book I will upload it in the website as well as our app. So from there you can download it, and this chart book is going to contain all the charts relevant for your May 2024 examination. All the changes are made. So when it comes to this chapter Standards on Audit, I will be revising the entire content of the Standards on Audit through this charts. See, what I would suggest you is, see, you have to do the preparation from the main material only. You have to read the textual information. Why? Because in the examination you can't draw the charts. So what you should do is, I will make you clear the concept. See, these charts are also very comprehensive. I have covered everything related to the standard. The charts are very, very comprehensive. I don't deny that. But when they ask the question in the examination, you can't write it like this summary points. You have to write the complete sentences. So to reproduce the content in the examination, go through the main material once. So what I would suggest is, go through the main material, read the content from the main material, and you have to do multiple revisions. No, for doing the multiple revisions, use these charts. For doing the multiple revision, use these charts, but definitely go through the content which is given in the material. Why? Because in the exam you are supposed to write the descriptive sentences. So that's why my humble request, please go through the material. But for doing multiple revisions, for getting the clarity, for getting the flow of the standard, make the use of these charts. So take both hand in hand. Trust me, you will definitely write a correct answer from the standards. So you will get that level of clarity where you will definitely score 100% of the marks, whatever question they are asking from the standards, so that I can make sure. But just you have to follow the material as well as this charts. Clear? So this chart book will be uploaded in the app and the website. From there you can download it. See, before we actually talk about each and every standard here, so what I would like to do here is, so let me do one thing. Let me create one more note for our marathon series. So this is marathon part 1. So what we will do is, for marathon part 2, we will create a separate note, running notes. Right. Okay. So let me go into the topic relating to standards on audit. Guys, before I actually talk about each and every standard in a detailed manner, I would like to tell you different kinds of standards. A basic introductory information also I want to revise. Why? Because from there also there is a high chance of questions getting tested. So what are the different kinds of standards which are issued? What are the different kinds of standards which are issued? So generally, who will issue the standards in India? So generally in our India, ICA is a regulating authority for accounts and audit related matters. And this ICA has created a board called AASB, Auditing and Assurance Standards Board. So in India, the regulating authority for accounting and auditing profession is ICI. They have created a board called AASB, Auditing and Assurance Standards Board. This board, under the guidance of ICI, they are going to issue various kinds of standards. And talking about different kinds of standards which are issued by AASB, there are specifically 4 categories of standards which are issued by AASB. How many categories of standards? 4 categories of standards. Number 1, SA. Number 1, SR. Number 2, SRE. Number 3, SAE. And number 4, SRS. How many categories of standards are given? 4 categories of standards are given. Number 1, SA. Number 2, SRE. Number 3, SAE. Number 4, SRS. Sir, what is this SA, SRE, SAE, SRS? Let me try to explain it in detailed manner. SA stands for Standards on Audit. So these standards are required to be followed by the auditors, are required to be followed by the chartered accountants whenever they are doing audit engagements of historical financial information. If you are doing an assignment, which is an audit assignment, and if you are conducting audit of historical financial information, which kind of financial information? Historical financial information. Sir, what is historical financial information? The information which has already taken place in the past. Okay, so if you are conducting as a chartered accountant, if you are associated with audit of historical financial information, then you have to comply with the standards on audit. SAS, you have to comply. SRE stands for Standards on Review Engagements. So these standards will become applicable when, as a chartered accountant, you are conducting review of historical financial information. What assignment? Review of historical information. Sir, what is the difference between audit and review? Very important. From this they can ask you a question. Audit and review, what is the difference? So when it comes to audit is an reasonable assurance engagement. Audit is a what kind of engagement? A reasonable assurance engagement. Whereas review is a limited assurance engagement. What kind of assurance we obtain in the review engagements? Limited assurance, which is far lower than reasonable assurance. See, reasonable assurance is a lower level than absolute assurance. In review engagements, we will not even try to obtain the reasonable assurance also. We will try to obtain even lower than that, which we call it as limited assurance. Like for example, quarterly financial statements of the listed companies will be verified by the auditor. But that assignment, we don't call it as audit. That assignment, we call it as limited review. Able to understand, everybody? So that is the difference between audit and review. Audit is a reasonable assurance engagement. Review is a limited assurance engagement. See, in audit, at least we check the supporting documents, but in the review, we don't even check the supporting documents. On an overall basis, we will verify. That's it. So just we will try to check the calculations, arithmetical accuracy. That's all. We don't even check the supporting documents. So review is such a limited engagement, whereas audit is little bit wider when compared with the review engagement. So being a chartered accountant, sometimes you will do audit assignments, sometimes you will do review assignments. When you are doing audit of historical financial information, then standards on audit will become applicable. Whenever you are doing review of historical financial information, then standards on review engagements will become applicable. Then we have one more category of standards called standards on assurance engagements. What does SA stand for? Standards on assurance engagements. See, SAE will become applicable when you are associated with engagement which is other than historical financial information. Sometimes you are required to work on other than historical financial information. When I say other than historical financial information, that could be prospective financial information. That means that could be related to future financial information, or that could be even related to non-financial information. See, being an auditor, you will not always do only financial information. Sometimes you will do work relating to non-financial information also, like prospectus. Sometimes you are required to certify the prospectus, and sometimes you are required to verify future financial information. Like for example, when the customer, when any client goes for loan, the banker will ask you for projections. So in some cases, as a chartered accountant, you are required to certify the future projected financial information. So like this, if you are doing any assignment which is other than historical information, when I say other than historical financial information, that could be future financial information or that could be non-financial information. So if you are doing any assignment relating to other than historical financial information, then what will become applicable? SAE will become applicable. Standards on assurance engagement will become applicable. Then we have one more last category of standards which we call it as SRS. SRS stands for Standards on Related Services. What does SRS stands for? SRS stands for Related Services. Sir, what do you mean by related services? See, when we are a chartered accountant, we will not do only verification work. We will not do only checking. Sometimes we perform agreed upon procedures also. Terminology is what, guys? Sometimes we even perform agreed upon procedures. Sir, what do you mean by agreed upon procedures? Compilation of financial statements. For example, if the client is coming to you and telling, they are not asking you to do the audit, they are asking you just to prepare their financial statements. Will you do it? Yes. If the client is paying a good amount of fees, why will I hesitate? Why will I restrict myself? I will not hesitate. So here you are not doing verification work, you are actually trying to perform some agreed upon procedures. So being a chartered accountant, we will not always try to verify or check. Sometimes we try to perform agreed upon procedures like compilation of financial statements. So whenever you are performing any agreed upon procedures, then which standards will become applicable? SRS will become applicable. So like this, being a chartered accountant, we do different kinds of engagements. Depending on the engagement, whatever we are doing, specific standards will become applicable. Clear, everybody? And all these 4 standards put together, standards on audit, standards on review engagement, standards on assurance engagements, and the standards on related services, all these 4 standards put together, we call them as engagement standards. What do we call them, guys? We call them as engagement standards. So when I say engagement standards, what and all will come under its purview? The standards on audit, standards on review engagement, standards on assurance engagement, standard on related services, all of the standards collectively we give a name called engagement standards. And there is one more category of standard. See, whenever you are doing any of this engagement, that could be audit engagement, that could be review engagement, that could be assurance engagement, that could be related service, there is a requirement to maintain the quality in the engagements. If you are doing audit, audit has to be done in a qualitative manner. If you are doing review, review also has to do it in a qualitative manner. If you are doing assurance engagement, in that also quality is required. So being a chartered accountant, whatever services we are offering, whatever engagements we are doing, in that quality is very, very essential. So in order to maintain that quality of work in whatever assignment you are doing, we have one more specific category of standard which will give the guidance, which are SQC, standards on quality control. What is that? SQC, standards on quality control. And this standards on quality control will become applicable for all this kind of engagements. So for whenever you are doing any of the engagement, be it audit, be it review, be it assurance, be it related services, there is a requirement to maintain the quality in all the assignments. And in order to maintain the quality in all kinds of assignments, we have one more guidance in the form of SQC, standards on quality control. So these are all the different kinds of standards which are issued by AASB under the guidance of ICAI. But at the CA inter level, we don't have any of this. We don't have SREs, we don't have SAEs, we don't have SRS. These are not applicable for CA inter syllabus. This is something which we will learn it as a part of our CA final syllabus. So at the CA inter level, what is the thing which is applicable for us is, one is standards on audit and other one is SQC, and in that SQC also only one standard, SQC 1. Able to understand? So only standards on audit and SQC, standards on quality control, these two are only applicable for CA inter examination. The balance things, SREs, SAEs, SREs, these we will learn as a part of CA final, not as a part of CA inter. Clear, everybody? Very, very important. Not just the content of the standards, even this introductory information is also very important, damn important. It is having a high chance of getting tested in the examination. So you have to go through this, that's all. Okay, right. So, and few more things I want you to specifically go through. Just give me a moment. Few more things I want you to specifically go through before you go for the examination. See, here we have numbering. In the material, you will be able to see the numbering. See, in standards on audit, numbering system is there. 100 to 199 series is reserved for introductory matters. 200 to 299 general principles and responsibilities. 300 series is reserved for certain matters. 500 series is reserved for certain matters. So whatever this content is there, the numbering part is there. This you have to mug up. This you have to remember. There is no concept here. This numbering, whatever is there, that you have to remember. Why? Because from this there is a chance of testing MCQs. From this, there is a chance of testing what? MCQs. So that's why. So whatever this numbering part is there, this numbering part specifically you have to remember. You can't ignore it. Clear? And one more thing, as I've told from the introductory part, the most important thing is differences between standards on audit and standards on review, particularly the difference between audit and review engagements. So this paragraph is very, very important from the examination perspective. And even here we have in the form of a table the difference between reasonable assurance engagement and the limited assurance engagement. This table, whatever is there, this is also going to be important. Concept wise I have explained. It is your responsibility to go through these things whatever I have highlighted. From this I do expect compulsorily there will be a question. Clear everybody? Comfortable, right? So having done with the introduction, now what we will do is, so whatever standards I have told, whatever standards which we are required to have a separate discussion, this we will try to have it now. Whatever discussion regarding separate standards are there, so this 13 standards whatever we have to cover as a part of this chapter, now we will take up each standard at a time and we will try to revise it. Shall we do it, everybody? Clear and comfortable up to now? Introductory information, everybody comfortable, right? So let us have a quick look at each and every standard. So first standard which we'll take up for discussion is SA 501. SA 501 we will try to complete. So first we will try to complete 500 series of standards. Why? Because these are typically very important from the examination perspective. So first we will try to complete all the SA 500 series. So once we are done with the 500 series, then we'll take it up other standards. So first I am going to start my discussion with SA 501. So as I've already told, I'm going to explain the content from charts. I'm telling you guys, trust me, these charts are so comprehensive. So each and every aspect of the study material I have tried to include it here. Okay, right. So SA 501, which is talking about audit evidence, specific considerations for selected items. Sir, what does this standard talk about? See, this standard is going to talk about how to obtain audit evidence. But you will say, sir, for obtaining audit evidence, we have already discussed one standard. There is already a dedicated standard which is talking about audit evidence, which is SA 500. So SA 500 is also a standard talking about audit evidence only. But there is a slight difference. See, SA 500 is a standard talking about audit evidence in general. It talks about the entire audit evidence. Whereas SA 501 is a standard talking about audit evidence, and this standard is talking about only regarding selected items. So this standard has particularly identified 3 items of the financial statements and how to obtain audit evidence regarding that 3 selected items. What specific considerations you have to keep in mind for obtaining audit evidence regarding that 3 selected items, regarding that only SA 501 is going to give the guidance. So SA 500 is a general standard talking about overall audit evidence, whereas SA 501 is a specific standard talking about audit evidence, which is going to guide us how to obtain audit evidence regarding only 3 selected items. Sir, what are that 3 selected items regarding which this standard is trying to give the guidance? So the 3 items which are selected for which the standard is going to give the guidance is, number 1, this standard is going to help us out to obtain sufficient and appropriate audit evidence regarding the existence and condition of inventory. So first item regarding which this standard is going to give the guidance is how we can obtain audit evidence regarding inventory. Number 2, this standard is trying to help us out to obtain audit evidence regarding completeness of litigations and claims. Second item regarding which this standard is going to give us guidance to obtain audit evidence is completeness of litigations and claims. Third one, this standard is going to guide us how to obtain audit evidence regarding segment information. So 3 items regarding which SA 501 is giving guidance. What are they? Obtaining evidence regarding completeness, existence and condition of inventory, completeness of litigations and claims, segment information. Now let us try to understand what guidance does this standard give regarding each and every item. So what the standard is telling, what we can do to obtain audit evidence regarding existence and condition of inventory, what we can do to obtain audit evidence regarding a completeness of litigations and claims, what we can do to obtain audit evidence regarding presentation of the segment information. So first we will talk about existence and condition of inventory. See, this standard is going to talk about 2 things. They are asking us to obtain audit evidence regarding existence also and regarding condition of the inventory also. Sir, what is this existence and condition? This I will try to explain it with the help of one simple example. Please pay attention. Guys, assume that you are conducting audit of some entity. Okay, so in that entity's balance sheet you are able to find inventory worth 100 crore rupees. We all know what is the basis for this valuation. So this 100 crores, how this value has been derived is, assume that there are 10 lakh quantity of stock. There are how many quantity of stock? 10 lakh quantity of stock. So cost is 1000 rupees, whereas NRV is 1100 rupees, whichever is lower. So that will be 1000. So if you calculate in that manner, the value of the inventory has been 100 crore rupees. Now we want to know whether the value of this inventory of 100 crores is correct or not. In order to decide whether this value of inventory of 100 crores is correct or not, that depends on whether the quantity used for valuation is correct or not, the NRV used for valuation is correct or not. Why? Because cost is very simple. Cost we can find it out from the books of accounts. Where the difficulty comes is finding out the evidence regarding NRV. So if this value of 100 crores has to be correct, then the quantity which is used in valuation of the stock, that should be correct, and NRV should be correct. So we need to obtain evidence. In order to know whether this 10 lakh quantity is correct or not, we need to verify the existence of this stock. So whether 10 lakhs quantity of stock is there existing with the company as on the balance sheet date. So that is what the meaning of existence of inventory. Whatever quantity that has been used in the valuation of the inventory, that much quantity of stock is existing with the company as on balance sheet date, that we need to obtain evidence. Number two, condition. See, condition is something which is having an impact on NRV. Condition means what? If I put it in simple terms, the quality of the stock. See, NRV of the stock will be influenced by its condition. For example, if I give you one simple layman example to understand, take an example of vegetables or fruits. See, the vegetables or fruits, the day they are brought to the market, assume they are getting sold at 100 rupees. So on first day they are brought to the market, their NRV is 100 rupees. 1 day passes, 2 day passes. So now the quality of that will get reduced. The condition will get deteriorated. Then the fruits and vegetables will be able to fetch only 80 rupees per kg. 2 more days passes. Then what will happen? The value will further come down. It will be able to fetch only 60. So if you see here, this 180, 60 is nothing but NRV. And if you pay close attention, this NRV is getting influenced by the condition of the stock. NRV is getting influenced by what? Condition of the stock. So if you want to obtain audit evidence whether inventory value which is shown in the balance sheet is correct or not, we need to obtain evidence whether the quantity which is used in the valuation of the stock is in existence. Number two, what is the condition of that inventory? So that we need to obtain evidence. Now, how to obtain that audit evidence, sir? Okay, we understood what is the meaning of existence, what is the meaning of condition. Sir, as an auditor, how can I get to know about the existence and condition of inventory? What I can do? You think practically, ignore what the standard is telling. You think practically, if you want to obtain audit evidence regarding existence and condition of inventory, what you should do? Inventory verification, physical verification you have to do. See, generally what the standard says is every management will try to do inventory counting. The management of every organization, they will do the inventory counting of their stock. So most of the organizations will do it as on the balance sheet date. Some organizations will do it other than the balance sheet date. But at certain point of time, management of the organization will do their inventory verification. So what the standard is asking the auditor to do is, auditor shall attend management inventory counting process. So whenever the management is doing their inventory counting, generally every management of the organization will do the inventory counting. So as an auditor, what is your responsibility is you should go and attend that inventory counting process. Whenever management is doing that counting, they will tell you, sir, on so and so date, we are going to verify our stock. We are going to do our inventory counting. Management will tell you. As an auditor, your responsibility is to go and attend that inventory counting process. Sir, by attending, what I should do? So by attending, what you should do is evaluate the management process. Try to understand what process management is following for doing that inventory counting. Number two, observe the management counting. You sit there and observe the counting process. First, try to understand what process they're following. Then you sit there and observe the management counting. If you are feeling bored, you also go and inspect the inventory. You go and check the quality of the stock on your own. And also what you can do is you can perform the test counts. You can also randomly pick some items and you can do the counting on your own. Able to understand? So first step, in order to obtain audit evidence regarding existence and condition of inventory, management will do inventory counting. As an auditor, you should try to attend that inventory counting process done by the management. And by attending, there are 4 things you have to do: evaluate the management process for counting, observe the inventory counting process, inspect the inventory, and also perform the test counts. See, sometimes what will happen is management will be doing physical verification. Management has invited you, but you were unable to attend that inventory counting process. Management is doing inventory counting, but they even told you, as an auditor, they told you, sir, on so and so date, we are going to conduct the inventory counting. They even informed you. But as an auditor, you were unable to attend that management counting process. Maybe you are busy, maybe you are out of station, maybe you are occupied with some other work, maybe your personal reasons are there. So whatever may be the reason, management has did the inventory verification, but as an auditor, you were unable to attend that inventory counting process done by the management. Then what I should do, sir? Then the standard simply says auditor shall himself do the physical verification if he is unable to attend that management's counting process. See, if the management is counting and if you have attended, your responsibility will be very less. You can sit and just watch. In case if you are unable to attend that inventory counting process done by the management, what as an auditor you should do is you should take your team, go to inventory verification on some alternative date and do the counting on sampling basis on your own. If you attend management inventory counting process, you can sit and enjoy that. If you are unable to attend the management's inventory counting process, you have to take your own team, go and do the inventory verification on some sampling basis on some alternative date. See, sometimes what will happen is management conducted inventory counting. They invited you. You are unable to go. You thought that you will do the verification on your own. But now what it has become is it has become highly impracticable. What it has become highly impracticable for the auditor to go and do the physical verification. You did not attend management's inventory counting process. You thought of doing it on your own on some alternative date, but that has also become highly impracticable. Then what you will do, sir? So if physical verification becomes highly impracticable, that means might be floods are going there, social riots are going there, whatever may be the reason, you thought of doing the physical verification on your own, but that has become highly impracticable. Then what auditor should do? Then auditor should perform alternative audit procedures. What auditor should do? Alternative audit procedures. You are not able to do physical verification and obtain the audit evidence. No, you try to think any alternative procedures you can do in order to obtain evidence regarding existence and condition of inventory. Sir, what could be alternative audit procedure? It could be anything. The standard did not mention anything. The auditor should apply his professional judgment and he has to decide what I can do alternatively to obtain the audit evidence. See, if by performing alternative audit procedures, if you are able to get the evidence, okay. Sir, I am unable to perform alternative audit procedures, or you performed alternative audit procedures and then also you are unable to obtain the audit evidence. Then what you should do, sir? Finally, you have to modify the opinion. Sir, which kind of modification? So either qualified or disclaimer. Why? Because this is a case of non-availability of audit evidence. Clear? Simple. 4 steps, guys. If the management is doing inventory counting, auditor should attend. If not possible, you try to do it on alternative date. If that has become highly impracticable, try to perform alternative audit procedures. If alternative audit procedures are also not giving audit evidence, then you have to modify your opinion. That's it. And what kind of modification? Either qualified or disclaimer. Here one important sentence is there, which is typically example from the examination perspective. I will show you that sentence. Or from true or false statement perspective also, that is going to be damn important. I will show you. Say 501. Where is it? Just give me a moment. That sentence is very important. Why I am telling you, just understand the importance. Why I want you to take you through that particular statement. The complexity is like that. See here. This one. Not this one. Yeah, this sentence. The difficulty of time or cost involved in itself is not a valid basis for physical verification impracticability. See, just now I told in the standard, if the physical verification becomes impracticable, then you need to perform alternative audit procedures. Sir, what is impracticability? Can the auditor say, see, I am incurring a difficulty of time. That means if I have to attend the inventory counting process, I have to travel for 6 hours. Or I will incur more cost. I have to incur travel expenses in order to visit that warehouse. Can that be taken as impracticability? No. When I say impracticability, that impracticability should have been created because of circumstances beyond the control of the auditor. The auditor can't use the difficulty of time or difficulty of cost as a reason for impracticability. You can't use that as a reason for impracticability. So this sentence is very, very important. How they might ask you a true or false statement is, they will say the difficulty of time or cost is in itself a valid basis. No, it is not in itself a valid basis for physical verification impracticability. That means I am facing difficulty of time, I am facing difficulty of cost. That's why it is impracticable. I will perform alternative audit procedures. Standards will not accept. When they say impracticability, that impracticability should have cost because of circumstances beyond the control of auditor. That's it. And one more thing also the standard will talk about. See, sometimes what will happen is you will be the owner of the stock, but that stock will be in the custody of third party. See here, that sentence also I have added. I told you, no, the standard, these charts I have prepared in a very comprehensive way. Sometimes what will happen is you will be the owner of the stock, your client will be the owner of the stock, but that stock will be lying with the third party. So inventory is in the custody of third party. Sir, when will be the inventory in the custody of third party? Simply, for example, if you have sent the goods on consignment, you have sent the goods on job work basis. In these circumstances, you will be the owner of the stock, but that stock will be lying with the third party. Am I required to obtain evidence regarding that stock even lying with the third party? Yes. So even the stock which is in the custody of the third party, regarding that also auditor need to obtain audit evidence. How the auditor will obtain audit evidence? So in case the inventory is lying in the custody of third party, you need to obtain audit evidence by way of getting external confirmation. Number one, try to obtain that external confirmation from the third party. For example, if the stock is there with the consignee, ask the consignee to give a confirmation how much stock he is holding. If the stock is with the job worker, ask him a external confirmation. See, generally external confirmation evidence will be reliable, but in some circumstances, if you find that even external confirmation is also not reliable, might be the third party is a relative of your client. So you got a doubt that even external confirmation is also not reliable. If you have any doubt external confirmation is not reliable, you need to perform additional procedures to obtain evidence regarding that inventory which is in the custody of third party. That additional procedures could be, if possible, you try to attend that third party's premises also, or you can arrange some another auditor. If in that third party's premises, if you know somebody else, some other auditor, you can arrange that another auditor to visit that third party's premises, or even you can verify the documentation happening between your client and that third party. Clear? So these are the steps which auditor is required to follow in order to obtain evidence regarding existence and condition of inventory. So first item we are done with. Now let us come to the second item. What is the second item regarding which we need to obtain audit evidence? Completeness of litigations and claims. That means whatever cases, whatever litigations, whatever claims which your client is going through, whether all that litigations and claims are completely presented in the financial statements. For example, if your client is going through a pending case, if it is certain that your company will lose the case and you have to pay the amount, then it should be reflected in the financial statements as a provision, as a liability. In case if the case is going on against the company and if we don't know the outcome, then we have to disclose it as a contingent liability. So no matter the outcome, the liability is required to be presented either as a part of the provision or as a part of the contingent liability. So as an auditor, I need to obtain audit evidence, whatever litigations and claims which the client is going through, whether they are completely presented without ignoring anything in the financial statements. Sir, regarding this, how can I obtain audit evidence? So we need not break our heads for that. SA 501 is giving guidance. So what does the standard say? How can we obtain audit evidence regarding completeness of litigations and claims? First, what the standard will ask us to do is try to identify, is there any risk of material misstatement in the area of litigations and claims? They are not asking you to directly go and find out whether there is a misstatement in the litigations and claims. They are not asking you to directly go and find out, has the management hidden any pending litigations and claims. First, what the standard is asking you to do is try to identify risk of material misstatement. Try to find out, is there any possibility that a management could have hidden the litigations and claims. Sir, how can I identify that risk of material misstatement regarding litigations and claims? The standard itself is telling do three simple steps to know whether there is any risk of material misstatement in the litigations and claims. So what are that three simple steps? Very simple. Number one, go and inquire with the management and in-house legal counsel. First, go and inquire with the management and internal legal team. If it is there, go and inquire with them. Sir, did you disclose all the litigations and claims or have you hidden anything? First, go and inquire. Number two, read the minutes of those charged with governance. Number two, what you can do, you can go and read that minutes of the meetings of those charged with governance. Number three, review the legal expenses account. Verify do an in-depth analysis of legal expenses account. Try to compare it with the last year. So like that, you do some kinds of analysis. So first, to do these three steps and identify, is there any risk of material misstatement? Is there any chance of misstatement happening in the litigations and claims? What are the three steps? Number one, inquire with the management and in-house legal counsel. Number two, read the minutes of those charged with governance. Number three, review the legal expenses account. Now, by doing these three steps, two outcomes could be possible. What two outcomes could be possible? The auditor might find a risk of material misstatement. The auditor might not find a risk of material misstatement. If the auditor did not find out the risk of material misstatement, the auditor performed the above three steps. If he did not find out any risk of material misstatement, his responsibility will be over. He need not do anything further. His responsibility comes to end by performing these three simple steps. So by performing these three simple steps, if the auditor did not find any risk of material misstatement, then and there his responsibility will come to an end. He need not do anything further. But in case after performing these three steps, if the auditor finds out the risk of material misstatement, then he need to perform some extra procedures. Able to understand? So by performing these three steps, if the auditor finds the risk of material misstatement, then he needs to perform some more procedures. What he needs to do? So if there is a risk of material misstatement, first auditor, what he should do is the auditor shall communicate with entity's external legal counsel. So generally company would have appointed some external lawyer to fight the case now. So if you find any risk of material misstatement as an auditor, you have to communicate with that external lawyer who has been appointed by the company for fighting the case. But generally, external lawyers appointed by the company might not respond to the auditor, or even auditor will not know whom to exactly communicate in that entity's external legal counsel. So how the auditor should communicate with entity's external legal counsel, sir? Through a letter of inquiry. Whatever information you want to get, you put it on a piece of paper. And you should ask the management to draft it. Why? Because as an auditor, I don't know whom to communicate. Whatever information you want, you put it on the paper. You want to ask it through the letter of inquiry, but ask the management to prepare the letter of inquiry. Why we have to ask the management to prepare? Because they will come to know whom to communicate, how to communicate, in which manner if you communicate, you will get the response that will be known by the management. So the auditor shall communicate with entity's external legal counsel through a letter of inquiry, which is prepared by management and sent by auditor. And in that letter of inquiry, we will ask entity's external legal counsel to respond back directly to the auditor only. Able to understand the flow, guys? If you find risk of material misstatement, you have to communicate with entity's external legal counsel. How, sir? Through a letter of inquiry. Who will prepare it, sir? Management. Who will send it, sir? Auditor, sir. And we will ask the entity's external legal counsel to respond back to him, to the auditor directly. See, if everything happens smoothly, then no issue. But when the problem will arise, if the management is refusing, I asked the management to come to draft a letter of inquiry for me. Management told no. Or management permitted me, they drafted a letter of inquiry. I sent it to the external legal counsel, but external legal counsel did not respond. He's not giving a reply. Or he's prohibited from responding because of some laws and regulations. External legal counsel is prohibited from responding. See, if everything happens smoothly, well and good, we can continue the audit. But when the problem arises, I want to communicate with entity's external legal counsel, but management is not allowing me. Or management allowed me, but external legal counsel is not responding back to me, or he is prohibited from responding. In these circumstances, what I should do? In these circumstances, what you should do is you should try to perform alternative audit procedures. So what could be alternative audit procedures? Once again, it is up to the auditor's professional judgment. So if you are unable to communicate with entity's external legal counsel because of these reasons, try to perform alternative audit procedures. Sir, if alternative audit procedures are also not possible, as I have told, modify the opinion. Which kind of modification? Since it is a case of non-availability of audit evidence, you have to give either qualified or disclaimer. Understood? So in addition to all that, even you need to obtain written representation from the management that they have disclosed all the litigations and claims and they have provided complete information to the auditor. Ask one written representation also. And in some circumstances, the auditor might feel that communicating with the entity's external legal counsel through a letter of inquiry alone will not be enough. He might feel that he is required to directly go and meet with entity's external legal counsel. In which circumstances that will happen? Generally, the standard is telling you are required to communicate with the external legal counsel through a letter of inquiry. But sometimes auditor might feel that just communicating through a letter of inquiry alone will not be enough. He might feel that it will be better if he go and directly meet with the entity's external legal counsel. Sir, when that circumstances will generally happen. So when the auditor might feel to directly go and meet with the entity's external legal counsel is if the risk is a significant risk. If you came to know that because of that litigation, the risk is going to be a significant risk. In that case, just communicating with the letter of inquiry alone will not be enough. You might directly go and meet with the entity's external legal counsel. Or when the matter is complex, matter is very difficult to understand, then also you can directly go and meet with the entity's external legal counsel. Or when there is a disagreement between management and external legal counsel, management is trying to say something, external legal counsel, in way of response to the letter of inquiry, they are trying to say something else. So when there is a disagreement between management and the external legal counsel, then also auditor might feel to directly go and meet with the entity's external legal counsel. Here, guys, this part is very, very important. In the previous examination, they have asked a question out of it. The question which they have asked is, I will show you once, just for the sake of convenience, how the questions will be tested in the examination. So I'm showing that for you. Yeah, this question. So if you read this question, SPR Limited has been into the media business since 1990. During the financial year 2021-22, many notices were received by the company for hurting public sentiments and financial claims were filed against the company. As an auditor of a company, you requested the management for arranging the meeting with the company's external legal counsel. Management is of the view that such meetings are necessary only in certain circumstances. Can you list down those circumstances? So auditor is asking, he wants to go and meet with the entity's external legal counsel directly. But the management feels that that meeting is required only in some circumstances. So what are that circumstances where meeting with the entity's external legal counsel will be appropriate? In these three circumstances: when the risk is significant, when the matter is complex, when there is a disagreement between management and entity's external legal counsel. Clear, everybody? right? So this is how you need to obtain audit evidence regarding completeness of litigations and claims. Now one more part is there, which is this standard is talking about. This standard is also trying to help the auditor to obtain audit evidence regarding presentation of segment information. So how the auditor can obtain evidence regarding segment information, whether segment information is correct or not, how the auditor can obtain audit evidence? Very simple, guys. First, as an auditor, you need to understand the methods used by the management. See, in the accounting standards, we have a guidance how to identify primary segments, how to identify secondary segments. So first, as an auditor, we need to understand what methods are used by the management in identifying the segments. And also we need to understand how the sales, transfers and charges are happening between the segments. Comparison with the budgets wise, if segment wise, if budgets are there, try to compare the actual results with the budgets. And also allocation of assets, how the assets are allocated among different segments, that also you try to understand. And also you should ensure that there is a consistency with the prior period, whatever policies they have followed for segment information in the prior year, whether it has been consistently applied in the current year. So as an auditor, you need to understand the methods which are followed by the management in presenting the segment information. Then also you need to evaluate whether whatever methods which are used by the management, whether they comply with the applicable financial reporting framework. Nothing but we have accounting standards which are talking about how to present the segment information. So first we will try to understand what methods are used by the management. Then we will evaluate whatever methods that are used by the management, whether they are as per respective accounting standards. That's it. So when it comes to segment information, there is nothing much to discuss. This is what simply we have to remember regarding segment information. Clear? So with this, we are successfully done with SA 501. Very, very important standard from the examination perspective. Compulsorily, you can expect a question from this standard. Okay, so I can say either in MCQs, true or false statements or descriptive questions, in any way, 4 marks compulsorily will come from the standard. And this is what all the standard is about, talking about 3 things. Clear? So successfully with this, we are done with SA 501. So now we will talk about the next standard, which is SA 505. Now we will try to revise SA 505. So coming to SA 505, SA 505 is a standard which is talking about external confirmation. Sir, what is this external confirmation? Guys, if you go back to the discussion, whatever we had in the chapter audit documentation and audit evidence, I told you that there are only 7 methods which are available for obtaining audit evidence. You take any audit procedure to achieve the outcome of that audit procedure, we have only 7 methods available. And if you could list that 7 methods, the 7 methods are inquiry, inspection, observation, external confirmation, recalculation, reperformance and analytical procedures. So in that list, if you see, one of the technique or one of the method for obtaining audit evidence is external confirmation. So basically, external confirmation is one of the method or technique to obtain audit evidence, and it is one of the most reliable audit evidence. It is, since it is a external evidence. See, when I say external confirmation, it is getting generated outside of the client's organization. So that's why it is one of the most reliable audit evidence. So SA 505 is actually helping us out how we can betterly make use of external confirmation to obtain the best reliable audit evidence. So that is what all the standard is going to talk about. So how we can effectively make use of external confirmation to obtain the most reliable and relevant audit evidence. See, before we talk about the method, the guidance for sending external confirmation, we need to understand a few definitions. Number one, first we need to understand what is an external confirmation. The SA 505 has defined that an external confirmation is a direct written response. It is what? A direct written response obtained by the auditor from a third party or confirming party. See, when I say third party means someone outside of the client's organization. That could be debtor, that could be creditor, that could be banker, that could be supplier. So whatever direct written response. See, one more thing you have to pay specific attention. Only written response is considered as external confirmation. If you call and get a oral response from a third party, that is not considered as external confirmation. As per the standard, the definition is very specific. External confirmation is a direct written response obtained by the auditor from a third party or a confirming party. And that written response could be either in paper form or it could be electronic form. For example, if you want a confirmation, you can send a letter and you can expect the reply in a paper format. Or even external confirmation can be in the form of email also, WhatsApp message also, that is electronic format. So whatever it is, a direct written response obtained by the auditor from a third party or a confirming party, either in paper form or in electronic form, that we are going to call it as external confirmation. So one important takeaway from this definition, oral response will not be considered as external confirmation under standard. Clear? Now this external confirmation will be of two types. One is positive confirmation request and the other one is negative confirmation request. Sir, what is positive confirmation request? It refers to such a confirmation request where we expect a third party to respond, either he agrees or disagrees with the information. For example, if I'm sending a confirmation request in which as an auditor I'm telling, dear debtor, I'm auditor of so and so company. I came to know that you are a debtor for my client, and my client is saying that you are required to pay 1 crore rupees of money for them. Please reply back to me whether you are required to pay 1 crore rupees or not. So from this phrasing of the question, it is indicative that as an auditor, I am expecting a response from a third party. Either he agrees. If he agrees with that 1 crore, then also I expect a response. If he disagree with that 1 crore, then also I expect a response. So positive confirmation request refers to such a confirmation request where as an auditor, I expect a response from the third party. Either he agrees with the information or disagrees with the information. Whereas negative confirmation request refers to such a confirmation request where I expect the third party to respond only if he disagrees. When I'm expecting response in case of negative confirmation request, only if he disagrees with the information which is contained in the request. For example, if I'm an auditor, I'm writing a confirmation request to the debtor. I'm telling, dear sir, I'm an auditor of so and so company. I came to know that my client is, you are required to pay some amount to my client. My client is telling that you are required to pay them 1 crore rupees of money. Please reply back to me when you disagree. Reply back to me only when you disagree. So this is a negative confirmation request. Why? Because I am expecting a response from a third party only when he disagrees. See, sometimes confirmation request will be like this. Observe the terminology, whatever I am saying. So assume that I am an auditor and I am writing a confirmation request. Dear debtor, I am auditor of so and so company. I came to know that you owe some money to the you owe some money to my client. Please tell me what is the amount you are required to pay. See, here in this case, I'm not asking the third party to agree or disagree. If I'm asking the information directly from the third party, where it will fall? It will also fall under positive confirmation request. Why? Because I'm expecting response in all the circumstances, no? So that's why positive confirmation request will cover two scenarios where I expect the third party to respond, either he agrees or disagrees with the information, or if I'm asking the information directly from the third party. Or if I am asking information directly from the third party, that also will come under positive confirmation request. Whereas negative confirmation request refers to such a confirmation request where we expect the response of the third party only when he disagrees. If he is agreeing, then I don't want response. But you tell me, between positive versus negative, which one is more reliable? Positive confirmation request is more reliable than when compared with the negative confirmation request. Actually, negative confirmation request will give you less reliable audit evidence than when compared with the positive confirmation request. Does that mean auditor should never use negative confirmation request? No. Sir, then which one auditor has to use, sir? That is up to his professional judgment. I'm only telling when we do the comparison, negative confirmation request will be less reliable. But that doesn't mean auditor should use only positive confirmation request. No, we don't say that. So auditor can either make use of positive confirmation request or negative confirmation request depending upon his professional judgment. Clear? And one more definition, and two more definitions are there actually, which we need to understand. One definition which we have to understand is exception. What is the meaning of the term exception? Exception means if there is a difference between information which is there in the confirmation request or books of accounts and the response which is provided by the third party, if both are not matching, if there is a difference between information which is there in the confirmation request or books of accounts, generally whatever information is there in the books of accounts, that only I include in the confirmation request. So whatever information which is there in the confirmation request and whatever response I am getting from the third party, if both are different, that scenario I call it as exception. For example, I am writing to my debtor, I'm asking him, sir, my client is telling that you are required to pay them 1 crore rupees of money. But the debtor, the third party has given a response that, sir, I'm not required to pay 1 crore rupee, I'm required to pay 80 lakh rupees only. So there is a difference between information which is there in the confirmation request and response provided by the third party. This difference scenario only we call it as exception. Now I have one more question for you. Does an exception always mean a misstatement? If you find a difference here in the confirmation request, it is 1 crore. Response given by the third party is 80 lakh rupees. Will you automatically conclude that there is a misstatement? No, exception doesn't always mean a misstatement. Why? Because sometimes the differences could come even because of the mistake in the third party's books of accounts. even because of mistake in the third party's books of accounts. So when you come across exception, you should not immediately jump to the conclusion that is a misstatement. Sometimes that could be a mistake in the third party's books of accounts also. So exception doesn't always mean a misstatement. Whether exception results in a misstatement or not, that as an auditor you have to investigate further and find it out. But whatever it is, the meaning of exception is there is a difference between the information which is there in the confirmation request and the response provided by the third party. That differential scenario we call it as exception, and exception doesn't always mean a misstatement. There is one more term which we need to understand here. There is one more definition which we need to understand here, which is non-response. We need to understand one more definition, which is what? Non-response. Let us try to understand that definition as well. So what is this non-response? Let us try to understand it. See, non-response means you are sending either a positive confirmation request or negative confirmation request, but it has been returned undelivered. It has been returned undelivered. Either you sent a positive confirmation request or you have sent a negative confirmation request, but it was unable to be delivered because the recipient is not found and it was returned undelivered back to you. This case we call it as non-response. There is one more case which will come under that non-response. You have sent a positive confirmation request. It was received by third party also, but the third party did not respond to you. This scenario also will come under non-response. So non-response includes two circumstances. You are sending a confirmation request, either positive or negative, and it has been returned undelivered. Or you are sending positive confirmation request, it has reached the third party, but the third party is not responding back to you. This also will come under non-response. Whereas if you send a negative confirmation request, if it is received by third party, but he is not giving response, can this be called as non-response? No, this is not called as non-response. Why? Because if you send a negative confirmation request, if it was received by third party and if it's not responding, it is an implied acceptance of the third party. This we can't call it as non-response. So non-response includes only two circumstances. You have sent a confirmation request, either positive or negative, but it has been returned undelivered. Or specifically you have sent a positive confirmation request, it was received by third party also, but is not giving response. This will come under non-response. Whereas the scenario where you sent a negative confirmation request, it was received by the third party, but if he is not responding, this can't be called as non-response, because there we assume that it has been accepted by the third party. Clear? So 5 definitions we have understood, very important from the examination perspective. So what are the 5 definitions we have understood? First, we basically got to know what is the meaning of external confirmation. Then we understood 2 types of confirmation requests, positive, negative. Then we understood the meaning of the term exception. Then also we have understood the meaning of the term non-response. Now coming to the procedure. See, if you want to get the best possible evidence from external confirmation, you need to maintain control over certain activities. Or if I put it in another way around, if you want to get the best possible evidence from external confirmation, you need to involve 4 steps. See, in the exam, they can ask you a question in 2 ways. What are the steps which are required to be followed to obtain the best evidence from external confirmation? Or even they might ask you a question, what are the areas over which auditor needs to have control for external confirmation procedure? For both, answer is going to remain the same. So the 4 steps which auditor has to follow in order to obtain the best possible evidence from external confirmation is: number 1, you need to determine the information regarding which you want confirmation. Number 2, you have to select the appropriate confirming party. Number 3, you have to design your confirmation request. Number 4, once you have designed the confirmation request, you have to send it and do the follow-up. So what are the 4 steps if you want to get the best possible evidence from external confirmation? Number 1, you have to determine regarding which information you want external confirmation. Number 2, you have to select who is the appropriate confirming party to whom you have to send that confirmation request. Number 3, you have to design your confirmation request. Number 4, you have to send it and do the follow-up. Now let us try to talk about each and every step in a detailed manner. First one, determining the information to be confirmed. So regarding which information you want to get the confirmation, that you have to determine. Generally, we use external confirmation to obtain evidence regarding amounts and balances, like whether debtors balance is correct, creditors balance is correct, bank balances are correct or not, inventory balances are correct or not. So mainly we use external confirmation to obtain evidence regarding amounts and balances. But the use of external confirmation is not just restricted to amounts and balances. We can also use it for other than amounts and balances also. Like for example, if you want to get to know whether terms of the contract are correct or not, that also you can get it evidence by way of external confirmation. For example, if your client is telling the original documents are kept with the banker as a mortgage, you want to know whether really the banker is holding the original documents of the property. That also you can get to know about external confirmation. Your client is saying they have not given any discount. You want to know whether really your client has given a discount or not. That also you can get to know about external confirmation. So external confirmation, we don't deny it. We mainly use it for amounts and balances, but the use of external confirmation is not just restricted to amounts and balances. We can use it for other than amounts and balances also. So whatever it is, the first step is you have to determine regarding which information you want external confirmation. So once you have determined it, the next step is you have to select the appropriate confirming party. You have to send this confirmation request to appropriate confirming party. If you are sending the confirmation request to inappropriate party, the response will not be reliable. And in order to determine who is that appropriate confirming party, as an auditor, we have to take the help of management. Why? Because, for example, if you came to know your client is debtor, you will only come to know what is the name of the debtor's organization. In that debtor's organization, exactly to whom you have to send the confirmation request, you will not know it. Who will know it? Client will know it. So whatever it is, take the help of the client, determine the appropriate confirming party. Why? Because when you send the confirmation request to appropriate confirming party, then only responses will be reliable. If you are sending it to inappropriate party, even though you get the response, that will not be reliable. So that is the second step. So we determine the confirmation request, then we will determine the information, then we will select the appropriate confirming party. The third step is you have to design the confirmation request. So in designing of the confirmation request, various factors you have to consider. Sir, what factors I have to consider? You need to consider risk of material misstatement. See, if the risk is very high, I will go for positive confirmation request. I will try to stay away from negative confirmation request. So even you need to keep in mind the assertion regarding which item you are trying to obtain external confirmation. So depending on the item, for some items positive will be suitable, for some items negative will be suitable. So you have to pay attention to assertion. Presentation, that means either you have to send it in a paper form or you have to send it in an electronic form, that you have to decide. And also method of communication, once again, in what manner you want to communicate, that also you have to determine. Past experience, you have to use even your past experience also. If you have already worked with the client in the previous year, if you send either positive or negative, which will be more reliable, use your past experience as well. And even authorization, management authorization. Sometimes some third parties will say we will respond back to the auditor only when there is an approval from the management. In those circumstances, you have to get the approval of the management, then you have to send the confirmation request. So whatever it is, consider all these factors and finally design your confirmation request, either positive or negative, either paper or electronic form. So consider all these factors and design your confirmation request. See, once you have finally designed your confirmation request, what you will do? Keep it safely in your locker? No. Once you have designed the confirmation request, then you have to send it. And if you don't get the response within time, you have to do the follow-up. You tell me when we will generally do the follow-up. We will do the follow-up only in the case of positive confirmation request. We will not do the follow-up in the case of negative confirmation request. Why? Because in the negative confirmation request, if we don't get response, we will deem that the third party has accepted it. But in the case of positive confirmation request, if I am not getting the response on time, I will even send a follow-up also. Clear? So finally, after designing, you have to send the confirmation request and do the follow-up wherever appropriate, generally in the case of positive confirmation request. So these are the 4 areas over which the auditor needs to have control. He wants to obtain the best possible evidence. So what are the 4 areas? Number 1, determine the information. Number 2, select the appropriate confirming party. Number 3, design it. Number 4, send it and do the follow-up wherever appropriate. Now, few more parts of the standard are there, easy ones. Let us try to cover it. Next paragraph, use of negative confirmation request. See, as I have told, between positive versus negative, which confirmation request is more reliable? Positive. So generally, when compared with positive confirmation request, negative confirmation request will be less reliable. So the standard is telling, don't use only negative confirmation request when the risk is very, very high. Negative confirmation request will give less persuasive evidence. Negative confirmation request will give you less convincing evidence when compared with the positive confirmation request. So that's why you should not use negative confirmation request if the risk of material misstatement is very high. If you find in certain area the risk is very, very high, in that area don't use only negative confirmation request. In that areas, either use positive confirmation request or use some other method. Don't use only negative confirmation request when the risk is very, very high. And the standard did not stop there. The standard is also telling you can use negative confirmation request as a only audit procedure in areas. In which areas you can use negative confirmation request, that areas also standard is listing out. So in which areas you can use negative confirmation as a sole substantive procedure. That means where you can rely only on negative confirmation request. In which kind of areas you can use only negative confirmation request. Common sense, basically, wherever risk is very, very low. In those areas where the controls are very, very effective. In case of small and homogeneous population, small items which doesn't matter, which are very immaterial, they also use negative confirmation request. Where low exception rate is expected, that means you are finding in certain area the chances for differences are very low. In that areas also you can send confirmation, negative confirmation, when the recipient doesn't disregard your request. This means, for example, you know the third party very well, that the third party will go through each and every confirmation request. If he finds something wrong, he will definitely respond. If you know that third party very well, then also you can use a negative confirmation request. So it will be better for you if you use negative confirmation request only in those areas. In other areas, it is always advisable to go with positive confirmation request. Why? Because negative confirmation request will give you less convincing audit evidence. Clear? Then two more things are there. Management's refusal to send a confirmation request. See, as an auditor, you want to send the confirmation request to the third party, but the management is refusing. Management is not allowing you to send the confirmation request to the third party. In those circumstances, what you should do? The standard says if the management is refusing the auditor to communicate with the third party, first inquire the reasons. Ask the management because of what reasons they are asking me not to communicate with the third party. If there is a reasonable justification, if they are able to give me valid reasons, then what I will do? I will try to perform alternative audit procedure. Sir, what could be alternative audit procedure? Once again, as I have told, is up to your professional judgment. So if the management is coming to me and telling me, sir, don't communicate with the third party, don't communicate with the debtor, I should first ask them reason. Sir, why are you asking me not to communicate with the debtor? Now, sometimes management will give valid reasons, like the management is telling, sir, that we are recently had an issue with the debtor. He's very much worried about us. He is very much having a grudge on us. So even if you ask a confirmation request intentionally to mislead you, he will give wrong information only. So management gave reasons. I found it is reasonable. Then what you should do? Then what you should do is try to perform alternative audit procedures. Apply your mind. Think what alternatively you can do to obtain audit evidence. If not possible, sir, if alternative audit procedures are also not possible, then what I should do? First, communicate with those charged with governance and even consider modifying your opinion. Here also generally either qualified or disclaimer. Why? Because it is a non-availability of audit evidence. So the management refuses, there is a reasonable justification, perform alternative audit procedures. If not possible, communicate with those charged with governance and even consider modifying opinion. Sir, what if there is no reasonable justification? Management is not giving me any valid reason. I want to communicate with the third party. Management told no. I am asking them reasons. Sir, why you don't want me to communicate with the third party? The management is giving all the bullshit reasons, or they're not giving me any reasons at all. Then what I should do? Here the standard says you have to reassess the risk of material misstatement. Why? Because now you got to know the true nature of management. Earlier you thought management was honest. Now you got to know about the true nature of the management. Earlier you might have thought risk is very low. Now you have to change your risk of material misstatement. Particularly analyze is there any risk of fraud and make changes to your nature, timing and extent of audit procedures. So if the management did not give you valid reasons, you have to reassess the risk of material misstatement once and make suitable changes to your audit procedures. Here also communicate with those charged with governance, and if you feel necessary, even you consider modifying your opinion. Clear? So this is what SA 505 says regarding external confirmation. Very simple, guys. What we have understood in the standard, what is the meaning of external confirmation? Two types of external confirmation: definition of non-response, definition of exception. Then we have seen in the process of obtaining evidence from external confirmation procedure, what steps you have to follow. 4 steps are there, that also we have seen. Then we have seen in which specific circumstances you can make use of negative confirmation request. What if the management refuses you to send the confirmation request? Clear, everybody? So with this, we are successfully done with SA 505 as well. Hope you guys are able to understand it. So since we are done with revising the standard SA 505, now we will try to discuss the next standard, which is almost similar to SA 505. So we will take up the standard now for discussion, which is SA 580. Which is SA 580, very simple one. It will look mostly like SA 505 itself. So we will revise now SA 580. So what does SA 580 talk about? As you could see the title of SA 580, it is going to talk about something called written representation. It is going to talk about something called written representation. So nothing but in the standard, we are going to revise what is the meaning of written representation, how it can be used as audit evidence, regarding which matters auditor is required to obtain written representation. So all these things we are going to focus in this particular standard. So without any delay further, let us try to revise the concepts of SA 580. So first I will try to begin with what is the meaning of written representation. First we will try to understand what is the meaning of written representation. Guys, if you just go back to the discussion whatever we had just now, we understood SA 505. In that we have understood what is the meaning of external confirmation, right? So what is the meaning of external confirmation? External confirmation is a direct written response obtained by the auditor from a third party. That we call it as what? External confirmation. Now written representation means it is a direct written statement obtained by the auditor only, but not from the outsider, from the management. That we call it as written representation. External confirmation is a written confirmation obtained by the auditor from a third party. Whereas if the auditor is trying to obtain that written confirmation from the people who are inside of the organization, particularly management, so then it becomes an written representation. So that is what the meaning of written representation, nothing but a written statement which is obtained by the auditor from the management of the organization to confirm certain matters or to support the other audit evidences whatever he is having. So nothing but whatever confirmation which auditor is obtaining from the management of the organization to confirm certain matters or to support the evidences whatever he is having, that's written statements obtained by the auditor from the management, we are going to call it as written representation. Like for example, in SA 501, if you remember, I told as an auditor, when you are trying to obtain audit evidence regarding litigations and claims, you need to obtain the written representation. So if you remember that particular discussion, if you go back to SA 501, so in the SA 501, when we are understanding how to obtain audit evidence regarding litigations and claims, one of the audit procedures they have told is auditor should obtain written representation regarding litigations and claims. So that means as an auditor, you will ask the management to give a confirmation that the management has disclosed all the litigations and claims and have provided the complete information to the auditor regarding litigations and claims. So basically, if you pay attention here, what auditor is trying to do, he is trying to get a written confirmation from the management to confirm certain matters or to support the other audit evidences. So that written statements obtained by the auditor, that we call it as written representation. Now, the question is, can the written representation be used as audit evidence? Can the written representation be considered as audit evidence? For example, if I ask the management to give a confirmation regarding certain matter. So management gave me a confirmation. Take litigations and claims only. I asked the management to give a written confirmation that they have disclosed all the litigations and claims. They gave me a written representation. Can I consider it as evidence? Can the written representation be used as audit evidence? The answer is yes. Written representation is a kind of audit evidence, but the problem is written representation cannot be considered as evidence on its own, which simply means that you should not use written representation only as an audit evidence. It is just a supporting audit evidence. Written representation is what? It is just a supporting audit evidence. You can't consider written representation as a evidence on its own. Sir, why the standard has specifically told this? Why? Because if the standard has given a permission, written representation alone can be used as audit evidence, my audit becomes very simple. See, what I will do is, it written representation alone can be used as audit evidence. I will accept appointment of audit of certain entity. I will go to that entity. I will ask the management to give two simple confirmation. Sir, give me a confirmation that you have prepared the financial statements as per applicable financial reporting framework. Give me a written confirmation that you have prepared the financial statements free from material misstatements. I will get the two confirmations, express my opinion, my audit will be over. So do you think that is appropriate? No, that's what even the standard says. You can use written representation only as a supporting evidence. You can't use the written representation as a audit evidence on its own. Clear? So very, very important. So we understood what is the meaning of the written representation, how written representation can be used as audit evidence. Now let us try to understand what are the objectives of the auditor as per SA 580. Or they might also ask you a question regarding which matters auditor is required to obtain written representation. So if they ask you the question, what are the matters regarding which auditor need to obtain written representation? Or if they ask you the question, what are the objectives of the auditor as per SA 580? For both the questions, we are going to write the same answer. So let us try to understand regarding which matters auditor need to obtain written representation. So the auditor must compulsorily obtain in every audit engagement, the auditor must obtain written representation regarding two things, compulsory. What are they? That the management has fulfilled the responsibility for the preparation of financial statements. So whenever you are conducting audit of any entity, you must obtain one written confirmation from the management that they are agreeing to fulfill their responsibility for the preparation of financial statements. Number two, you should also obtain written representation from the management that there is a completeness of information provided to the auditor. So if you are conducting audit of any entity, the first thing which you need to do is you should go to the management and say, sir, please give me a written confirmation that you will fulfill your responsibility for preparation of financial statements, that too as per applicable financial reporting framework. Not just that, you also ask the management to give a written confirmation that they have completely provided the information to the auditor. They did not hide any information from the auditor. So these are two matters. Regarding these two matters, preparation of financial statements, completeness of information provided to the auditor. Regarding these two matters, the auditor first should go and obtain written representation compulsorily in every kind of audit. And not just that, if there is any requirement of any relevant standard, if any standard is asking the auditor to obtain written representation regarding certain matter, there also it is mandatory. Like for example, just now as I have told, SA 501 is asking the auditor to obtain written representation regarding litigations and claims. Since SA 501 is telling it, it is mandatory for the auditor to obtain the written representation. Able to understand what I'm trying to say here? So these are three matters. So practically three matters. Regarding these three matters, the auditor must obtain written representation that the management will fulfill the responsibility. They will provide completely the information to the auditor, and if there is any requirement of the standard in that regarding that matter also, auditor must obtain compulsory. In remaining all the circumstances, it is up to the auditor's choice for which matter he wants written representation, for which matter he doesn't want written representation. In rest of the matters, auditor can decide. And whatever representations which have been provided by the management, you have to respond to that appropriately. In some cases, you will ask the written representation, but the management will not provide it. Then also you have to respond appropriately. Sir, how to respond appropriately? That's what we are going to see in the remaining part of the standard. So these are the objectives regarding three matters. You need to obtain compulsory representation, and if the management has given you required written representation, you have to respond to that appropriately. If the management did not give you the requested written representation, then also you have certain responsibilities to fulfill. What are they? We are going to talk about it. Clear? Next, date and period covered by the written representation. One of the most important thing, guys, particularly important for true or false statements. So what is that thing is, between date of written representation and date of auditor's report, which one should be earlier, which one should be later? Between date of written representation and the date of auditor's report, which date should be earlier? The standard says that the date of written representation should not be later than the date of auditor's report. That means the date of written representation should be on or before the date of auditor's report. The date of written representation can't go beyond the date of auditor's report. Very, very important from the true or false statements perspective. The logic is very simple, guys. Written representation is an audit evidence. So the logic of the audit is, first we try to obtain audit evidence, then we express our opinion. So that's why the date of written representation should always be earlier or on the date of auditor's report. It should never be later than the auditor's report date. Clear? So that is what the date and period covered by the written representations. Next, sir, from whom you are going to request written representation? As I have told, management. So generally we go and request a written representation from the management, and particularly we go and request written representation from that part of the management who are having a knowledge about the preparation of the financial statements. Like we generally go and ask the written representation from CEO, CFO, board of directors, audit committee. So from these people, we expect that these people will have required information regarding the financial statements. So generally from this part of the management, we will ask the written representation. But sometimes what will happen is, when we go to the management, for example, you go to the CFO and say, sir, I want a written representation regarding litigations and claims. CFO is telling that, sir, I am not the appropriate person. Why? Because there is a dedicated legal team inside the organization. That team will look after the legal litigations and claims. Since I don't have information, I will not provide written representation. Can the CFO escape by saying this? No. So what the standard says is, if you want written representation, you will go into the management and ask. If the management is having the information, they will give you. If the management does not have the requested information, they have to. It is a responsibility of the management to go to the concerned person in the organization, get the required information, then provide the confirmation to the auditor. The management simply can't escape saying, sir, whatever representation you are asking for, regarding that we don't have information, we will not provide written representation. Management can't escape saying this. So if the management is not having the required information, what they have to do? They have to go and inquire others within the organization from whom they will get the relevant information, and the management should get that information from that concerned persons in the organization and then provide written representation to the auditor. They can't simply escape saying they don't have the relevant information. So generally with whom the management will go and inquire. So generally, for example, if as an auditor I am asking some written representation regarding provision, but management doesn't know it, there is a dedicated actuary. So then what management should do? Go to the actuary, get the information, provide the written representation to the auditor. Or it could be legal expert. Like for example, I am asking written representation regarding litigations and claims, but management is not having it. Legal team is having it. Go to the legal team, get the information, then provide the written representation to auditor. Or it even could be a staff engineer. So like this, if the management does not have requested information, inquire others, get the relevant information, then provide the written representation to the auditor. So what and all we have covered till now in the standard? We have covered what is the meaning of written representation, how written representation can be used as audit evidence, what are the objectives of the auditor as per SA 580, for what is the date and period covered by the written representation, and from whom you are generally going to request a written representation. Now, next, one more paragraph, important paragraph. When the auditor has to obtain written representation from the management to reconfirm its responsibilities. See, generally at the beginning of the audit, we obtain written representation that the management will fulfill the responsibilities. But in some cases, what will happen is, once again, you have to obtain written representation from the management to reconfirm its responsibilities. In what circumstances? Generally, at the beginning of the audit, we obtain written representation from the audit, written representation from the management that they will fulfill all the responsibility for preparation of financial statements and all. But in some circumstances, what will happen is, once again, even though you have obtained written representation at the beginning, once again, you might be required to ask the management to give the representation once again to reconfirm the responsibilities. Sir, in what circumstances? Very simple. When who signed the terms of engagement have changed. At the beginning, some board of directors have signed the written representation and gave it to me. But later what happened is, board of directors have changed. So now new board of directors are there, new management is there. So it will be better if you get the written representation once again from this new management to reconfirm their responsibilities. Or terms of engagement are prepared in the previous year. You have prepared the terms of engagement in the last year. In the current year, there are some changes in the terms and conditions. Once again, ask the management to reconfirm their responsibilities. Or even it could be management misunderstand its responsibilities. Initially, when they gave the written representation, they misunderstood their responsibilities. Now they realized it. To sort out that misunderstandings, once again ask them to give a written representation to reconfirm their responsibilities. Or even sometimes there could be change in circumstances. In those cases also, we can ask the management to reconfirm their responsibilities using written representation. So 4 circumstances they have told. Number 1, who signed the terms of engagement have changed and the terms of engagement are actually prepared in the previous year, or we have an indication that management misunderstood their responsibilities, or there could be change in the circumstances. Clear, everyone? Now, coming to the next paragraph, what if you get doubt regarding reliability of written representation? See, you asked the management to give the written representation, and in fact, management has given it. But you are getting doubt. Whatever written representation given by the management, whether it is reliable or not, you are having a doubt. Generally, when we get that doubt, management gave you written representation, management gave a written statement, but sometimes you will get that doubt. In what circumstances generally we get that doubt regarding reliability of reliability of written representation? When we came to know that management are not having integrity, that means management are not honest people, management are not genuine people, they are known for committing frauds. In those circumstances, you should generally get a doubt regarding reliability of written representation. Yes or no? So that's what they say. When you generally get the doubt regarding reliability of written representation is when you have concerns about integrity, competence, and ethical values. That means you came to know that management is not honest, management is not capable, management is not having ethical values. In those circumstances, even though they have given the written representations to you, but you will not be in a position to rely on it. Then what you should do? Is, if you are having doubt regarding reliability of written representation, you should compare written representation with other evidences, whatever you have gathered. I told written representation is only a supporting evidence, no? So when you have doubt regarding written representations, reliability, you match the written representation with other evidences and try to find out whether written representations are correct or management is giving wrong written representation. That you have to do. So you have to match written representation with other evidences. If they are matching, well and good. In that cases, you can rely. In some cases, what will happen is when you had a doubt, you compared the written representation with other evidences and you found they are inconsistent. That means management is trying to say something in the written representation, but actually my evidences are telling something else. So in case if the written representations are inconsistent, they are not matching with other evidences, then the auditor should dig deeper and analyze whether written representations are wrong or your evidences are wrong. Sometimes what could happen is you could have done mistake in the audit procedures. That's why your audit evidence could be wrong. So when the written representations are inconsistent with other evidences, you have to take one more step ahead and find out whether written representations are wrong and audit evidences are wrong. If audit evidences are only wrong, then we can obtain the new evidences. But if you have decided that no, written representations are only wrong, by digging deeper, you realize that no, my evidences are correct only, written representations are only not reliable, then the auditor shall even consider modifying the opinion. If you have finally decided that written representations are not reliable, you have to modify the opinion. Generally, in these circumstances, you have to give disclaimer of opinion. The standard SA 580 told, if you decided that written representations are not reliable, directly give a disclaimer of opinion. And in some cases, what will happen is you are asking the written representation, but the management is not providing it. See, in the previous case, you asked for a written representation, management provided it, but they are not reliable. But in some cases, what will happen is you are asking for the written representations, management is not even giving that written representation. Then what you should do? So in case if the management is not giving the written representation, number 1, go and discuss the matter with the management. Why they are not giving the written representation? Go and question them. Re-evaluate the integrity, reassess the integrity of the management. Nothing but you have to reassess the risk of material misstatement. Why? Because you got to know about the true nature of the management now. Same way as we have done in SA 505. So reassess the integrity of the management, and if appropriate, appropriate, even consider modifying the opinion also. So in case if the requested written representations are not provided, this is what you are supposed to do. Clear everybody? Able to understand? Comfortable everybody? So this is what SA 580. So how many standards we have revised till now? 3 standards we have revised on SA 500 series. 501 we are done, 505 we are done, 580 also we are done. Everybody comfortable till here? Able to follow? So now we will try to revise SA 510. So we are done with 3 standards. So one more standard we will try to revise from 500 series. So SA 510 we will try to revise it. So what does SA 510 talk about? So once again, very simple standard, guys, very important also from the examination perspective. So SA 510 is going to talk about initial audit engagements and opening balances. What is the title of SA 510? The title of SA 510 is initial audit engagements and opening balances. Sir, what does this standard? So what does this standard talk about? See, before we try to go into what does this standard talk about, first let us try to revise the meanings of the term. What is the meaning of the term initial audit engagement and what is the meaning of the term opening balances? So first we will try to understand what is the definition of the term initial audit engagement. Very simple, guys. See, if the last year auditor is only appointed as current year auditor, that we call it as recurring audit. This point I have already clarified when we discussed the chapter nature, objective and scope of audit. The last year auditor is appointed as current year auditor, we call it as a recurring audit. Then what is the meaning? What is the meaning of initial audit engagement? Simply, if the last year auditor and the current year auditor both are different firms or different individuals, then we call it as, then for the current year it becomes an initial audit engagement. Simply, if the last year auditor and the current year auditor both are different, we call that assignments as initial audit engagements. Clear? This is a simple meaning. But for this term, initial audit engagement, they have given a definition in the standard. So what definition has been given? So they have defined initial audit engagement as the engagement in which the prior periods were either unaudited. That means last year audit itself did not happen, or the prior period financial statements were audited but by a predecessor auditor. A different audit firm, a different auditor has conducted the audit of the previous year who is different from the current year's auditor, then also we call it as a initial audit engagement. So nothing but if I put it in simple terms, if the last year auditor and the current year auditor are different persons, then we call the current year audit as initial audit engagement. That only they are giving a technical definition in a very bit, they have made a bit complicated. So they define the term initial audit engagement as those audit engagements in which either the prior periods were unaudited, last year audit itself did not happen, or prior period financial statements were audited but by some predecessor auditor, different person has done the audit of the previous year. So that is what the meaning of initial audit engagement. Now one more term which they are using in the title is opening balances. Sir, let us try to understand what is the meaning of the term opening balances. So opening balances, we already know the meaning. What is the meaning of opening balances? Those balances which are there at the beginning of the period. And these opening balances are nothing but which are taken from the last year's closing balances. Opening balances are balances which are existing at the beginning of the period, and these opening balances are actually derived from last year's closing balances. And one important thing we have to remember, when I say opening balances just doesn't mean only the items which are there in the balance sheet. Even the items which are disclosed in the notes to accounts of the last year's financial statements also becomes current year's opening balances. Very, very important. This they might ask you in the true or false statements. When I say opening balances doesn't include only balance sheet items. Even it includes the items which are disclosed by way of notes to accounts. For example, the current year is 23-24. In the last year 22-23 financial statements, in that financial statements notes to account, they have shown some contingent liabilities worth 100 crores. Even this item which is there in the notes to accounts also becomes a opening balance for the current year. So opening balances just doesn't include only balance sheet items, it includes even the items which are included in the notes to accounts. So we understood the meaning of the two terms which they have used in the title, initial audit engagement, opening balances. Now what is the objective of the standard? Why this standard has been given, or what the standard talks about? Very simple, guys. See, take for example, if you have been appointed as auditor of the financial year 2022-23, so you are conducting audit of this financial year. There is no doubt, if you are appointed as auditor of the financial year 2022-23, there is no doubt that whatever transactions which have taken place from 1/4/2022 till 31st of March 2023, the transaction taken place during this year, you will verify. There is no doubt about it. And not just that, you will also verify the balances which are existing as on 31st of March 2023. So if you have been appointed as auditor of a financial year, you will try to verify all the transactions which have taken place during the year, and also you will try to verify the balances which are existing as on the balance sheet date also. But my doubt is, if you are appointed as auditor of this financial year 2022-23, is there any responsibility to verify the opening balances also? Is there any responsibility for you to verify the opening balances also? The answer is yes. Yes, that's what even the standard says. And the standard says that particularly in initial audit engagements, in which kind of engagements? Than when compared with the recurring audits, particularly in the case of initial audit engagements, the auditor should even try to obtain audit evidence regarding opening balances also. Why? Because if the opening balances contain a misstatement, then it is definitely going to impact the current year's closing balances, which is going to have an impact on the current year's financial statements. So that's why the standard is telling, particularly in the case of initial audit engagements, as an auditor, you are required to obtain sufficient and appropriate audit evidence whether opening balances contain a material misstatement that could affect my current period's financial statements also. So you have to obtain the audit evidence. One of the objective is this. There is one more objective. This I will come to that later. First, we will focus on the first objective. So one objective with which the standard is given, if you are conducting initial audit engagements, it is your responsibility to obtain sufficient and appropriate audit evidence whether opening balances contain a misstatement which could affect the current year's financial statements, that you need to obtain audit evidence. As we know, if we want to obtain audit evidence, we need to perform audit procedures. So the standard is telling in the objective that you need to obtain audit evidence whether opening balances contain a misstatement. But how can I obtain that audit evidence? So by performing some audit procedures. So what audit procedure auditor is required to perform regarding the opening balances? Let us try to have a quick look at it. So what audit procedures are required to be performed regarding the opening balances to obtain audit evidence? Number one, first thing they are telling, as an auditor, if the last year financial statements are audited, read the most recent copies of the financial statements. Nothing but immediately preceding financial year financial statements, whatever are there, get that copy of the financial statements and read it. Number two, determine whether prior period closing balances were correctly brought forward. Whatever last year's closing balances are there, whether they are correctly brought forward in the current year as opening balances, that we need to verify. Any adjustments relating to prior period have been shown as prior period items. In the current year, if you find any error which is related to the previous year, that should be shown separately in the statement of P&L as a prior period item. That also you have to verify. And whether opening balances reflect the application of appropriate accounting policies. Nothing but whatever accounting policies which are reflected in the opening balances, that opening balances, what that accounting policies in the opening balances, are they appropriate? Guys, one more thing here. See, when I say opening balances generally reflect two kinds of information. Opening balances reflect the effect of the transactions which have taken place during the previous year, and opening balance also reflect whatever accounting policies which are followed in the previous year. For example, if I came to know that the opening balance of plant and machinery is 1 crore rupees, what is this 1 crore representing? This 1 crore is reflecting the effect of all the transactions taken place in the previous year. It is also reflecting what accounting policies, like what depreciation policy has been followed. So opening balances will even reflect accounting policies. We need to check whatever accounting policies which are reflected in the opening balances, whether they are appropriate or not. Like for example, I came to know that for charging depreciation, the last year client followed SLM method. When SLM method will be appropriate? When the consumption pattern of the machinery is going to be uniform. So like that I have to judge. So whatever accounting policies reflected in the opening balances are there, whether they are appropriate or not. And you should perform specific audit procedures like comparing the opening trial balance with the last year's audited balance sheet. You have to download from the accounting software opening trial balance, take the last year's audited financial statements, try to match both the balances. So like this, if you perform these procedures, you will come to know whether opening balances contain a material misstatement. Clear? Guys, what we have seen till now in this standard, we understood what is the meaning of initial audit engagement. We understood what is the meaning of opening balances. We understood one of the objective of the standard, that is to obtain audit evidence regarding opening balances, whether they contain a misstatement. And in order to obtain that audit evidence, what audit procedure auditor has to perform, that audit procedures also we have seen. So now by performing these audit procedures, you will obtain audit evidence. You will have findings. What findings will be there? See, if you came to know that opening balances are all correctly brought forward, there is no misstatement in the opening balances, is there any impact on the current year's audit? No. That is a favorable scenario. If you performed all these audit procedures and you came to know that opening balances do not have any misstatement, that means it's a good scenario. Nothing impact on your audit procedures or audit opinion. When the problem will happen? So when the problem will happen is, if you performed audit procedures and if you have obtained sufficient and appropriate audit evidence that opening balances are containing a material misstatement. That means by performing the above audit procedures, you came to know that yes, opening balances contain a material misstatement which could affect my current year's financial statements. Then what you should do? You have to give a modified opinion. Sir, what kind of modification? You have to give either a qualified opinion or adverse. Why, sir? Why? Because I'm telling here, auditor is able to obtain sufficient and appropriate audit evidence. Since he is able to obtain sufficient and appropriate audit evidence and concluded that opening balances contain a material misstatement in the current year's financial statements also, you have to modify the opinion. And since you have evidence here, either you have to give qualified or adverse. Or in some circumstances, what could be possible is auditor is not in a position to obtain sufficient and appropriate audit evidence whether opening balances contain a material misstatement, whether opening balances contain a material misstatement or not, that you are unable to obtain audit evidence only. Then what you should do here also, you have to modify the opinion. What kind of modification here? Since it is a case of non-availability of audit evidence, you have to give either qualified or disclaimer. Clear? So this is how your audit opinion will have an impact based on whatever findings you have relating to opening balances. Understood, everybody? Now talking about the second objective. See, till now I discussed only one objective of the standard SA 510. There is one more objective. See, when I say opening balances, just now as I have told, opening balances also reflect accounting policies, whatever has been followed in the previous year. Now when it comes to accounting policies, there is one fundamental accounting assumption. There is one fundamental accounting assumption associated with accounting policies. What is that fundamental accounting assumption? Consistency. So since opening balances are reflecting accounting policies also, as an auditor, you need to even obtain audit evidence. That is, there is one more objective of SA 510. So SA 510 also says that you are required to obtain sufficient and appropriate audit evidence whether accounting policies, whatever reflected in the opening balances are there, whether they have been consistently applied in the current year. Whatever opening balances are, whatever accounting policies are there which are reflected in the opening balances, they should have been consistently applied in the current year. That means without any valid reason they should not be changed. And if at all there is a change because of valid reason, see, in some cases accounting standards will permit you to deviate from the consistency when there is a valid reason. So if at all there is a valid reason for change in the accounting policy, that change should have been appropriately disclosed. So here two things are there regarding accounting policies. Number one, as an auditor, you need to obtain sufficient and appropriate audit evidence. Without any valid reason, there should not be change in accounting policy. That means consistency should be there. Sometimes there will be a valid reason and it will be even permitted by the standards to change the accounting policy. In such a circumstances, we need to see that the change should have been appropriately disclosed. You have to be very careful, guys. Two things I have told. Without any valid reason, you should not change accounting policy. Number two, if there is a valid reason for change in accounting policy, that change should be appropriately presented and disclosed in the financial statements. So like this, regarding these two things, you even need to obtain audit evidence. So that is one more objective. So that's why we have two objectives for SA 510. Number one, whether opening balances contain a misstatement which affect the current year's financial statements. Number two, whether accounting policies are consistently applied. If at all there is a valid reason for change in the accounting policy, whether it has been appropriately and properly presented and disclosed as per the applicable accounting standard. Clear till here? So now when it comes to this accounting policies, so what is our objective? We have got to know. So now how audit report will be impacted because of accounting policies. See, if the auditor concludes, that means after he tries to verify the accounting policies consistency and all, if the auditor concludes, that means if the auditor has obtained audit evidence that either accounting policies are not consistently applied, that means there is no valid reason, without any valid reason the client has changed the accounting policies. That means they have violated the consistency even without any valid reason. Or there is a valid reason for change in the accounting policy, but it is not properly presented or disclosed in the financial statements. If you have verified the accounting policies and you have concluded that you have obtained audit evidence that either without any valid reason consistency has been violated, that means the change in accounting policy has taken place even though there is no valid reason, or there is a valid reason, that's why the management has changed the accounting policy, but they did not properly disclose that change in accounting policy, then what we should do? Then the auditor should modify the opinion. Sir, what kind of modification? Either a qualified opinion or an adverse opinion. Why? Because I am telling the auditor has concluded, the auditor has obtained audit evidence that without any valid reason, either accounting policy has been changed or there is a valid reason for change in accounting policy, but that change is not properly presented or disclosed in the financial statements. In any of these circumstances, you have to give either a qualified opinion or adverse opinion depending on materiality and pervasiveness. If the effect is only material but not pervasive, qualified. If the effect is material and also pervasive, adverse. Clear? So this is how audit report will be impacted because of accounting policies. So if you see here, majority of the standard we have covered. So now we are successfully done with definitions, the complete two objectives, what audit procedures has to perform, what impact auditor's opinion will have with regard to findings in the opening balances, what impact auditor's opinion will have with regard to findings in the accounting policies. There is even one more last point in this standard, once again important from the examination perspective. Sir, what if there is a modification in the predecessor auditor's report? That means, for example, if you are doing audit of the year 23-24 of some entity, last year some other auditor has done the audit. Now, the last year auditor on the last year's financial statements, he has given a modified opinion. Last year auditor on the last year's financial statements, he has given a modified opinion. That modification could be either qualified, adverse, disclaimer. Just because last year's auditor has given a modified opinion, is there a mandatory requirement on the current year's auditor to also give modified opinion? No. So just because last year's auditor has given a modified opinion, there is no requirement or there is no mandatory requirement on the current year's auditor also to give modified opinion. So when the current year auditor also will give modified opinion is because of whatever reason the last year's auditor gave modified opinion. If that reason remains relevant, unrectified and material for the current year, then only the current year auditor also will give modified opinion. Yes or no? If because of whatever reason the last year's auditor gave modified opinion, it is no longer relevant for the current year. If it is no longer material for the current year, if it is no longer relevant for the current year, then there is no requirement on the current year auditor to modify just because of a simple reason that last year auditor contained a modified opinion. Clear? The same thing they try to say here. If the reason for modification in the predecessor's auditor's report, because of whatever reason the last year auditor gave the modified opinion, that remains relevant and also material for the current year financial statements, then only the current year auditor will express modified opinion. Which means if because of whatever reason the last year auditor gave the modified opinion, if it is no longer relevant and material for the current year, then there is no mandatory obligation on the current year auditor to compulsorily issue modify. There is no mandatory obligation. Only when the reason because of which the last year auditor gave a modified opinion, if it remains relevant and material for the current year, then only he will modify. Clear? So this is what simply SA 510 talks about. I hope these standards are helping you out. So till now, how many standards we have done? Four standards we have done: 501, 505, 580, and 510. So 4 standards from the SA 500 series we are actually done with. Clear and comfortable till here? So now we will try to proceed further and understand. So what we will do is we will take a pause from 500 series of standards. Still there are a few more standards under 500 series, like we have say 550, 560, 570. So these standards are still there under 500 series, but we will take a gap from 500 series for a while. Now what we will do is we will try to immediately revise 2 standards, SA 260 and SA 265. What we are going to do, we are going to revise now the two standards, which are SA 260 and 265. Both are actually the newly added standards under new scheme. SA 260 and SA 265 are not there as a part of our old scheme. So 260 and 265 are actually added under new scheme. So high chance of getting tested in the examination. So let us try to quickly revise the content from SA 260 and SA 265. So for that also I have a charts ready, which will help you, which will make you ease in your preparation. So I have prepared the chart for that as well. So let us go to that chart. Just give me a moment. Yeah. So first we will be commencing our discussion with SA 260. Sorry guys. Yeah. So we'll be beginning our discussion. We'll be commencing our discussion with SA 260, which is talking about communication with those charged with garnets. What is the title of SA 260? Communication with those charged with garnets. So from this title, let us try to derive what this standard is actually trying to achieve. What is the objective of the standard? What is the purpose of the standard? See, the purpose is there needs to be effective communication with those charged with garnets. Sir, who need to have effective communication with those charged with garnets? Auditor. So there is a requirement that there should be a proper communication happening between those charged with governance and the auditor if audit has to happen effectively. If you want the audit has to happen in an effective manner, if you don't want to have trouble during the course of the audit, so there should be a proper communication between the auditor and those charged with governance. And this standard is basically talking about the responsibility, the communication responsibilities of the auditor with those charged with governance. So we have to first understand the objective of the standard. So SA 260 is putting some responsibilities on the auditor. They are suggesting certain matters which are required to be communicated mandatorily by the auditor with those charged with governance. If I put it in other way around, SA 260 is going to tell the efforts which auditor is required to put to make the communication effective between management and those charged with governance. See, SA 260 does not talk about the responsibilities of those charged with governance. Standards on auditing will be talking about the auditor's responsibility, not with the management and those charged with governance responsibilities. So SA 260 is going to tell us certain responsibilities, certain matters which the auditor has to communicate with those charged with governance, so that there will be effective communication happening between both the parties. And ultimately, if there is effective communication between the auditor and those charged with the governance, overall audit efficiency and effectiveness will get increased. So now we are going to discuss in the standard what are those matters which auditor is required to communicate with those charged with governance, what things he has to communicate, what should be the manner of communication, what responsibilities will be there in case of listed entities, what method of communication should be followed. So all that things we are going to discuss. So before we talk about communication requirements, first let us try to understand who are actually those charged with governance. Who will fall under this definition of those charged with governance? First let us try to understand it. So the standard has defined the term those charged with governance as the persons or organizations with responsibility for overseeing strategic direction of the organization and obligations relating to accountability. Very, very important definition. So whom do we call as those charged with governance? Those people or those organizations within the entity who are having responsibility for overseeing strategic direction. Those who are responsible for supervising, those who are responsible for looking after the strategic direction. Sir, what is strategic direction? For example, every organization wants to grow. Now, what strategy they have to take for growing? Like, for example, what products the company has to deal with, whether they have to go for manufacturing or they have to go for outsourcing, or they have to, if they are making profits, what should be done to that profit? Should it be distributed among the shareholders or should it be reinvested back in the company? Able to understand, or if they want to expand or they want to cut down, they want to do further investments or they have to dilute their investments. So like this, the overall strategic direction, taking the organization ahead, that crucial decision making responsibility, those people are having that responsibility of taking that crucial decision making, those who are having the responsibility for overseeing the strategic direction. And not just that, those who are having the obligations relating to accountability. Sir, what do you mean by accountability? So if someone goes wrong, if something goes wrong in the organization, who we are blaming? If something goes wrong in the organization, who we are blaming? So those persons who are having that responsibility for accountability, obligations relating to accountability, that people we call them as those charged with governance. Clear and comfortable, everybody? So the definition you have to remember, you have to reproduce the definition as it is. Those persons or organizations with the responsibility for overseeing strategic direction and who are having the obligations with regard to accountability. See, it is very difficult to identify those charged with governance, especially in the organizations like companies. In small organizations, like for example, in the case of sole proprietor or in the case of partnership firm, it is very easier to identify those charged with governance. For example, I will give you one simple example. Take, for example, I'm a sole proprietor. For example, I'm a sole proprietor. As a sole proprietor, I started a restaurant business. I'm the owner of this restaurant business. But since I'm not able to look after day-to-day operations, for example, if I have to run a restaurant, I have to make a decision regarding which dishes have to be cooked, who should be the chef, and what kind of items are required to be served, what quality of ingredients I have to use, all the decisions I have to take. See, I'm the ultimate owner. But since I'm not, I will take all the decision, what products I have to sell, which cuisines I have to offer. So all the decisions will be taken by me. But since I will not be available all the time at the restaurant, I will not be able to execute that decisions. So what I have done is I have appointed a person, I have appointed an employee, gave him the role manager. Now this person will execute the responsibility. He will manage the staff, he will make sure that customer is satisfied. So all that responsibilities will be actually taken care by this manager. Now in this organization, being the owner of this restaurant, I will fall under those charged with governance. And this manager, since he is having the execution responsibility, since he is required to execute, actually he has to make the operations at the ground level, this person will fall under management definition. Now, why I am being the owner, why I am falling under those charged with governance is why? Because I am responsible for overseeing the strategic direction. So whether I have to open a new branch, whether I have to close the existing branch, should I add new products, should I not add new products, that decision is taken by whom? Being the manager myself. So I am looking after the strategic direction. And also I am responsible, I have to face the obligations relating to accountability. For example, if one customer ate the food in my restaurant and he became sick, so who will be ultimately punished? They will not punish this manager. Being the owner, they will come and punish me. So that means I have the responsibility relating to accountability also. I will be held the face. I will be made responsible if something goes wrong. So those people who are responsible for overseeing strategic direction and those people who are required to face the obligations relating to accountability, that person we call them as those charged with governance. Whereas those who are actually executing the operations, that we call them as the management. So generally in the companies, what will happen is it is very difficult to differentiate between those charged with governance and management. Why? Because in the company, if you take who are required to make the decision making, like investment decisions, dividend decisions, who will make that decisions? Board of directors. Board of directors. So generally the board of directors will fall under those charged with governance definition. But actually what will happen in most of the companies is these board of directors only will execute that decisions also. In most of the organizations, for example, if you take Reliance Industries Limited, there will be a team of 10 board of directors. The 10 board of directors will be those charged with governance. Now, each of the director will head one department. For example, one director will be heading the production department. One director will be heading the HR department. One director will be heading the operations department. One director will be CEO. So that means the people, the board of directors are only making the decisions. They are only executing the responsibilities as well. So in most of the companies, it is very difficult to differentiate between those charged with governance and management. Why? Because in the companies, both the roles will be played by board of directors only. So board of directors only will play the role of those charged with governance. They will only play the role of management as well. So in the case of companies, it is very difficult to differentiate. Why? Because in most of the organization, both the roles will be played by board of directors only. But we can easily identify the differentiation between those charged with governance and the management in case of small organizations like sole proprietor, partnership firms, etc. Clear? So, but whatever it is, one thing you have to make it clear, the definition you have to remember. All this you keep it aside, definition is very, very important. The persons or organizations with responsibility for overseeing strategic direction and who are responsible for obligations relating to accountability, those people in the organization, we call them as those charged with governance. Okay, we understood who are those charged with governance. So now what are the objectives of the auditor? So what auditor is supposed to do, or what are the responsibilities on the auditor as per SA 260? What matters auditor is required to communicate with those charged with governance? So what SA 260 is telling? So SA 260 says that as an auditor, you are required to communicate certain matters with those charged with governance, and these are mandatory. There are certain matters the auditor is required to communicate with those charged with governance, and those matters are given in the standard only, and the communication of these matters is mandatory. So what matters auditor is required to communicate with those charged with governance as per SA 260? Number one, he has to communicate with those charged with governance the responsibilities of the auditor. As an auditor, you have to go to those charged with governance and say, what are your responsibilities? Like you should say, sir, I am responsible only for expression of opinion, and I will not give any guarantee. So as an auditor, you are required to go and communicate with those charged with governance your responsibilities, and also you are required to communicate overview of planned scope and timing of the audit. You should not go and communicate the detailed plan. You should communicate just, you have to give an overview of overall plan and scope and timing of the audit. Like for example, sir, I will do the audit within 10 days. I will, we 15 people will come for the audit. Like that, a overview of overall plan and scope and timing of the audit you are supposed to communicate. So first matter which is required to be mandatorily communicated by the auditor with those charged with governance is what? Communication of auditor's responsibilities and also giving a overview of planned scope and timing of the audit. Number two, and whatever other information you feel relevant, if you feel some information is relevant for carrying on the audit, it is also your responsibility to obtain that relevant information from those charged with governance. And also whatever your observations are there arising from the audit, you have to communicate that timely observations with those charged with governance from the audit, whatever your observations are there, even that observations also you are required to communicate with those charged with governance, that too on a timely basis. And as an auditor, you should always move ahead to promote an effective two-way communication. So as an auditor, you have to take that first step to promote a effective communication between the management and those charged with governance. So if they ask you what are the objectives of the auditor as per say 260, these 4 points you are required to write: communication of responsibilities of auditor, and also overall planned scope and timing of the audit, provide obtaining relevant information from the those charged with governance, whatever your observations are there, that you have to on a timely basis communicate with the those charged with governance. And as an auditor, you have to promote a effective two-way communication. Now specifically they talk about each and everything. See, in the objective they are telling, as an auditor you are required to communicate with responsibilities of auditor. What specifically you will try to communicate? That I have explained it here in a detailed manner. And also they are asking you to communicate overview of planned scope and timing. When it comes to planned scope and timing, what exactly you have to communicate? That I have added one more paragraph here. And you are required to communicate other matters. You are required to even communicate significant findings. As I have told, whatever your observations are there arising from the audit, that also you are required to communicate. So what specific findings you will communicate with those charged with governance? So everything I have given in a detailed manner. So nothing but in the objectives they told certain points you are required to communicate. What exactly you are required to communicate regarding that points, that we have elaborated in a detailed manner in this paragraph. So number one, as I have told, as an auditor, you are required to communicate what are your responsibilities. So what specifically you will say there? You will say that the auditor shall communicate that auditor is responsible only for expression of opinion. You have to tell them that, sir, I am responsible only for expression of opinion. And also you should say that just because appointment of auditor, the management and those charged with governance will not be relieved from their responsibilities. So you should even communicate that audit does not relieve management or those charged with governance of their responsibilities. See, the meaning of this term is you have to communicate with those charged with governance, sir, as an auditor, my responsibility is to expression of opinion. Just because you have appointed as an auditor, your responsibilities will not come down, your management responsibilities will not come down. Like for example, sir, you are appointing me as an auditor. Just because you have appointed me as an auditor, you can't expect me to prepare the financial statements. The management is still responsible for preparation of financial statements only. So just because you have appointed me as an auditor, neither your responsibilities nor your management responsibilities will be reduced or relieved. Your responsibilities will remain intact. So this is what specifically you have to communicate when I say you have to communicate the responsibilities of auditor. Number two, you are even required to communicate overview of planned scope and timing. No. So when I say you have to communicate planned scope and timing of the audit, what exactly you will communicate? So they say that discuss with those charged with governance only overview of planned scope and timing of audit, including communication of significant risk. What major risk we have identified? What is your overview of planned scope and timing? Once again, you have to remember, you should not discuss detailed plan and scope with those charged with governance. If you explain the detailed plan, what will happen? Whatever you are going to know, that those charged with governance will come to know, and they will take all the precautionary measures to make sure that you will not be able to find out any misstatement. So that's why you have to just communicate only overview, and whatever significant risk that you have identified, that also you have to communicate. And apart from that, I told whatever your observations are there, that also you are required to communicate. No. So what specific significant findings, what exact findings you will, what kind of findings you will communicate with those charged with governance? Like for example, if you found any significant qualitative aspects, if you have any observations regarding accounting policies, so that you will try to communicate. Number two, inappropriateness of accounting policies. If you came to know that the management is following certain accounting policy which is suitable as per applicable financial reporting framework, but that you are feeling it as inappropriate. Like for example, client is following SLM method of depreciation. That is suitable. That is required as per applicable financial reporting framework. But the consumption pattern is not going to be uniform. So the machinery was, like I gave you example for fair presentation framework. The company is buying a plant and machinery, and the plant and machinery is of such a nature that it will exactly produce at a number of units. For that kind of plant and machinery, production units method will be more appropriate. But what the management is doing, as per the applicable financial reporting framework, they are following either SLM or WTV. So you found that whatever accounting policy your client is following, even though that is accepted as per applicable financial reporting framework, but that is inappropriate. If you have such observations, inappropriateness of accounting policies, that also you go and communicate. Similarly, if you are facing any significant difficulties during the course of audit, if you faced any significant difficulties, if certain areas are troubling for you, those matters also you can go and communicate with those charged with governance. And unless all of those charged with governance are involved in the management, that means if management and those charged with governance both are different parties, Then whatever matters you have discussed with the management, that you discuss once again with the those charged with governance, and whatever written representations that you have requested from the management, communicate with the those charged with governance once again. But however, see, as I have told, in most of the organization, those charged with governance and management, both the roles will be played by same persons. So if those charged with governance and management are same, then you need not communicate these matters once again. Why? Because whatever matters you have communicated with the management, you need not communicate it once again with those charged with governance. Why? Because both are same. See, these are 2 points you are required to be communicated only when those charged with governance and management both are different parties. That is what the inference from this term, unless all of those charged with governance are involved in the management, which means if management and those charged with governance are both are two different persons, then you communicate whatever matters you have communicated with the management with the those charged with governance once again, and whatever written representations you have requested from the management, that you ask it once again from the those charged with governance. If both are same, no need to do this part. Next one. And also you can communicate the circumstances that affect the form and content of the auditor's report. For example, if because of some reason you are modifying your opinion, if some matter you want to include it in the key audit matter paragraph, if some matter you want to include it in the emphasis of matter or other matter paragraph, that also you have to communicate with those charged with governance. These things we have seen in SA 700 series itself when we are discussing audit reporting chapter, and any other significant matter as per your professional judgment. So they might ask you a question, give a few examples of significant findings from the audit which auditor is required to communicate with those charged with governance. Then you are required to write this points. Clear? So what we have done till now, we have understood what is the meaning of those charged with governance, what are the objectives of SA 260, and specifically what matters you have to communicate regarding each of the objective, that also we have seen now. And the standard specifically says, in case if you are conducting audit of listed entities, in case specifically you are conducting audit of listed entities, in addition to the above matters, even you are required to communicate certain matters regarding auditor's independence also. Which means if you are conducting audit of unlisted entity, if you communicate these above matters, that will be enough. If you are conducting audit of unlisted entity, if you communicate these matters, it will be enough. But in case if you are conducting audit of listed entity, the above matters plus independence requirements also you are required to communicate. So what specifically I have to communicate in case of listed entity in addition to the above matters? So the auditor shall communicate with those charged with governance in case of listed entity, whether their engagement team or their firm or their network firm, whether everybody has complied with the ethical requirements or not. Your firm, your engagement team, your networking firms, everybody have complied with the ethical requirements or not, that you have to communicate. And in addition to that, you should also communicate any relationships that might affect the independence. And specifically, when I say relationships that might affect independence, you have to communicate with those charged with governance what kind of audit services you are providing, either yourself, your firm, or networking firm, what audit services you are providing. If you are providing any non-audit services like management consultancy, if any non-audit services are getting provided either by yourself or your networking firms, you have to communicate what non-audit services you are providing. And along with that, you should also communicate with them what fees you are charging for audit assignments and what fees you are charging for non-audit services. These things are specifically required to be communicated in case of listed entities. So once again, I'm telling you guys, in case if you are conducting audit of unlisted entity, only these things. In case if you are conducting audit of listed entity, this plus independence requirements, both you have to communicate. Clear? Next. Sir, what should be the communication process? How you have to communicate? In case if you are conducting audit of a listed entity, compulsorily you have to communicate in the writing. In case if you are conducting audit of a listed entity, the matters which you are required to communicate with those charged with governance, that must be communicated in writing. In case if you are conducting audit of unlisted entity, there you will be given an option to even communicate in oral also. In case if you feel oral communication is inadequate, then you have to give the communication in writing, which indirectly means in case of listed entity, you have to compulsorily do it in writing, no option. But in case of unlisted entity, if you want, you can do it in the oral way also. But in case if you feel oral communication will be inadequate, which will always be, we have to do it in the writing. Clear? But practically what will happen, both in case of listed entities and unlisted entities, always the communication will happen in written format only. Why? Because the proof is required. No, that you have communicated. That proof you will get it only when it is in written format. Clear? And whatever matters that you are communicating with those charged with governance, everything should be included as a part of your audit documentation. Clear and comfortable? So this is what regarding SA 260. So what matters are required to be communicated, what should be the communication process, and that matters which you have communicated should be included in the audit documentation as well. Clear? So with this we are done with SA 260. So since we are done with SA 260, we will try to revise now SA 265 also. See, SA 265 is also talking about communication only. But SA 265 is specifically talking about communication of deficiencies in the internal control. So in the internal controls of the client's organization, see, as a part of test of controls, you will verify client's internal control also. As a part of your verification of internal controls, if you find any deficiency in the internal control, that deficiency, in some cases, it is required to be communicated with those charged with governance. That deficiency is sometimes required to be communicated with management. So that communication of deficiencies in internal control, how you have to communicate, to whom you have to communicate, that is what SA 265 is talking about. See, SA 260 is a very general standard talking about all the matters which are required to be communicated with those charged with governance. But SA 265 is a standard which is also talking about communication with those charged with governance as well as management, but it is not talking about all the matters. SA 265 is a specific standard which is talking about regarding only communication relating to deficiencies in the internal control. Okay, see, first I will tell you overall objective of the standard, ultimate outcome of the standard. I will tell you what standard is trying to say. The standard SA 265 simply says that if you have any significant deficiency, communicate with those charged with governance. Whatever other deficiencies are there, communicate with the management. That's all. This is the ultimate thing which the standard is telling. The standard is ultimately trying to say only one thing. If there is any significant deficiency in the internal control, communicate with those charged with governance. If there is any other deficiency, that you communicate with the management. But in order to understand this ultimate objective, first we need to understand what is a deficiency in internal control, what is a significant deficiency in internal control. So first we need to understand that, no? So first let us try to focus on understanding, first of all, the meaning of this term. What is a deficiency in internal control? Deficiency means, the other name for deficiency is weakness. So what exactly is the meaning of deficiency in internal control? Very simple, guys. There is an internal control which is designed, implemented, maintained in the organization. That means the management or those charged with governance in the organization have designed internal control, have implemented internal control, have operated internal control. But that internal control is unable to prevent, detect or correct a misstatement. That means control is there, but even after the management has designed, implemented the internal control, still it is unable to prevent, detect or correct the misstatement in the financial statements. That means there is a failure of the internal control. Or the control which is required to prevent, detect or correct a misstatement is altogether missing. Control itself is not there. So two circumstances will be covered in the deficiency in internal control. Either control is there, but it is unable to prevent, detect or correct a misstatement, or the control which is required to prevent, correct or detect a misstatement is altogether missing. Control is not there. So failure of control, not having a control, both will come under deficiency in internal control definition. Clear, everybody? Next. So we understood what is a deficiency in internal control. So then what is the meaning of significant deficiency, sir? The meaning of significant deficiency is either a single deficiency or a combination of deficiency which is of sufficient importance to merit the attention of those charged with governance. So either a single deficiency or a combination of deficiency which, as an auditor, you feel that these deficiencies are important enough to take it to the attention of those charged with governance, that we call it as significant deficiencies. See, this who has to decide, sir, whether it is sufficient, whether it is of sufficient importance to communicate with those charged with governance or not? This who has to decide? Auditor himself has to decide. How he will decide? Using his professional judgment, he will decide. Clear, everybody? Able to understand? So first of all, whenever there is a weakness there, that we call it as deficiency. But if I feel that either a single deficiency or a combination of deficiency, it is big enough to take it to those charged with governance attention, that deficiency I call it as what? Significant deficiency. Able to understand? See, here one more thing we have to pay close attention. In order to call a deficiency as a significant deficiency, actual misstatement may not occur. Even the possibility of misstatement, even the possibility of happening of misstatement alone will be enough to classify it as significant deficiency. For example, if you found that in the internal control there is a weakness, but that weakness did not convert into material misstatement, there is a chance that there a misstatement could happen, then also it could be called as a significant deficiency. Actual occurrence of the misstatement is not required to call a deficiency as a significant deficiency. Even if there is a possibility that in the future misstatement will happen, that could be enough in order to classify the misstatement as a significant in order to classify the deficiency as a significant deficiency. So generally in the classroom, I will give you I will give a simple example to make you understand. For example, you are driving a car. You are driving a car. You came to know that the brake is not working properly. The brake is not working properly. Will you go and immediately get it repaired, or you will wait for the actual accident to happen? You will not wait for the actual accident to happen. You will immediately go and get it repaired. No. So here you are not waiting for the actual disaster to happen. There is a possibility of happening a major disaster. Then also you will go and get it repaired. No. The same analogy you applied for significant deficiency. So in order to classify it as a significant deficiency, actual happening of the misstatement is not necessary. If there is a possibility of happening a bigger misstatement, then also we can classify it as a significant deficiency. Understood? See, whatever this car example, whatever these points I'm stressing, no, these are actually having a chance of testing in the examination as a true or false statements. So read the standard ones from the material. After reading this chart and all, after revising this content from this chart, read the content ones from the main study material. So main material of mine. So then you will get to know what I'm talking about. Okay. So clearly we have understood what is the meaning of deficiency in internal control. What is the meaning of significant deficiency in internal control. Now let us talk about, sir, you are telling when a deficiency will be a significant deficiency, that will be decided by the auditor using what? Professional judgment. But in deciding whether a deficiency is a significant deficiency or not, what matters auditor will consider? Important question from the examination perspective. They might ask a question, what are the examples of the matter that the auditor may consider in determining whether a deficiency is a significant deficiency or not? So as an auditor, in deciding whether this deficiency will become a significant deficiency or not, that you have to decide it using your knowledge, experience and training. Based on what matters, what factors you will consider in determining whether a deficiency will be a significant deficiency or not. So the examples of the factors will be, you will consider the likelihood of deficiencies. So what will be the possibility of deficiencies, and also susceptibility of loss or fraud of related asset or liability. Because of this deficiency, what is the possibility that there will be a loss or fraud in that respective asset or liability? That also you will consider. Subjectivity or complexity of estimated amounts. Sometimes the internal controls relating to accounting estimates will be deficient. There will be a weakness in the internal controls relating to accounting estimates, relating to provisions and all. In that case, I will consider what is the complexity of making that estimated amount. That also you will consider. And sometimes you will also consider what amount of the financial statements is subjected to deficiency, whether a bigger amount is subjected to deficiency or a smaller amount is subjected to deficiency. And even you will consider volume of activity which is exposed to deficiency. So how much volume of transactions are taking place through that internal controls. So the auditor will consider all these matters, then he will determine whether a deficiency is a significant deficiency or not. So if they ask you the question, explain the matters which the auditor will consider in determining whether a deficiency is a significant deficiency or not. What you will write? You will write these factors like likelihood of deficiencies, susceptibility of loss or fraud of related asset or liability, subjectivity or complexity of the estimated amounts, financial statement amounts which are exposed to deficiency, and volume of activity which is exposed to deficiency. And also they are also giving in the standard, they are also giving examples of indicators. There are certain events or circumstances which will give you a hint that there could be a significant deficiency. So what are that examples of indicators which will give you a hint that there could be a possibility of significant deficiency? To these circumstances, you have to remain alert. So what are that indicators? When you will get a hint that there could be a significant deficiency? When you came to know that there are ineffective aspects of control environment. That means in the organization, there is no proper culture of, there is no proper ethical culture. There is no honesty. Like, for example, significant transactions in which management is financially interested. You are able to find there are certain transactions in which management is getting financially benefited. Or identification of management fraud. You came to know that management themselves have committed a fraud. Definitely there will be a significant deficiency. No remedial actions for significant deficiencies. That means the management, after coming to know about the weaknesses in their internal control, still they are not taking remedial actions. So like this, if you find any ineffective aspects of control environment, immediately you should get a doubt that here there could be a significant deficiency. Or absence of or ineffective risk assessment process. Management is not studying their organization. They're not identifying in which area there is a risk, in which area there is no risk. Or if they're doing that, risk assessment process is ineffective. So either risk assessment process is not there, or if it is there, it is ineffective. That also will give you a hint that there could be a possibility of significant deficiency. Or ineffective responses to identified significant risk. Or sometimes they will identify the significant risk, but they will not make any appropriate responses. or misstatements are not getting prevented, detected or corrected by internal control. You came to know that even after implementing internal control, still misstatements are happening. Then also you will get it. Then also it is an indication that there is a significant deficiency. That's why still misstatements are happening. And even disclosure of fraud or error as prior period item. The management, in order to cover up their frauds and errors, what they are doing, they are showing it as a prior period item. That is also giving you a hint that there could be a significant deficiency. And management inability to oversee the preparation of financial statements. That means management is unable to look after, unable to supervise the financial statement preparation process. So when you come across these circumstances, you should immediately get a doubt that there could be a possibility of significant deficiency. So these two paragraphs are important from exam perspective. So what are the example of matters that auditor will consider in determining whether a deficiency is a significant deficiency, and what are the examples of indicators which auditor will get an indication that there could be a significant deficiency. Next, now let us talk about the communication. So as I have told, whatever significant deficiencies which auditor has decided based on above factors, that you have to communicate with those charged with governance. And what you have to communicate with management. See, whatever significant deficiencies that you are about to communicate with those charged with governance, that you will try to communicate with the management first. See, significant deficiencies you will communicate with those charged with governance. But before communicating the significant deficiencies with those charged with governance, you may even feel it appropriate to communicate with the management as well, unless you feel it will be inappropriate. So we will communicate with the management significant deficiencies, and what you will communicate with those charged with governance significant deficiencies, and what you will communicate with the management significant deficiencies that auditor communicates or intends to communicate with those charged with governance, unless it is inappropriate. If you feel that it will be inappropriate to communicate with those charged with governance before communicating with those charged, if it will be inappropriate to communicate, sorry guys, I will rephrase. If you feel that it will be inappropriate to communicate significant deficiencies with management before communicating with those charged with governance, if you feel it as inappropriate, you will not do it. If you feel no, it will be appropriate only, then what you can do is, before communicating those significant deficiencies with those charged with governance, first you will go and tell it with the management, unless you feel it inappropriate. And other than significant deficiencies, whatever other deficiencies are there, that you will communicate with the management. So that's what even at the beginning I have told. The ultimate outcome is significant deficiency, communicate with the management. Other deficiency, you communicate with the significant deficiency, you communicate with those charged with governance. Whatever other deficiencies are there, that you simply communicate with the management. Understood? And in the written communication of significant deficiencies, that means whatever significant deficiencies that you are communicating with the management, generally you have to do it in the written format only. That means in the written report, you will communicate the significant deficiencies with those charged with governance. In that written communication, you have to add some information. So whatever significant deficiencies you have found, you will communicate with those charged with governance. No, that communication will happen in a written agreement. No, in that written document, you have to include certain information along with significant deficiencies which you want to communicate. You have to include certain extra information. What extra information I have to include? Let us see. Written communication of significant deficiencies shall include description of deficiencies and their potential effects. So you have to describe in a detailed manner what are that deficiencies and what will be their potential effect, and also sufficient information to enable those charged with governance to understand the context of communication. So it will not be enough just if you communicate the deficiencies, you should also give them other relevant information which will help them to understand the deficiencies in a better way. So ultimately, whatever significant deficiencies that you are communicating with those charged with governance, in that written communication, you have to include a detailed description of deficiencies and their potential effects, and also you should add certain information which will make those charged with governance to actually understand that deficiencies. Clear? And in particular, the auditor should explain that the purpose of audit is to express an opinion. Might be those charged with governance will have a wrong notion that auditor is responsible for even verifying internal controls also. No. So you have to specifically tell in that written communication, sir, as an auditor, my main objective is to express opinion on financial statements, not on internal controls. And audit is not for purpose of expressing an opinion on effectiveness of internal control. Sir, our ultimate objective is to express opinion on financial statements, not on internal controls. And even you have to say that whatever deficiencies we are communicating with you, those are actually those deficiencies which came to our notice. So there could be other deficiencies also which we might not have come to our notice. So that you should say, which means simply you have to tell in the communication, sir, whatever deficiencies that we are communicating, those are deficiencies only which have come to our notice. There could be other deficiencies also which might not have come to our notice, which we are not reporting. You have to make it clear. Why? Because our ultimate objective is to express opinion in that on financial statements. In that process, whatever deficiencies came to our notice, that only we are communicating. We are not done. We are not doing the audit exclusively with the objective of verifying internal controls and reporting their deficiencies. That is not our ultimate objective. During the course of our expression of opinion on the financial statements, whatever deficiencies that have come to our notice, that only we are communicating. We are not doing the audit exclusively with the objective of expression of opinion on internal controls. So all this information mandatorily you have to add it in your audit. All this information you have to mandatorily add it in your that written communication, whatever you are doing regarding significant deficiencies. Understood, everybody? So these two standards are newly added, and as I've told, these are important from the examination perspective. Please refer these times as many times as possible. Okay, right. So with this we are done with 260 and 265 as well. So till now we have covered 5 standards. So I say 6 standards we have covered: 501, 505, 580, 510 we are done, 260 we are done, 265 we are done. Till now these many standards we have revised. So now we will start revising the remaining standards. So I told you at the beginning that we have a total of 13 standards which are required to be covered separately, which will not be covered anywhere else in this chapter, in any other chapter. So out of that we are done with, out of 13 standards which we are yet to revise, so out of that we are done with 6 standards. So balance we are left with 7 more standards. So now I will take up for revision SA 560 we will try to revise. So which standard we will try to revise? SA 560 we will try to revise. So SA 560 is a standard which is talking about subsequent events. So just let me take you there. Yes, here we have. So we will try to understand now SA 560 dealing about subsequent events. So first of all, let us try to understand what is the meaning of this term subsequent events. What exactly does this standard deal about? What are auditors' responsibilities? What audit procedures auditor has to perform? So like the way we have covered the concept in the previous standards, we will try to cover even the concept from SA 560 as well. So what is the meaning of subsequent events? See, in the accounting standards also you might have heard about the subsequent events. In the accounting standards also you might have heard about subsequent events. So what you might have heard about subsequent events as per accounting standards? So they say that those events which are occurring between the date of financial statements and the date of approval of the financial statements, those events we are going to call it as subsequent events. This definition is as per accounting standard. So first we will try to recollect what we know regarding subsequent events as from the perspective of accounts. Then we will try to come to standards on audit. So first I am taking you back to the accounting concepts. So as per the accounting standards, subsequent event means those events which are occurring between the date of financial statements and the date of approval of the financial statements. And from the accounting standards perspective, subsequent events can be divided into 2 categories. Number 1 is adjusting events. Number 2 is non-adjusting events. Sir, what are adjusting events? Those events which conform to the conditions existing as on the balance sheet date. Whereas non-adjusting events are those events which conform to the conditions which are existing after the balance sheet date. And depending on whether an event is adjusting event or non-adjusting events, its accounting treatment also will change. So when it is an adjusting event, it will be adjusted in the financial statements itself. Whereas if it is a non-adjusting event, we will try to just to show it by way of notes, by way of disclosures. So no. So this is what we know regarding subsequent events as per accounting standards. So basically accounting standards talks about what is management's responsibility with regard to subsequent events in the preparation of the financial statements. So that's what accounting standards will talk about. No, accounting standards will talk about what are management's responsibilities in the preparation of the financial statements. But when I say standard on audit, standards on auditing has nothing to do with the management responsibilities. Standards on audit are the documents which are governing what will be the responsibilities of the auditor while conducting the audit of the financial statements. So I hope this point is everybody clear with. So accounting standards, whatever you have seen in the accounting subject, those accounting standards will actually talk about management's responsibilities in the preparation of financial statements. Whereas accounting standards are going to talk about auditors' responsibilities while conducting the audit of the financial statements. So in this standard SA 560, we are going to talk about what is the responsibility of the auditor while conducting the audit if he comes to know about any subsequent event. Clear? So first of all, what is the meaning of the subsequent event as per SA 560? So SA 560 defines the term subsequent event as those events which are occurring between the date of financial statements and the date of auditor's report, and the fact came to auditor after the date of auditor's report. Those events will be called as subsequent events. Confusing? Let me try to give a simple example to make you understand this. So what they're telling, there are events as per accounting standard, as per standard on audit 560, subsequent events or those events which are occurring between the date of financial statements and the date of auditor's report. Take for example 23-24 financial year. So when it comes to 23-24 financial year, the date of financial statements will be 31st of March 2024. Assume that generally what will happen is, first date of balance sheet will be there, then the financial statements will be prepared, then the financial statements will be approved. So once the financial statements are approved, then they will be audited by the auditor, and the date the auditor will mention in the auditor's report, that will be the date of auditor's report. Assume that audit got completed somewhere around 15th of May 2024. So some event has taken place between these dates. That is, from between 1st of April and 15th of May, some event has taken place, but the happening of that event that came to the auditor's knowledge after the date of auditor's report, those events we are going to call it as subsequent events. Very, very important definition, guys. Those events which are happening between the date of financial statements and the date of auditor's report, but the fact came to auditor's knowledge when event has taken place during this time only, but the information regarding that event came to auditor's knowledge after the date of auditor's report. Only those events we are going to call it as subsequent events. So here you have to remember one important thing. See, if some event has taken place here, and if the auditor came to know about this even before the date of auditor's report only, then there is no need of any standard. Then the auditor need not have any guidance. Why? Because if the auditor came to know about any event before the date of auditor's report only, then whatever action he wants to take, that he will take it through his own audit report. When the problem will arise, when you have already signed the audit report, then you came to know about the event, then you start looking for the guidance. Able to understand? So that's why the events which have taken place between the date of financial statements and the date of auditor's report, but the fact came to auditor's knowledge after the date of auditor's report, those events only we call it as subsequent events. If the auditor came to know about it prior to the date of auditor's report, we don't have any guidance, we don't look for any guidance. Why? Because since audit report is not yet given, whatever action he wants to take, the auditor will take the action through his audit report only. Clear, everybody? So that is what the meaning of subsequent events. Clear? Now, let us try to understand further what are the auditor's responsibilities regarding that subsequent events. See, before I talk about auditor's responsibility regarding subsequent events, we need to understand certain dates. Meaning of certain dates we have to understand. Number one, date of financial statements. Date of financial statements means nothing but date of the balance sheet date. The last day of the financial year, we call it as date of financial statements. Next, date of approval of financial statements. The date of approval of financial statement means the date on which those with responsible authority, like board of directors, accept the responsibility for the financial statements. The date on which the concerned people in the organization take the responsibility for the financial statements, that date we call it as date of approval of the financial statements. Nothing but that, if I have to put it in simple terms, the date on which board of directors sign the financial statements, that I call it as date of approval of the financial statements. Then we have date of auditor's report. As I've already told you, the date which the auditor is mentioning in his audit report, that we call it as date of auditor's report. See, one important question I would like to ask here. Between the date of approval of financial statements and the date of auditor's report, which one should be later? So if I put it in other way around, the date of approval of financial statements should never be later than the date of auditor's report. The date of approval of financial statements should never be later than the date of auditor's report. It should be either on or before the date of auditor's report. The date of approval of financial statement should never go beyond the date of auditor's report. Clear? And one more date we have to remember here, date of issue of financial statements. Very important. There is a test your knowledge question in the new study material regarding this particular question. What is the date of issue of the financial statements? The date of issue of financial statement means the date on which the financial statements are made available to third parties. The date on which financial statements are made available to third parties. When I say third party, other than auditor and management, the date on which the financial statements are made available to third parties other than auditor and management, that date we call it as date of issue of financial statements. Now, date of issue of financial statements can be depending on facts and circumstances. For example, the date of issue of financial statements could be the date on which the management has uploaded their audited financial statements in their official website. Or the date of issue of financial statements could be the date on which the mail containing the audited financial statements has been forwarded to each and every shareholder. Or the date on which the date of issue of financial statements could be the date on which the audited financial statements are shared with the stock exchanges. So whichever is earlier out of all these dates, the first time when the financial statements are brought before the public, that we call it as date of issue of financial statements. Very important. This they might ask you as a question, date of issue of financial statements. Why? Because there was a test your knowledge question regarding this particular term. Understood? Everybody till here comfortable with all the different dates? So now let us go into the further part of the standard. Now we will try to understand what are different auditors' objectives, what are responsibilities of the auditor, what audit procedures he has to perform regarding subsequent events. All that we'll try to understand. So we understood the meaning. Now, what is the objective of the standard? As we have seen, every standard will be given with certain objective. Even SA 560 is also giving certain objectives to the auditor. So as an auditor, you need to obtain sufficient and appropriate evidence whether there are any subsequent events that require adjustments have been properly reflected in the financial statements. So as an auditor, you need to obtain sufficient and appropriate audit evidence whatever subsequent events are there which require adjustment in the financial statements, whether they are really reflected in the financial statements or not. Nothing but this particular part, they're specifically talking about adjusting events. If you find any adjusting events, whether they are really reflected, whether they are given effect to in the financial statements or not, that we need to obtain audit evidence. Similarly, in case if you came to know about any facts that became known to the auditor after the date of auditor's report, like I have told, subsequent events. In case if you came to know about subsequent events after the date of auditor's report, then what you are supposed to do? So if you remember whatever I have told here, see, you have already given your audit report. After you have given the audit report, then you came to know about subsequent event. Now what you should do? You have to respond appropriately. Sir, how to respond appropriately? You need not break your head that how to respond appropriately also. They are trying to say it in the same standard here. Let us try to see what they are actually trying to say, how they have to respond. How as an auditor, you are supposed to respond in case if you came to know about subsequent event after the date of auditor's report. So let us see. Let us go into the standard now. So these are the two objectives. Everybody clear with the objectives? So you have to obtain audit evidence whether the events which require adjustment has been properly reflected in the financial statements. Number two, in case if you came to know about any fact after the date of auditor's report, you have to respond to that appropriately. As simple as that. Sir, first of all, I have to find out the subsequent event. No. Before I see whether it has been adjusted in the financial statements, what I have to do in case if I find subsequent event, before we talk about this, first we need to find out whether there is a subsequent event or not. See, if you have to find out whether there is a subsequent event or not, how you can find it out? Only by performing certain audit procedures. So what audit procedure the auditor needs to perform in order to identify subsequent events? Simply they say five points. What are they? So as an auditor, first you try to understand what procedures management is following to identify subsequent events. So if you pay close attention, before you as an auditor, management is having a primary responsibility to find out the subsequent events. Because the management is responsible for preparation of financial statements, and the management, while preparing financial statements, they have to comply with the accounting standards. So before auditor, management will have responsibility to identify the subsequent events. As an auditor, you understand what process your client's management is following to identify the subsequent events. So first you understand it. Then you go and inquire with the management and those charged with governance. Directly go and inquire with the management and those charged with governance. Did they find out any subsequent events? Number three, read the minutes of the meetings of board of directors and shareholders, especially which are conducted after the date of financial statements. After the date of financial statements, whatever meetings of the board of directors have happened, whatever meetings of the shareholders have taken place, go through the minutes of the meeting. From that also you can identify the subsequent event. And if there are any interim financial statements, if there are any quarterly financial statements, before you complete your audit, even read that interim financial statements as well. And one more thing, you have to even obtain written representation. So simply perform these 5 steps and try to identify subsequent events. So what are the 5 steps? Number 1, try to understand what are the management procedures to identify subsequent events. Number 2, go and directly conduct an inquiry with the management and those charged with governance. Number 3, read the minutes of the board of directors meetings and shareholders meetings. Number 4, read the interim financial statements. Number 5, try to obtain written representations from the management. So if you do these 5 steps, you will first of all come to know whether there is a subsequent event or not. Then once you have came to know about subsequent event, now what responsibilities you have to fulfill, that we are going to see it in the subsequent paragraphs. And if you see here, the auditor's responsibilities are divided into 2 categories. So number 1, facts which became known to the auditor before the date the financial statements are issued. Whereas case 2 is facts came to the auditor's knowledge after the date the financial statements are issued. So very important, guys. See, I suggest you to read the standard from the material ones. Why? Because I have summarized the auditor's responsibility here. But you can't write this chart like this in the exam. You have to write the content. If you have to write the content, you have to read the material ones. So here I'm explaining the concept. It is your responsibility to go through the paragraphs and lines which are given in the material. Why? Because in the exam, you have to write the content, not the charts. So here I will summarize. But the content you have to read it from material. So what are these two cases? This also I will try to explain with the help of example. Guys, as I have told, if you take financial year 23-24, I will use some examples. So assume that, why to assume the date of balance sheet, the date of financial statements is 31st of March. Assume that the financial statements are approved by the management on 30th of April 2024. This is the date of approval of the financial statements. Assume that auditor gave the audit report on 31st of May 2024. This is the date of auditor's report. And finally, once the audit report is given, these financial statements will be issued to the third parties, no audited financial statements. So assume that that date is 30th of June 2024. This is the date of issue of the financial statements. Now, they are dividing the auditor's responsibilities into two categories. Number one, you came to know about the subsequent events after this date. Then only we call it as subsequent events. So, case one, you came to know about subsequent events after the date of auditor's report, but before the financial statements are issued. This is case one. That means by the time you came to know about subsequent event, you have already given your audit report, but you are a little bit lucky here. The financial statements have not yet gone to the third parties. Case 2, you came to know about subsequent event after the date of auditor's report, even after the date of issue of the financial statements also. This is a complicated case. Why? Because in this case, by the time you came to know about subsequent event, audited financial statements have even reached the third parties also. Able to understand? So case 1, the auditor came to know about subsequent events after the date of auditor's report, but before the financial statements are issued. Now what you have to do? Case 2, by the time you came to know about subsequent event, financial statements have already been issued. That is case 2. So what are your responsibilities in case 1? What are your responsibilities in case 2? Both we have to discuss. The same thing we have tried to summarize it here in the form of chat. Let us see what they are telling. First, we will talk about case 1. Facts which became known to facts which came to auditor's knowledge before the financial statements are issued. That means by the time you came to know about subsequent event, financial statements are not yet issued. They have not yet reached the third parties. Although you have given your audit report, the financial statements have not yet gone to third parties. Now, in this case, what you should do? So first thing, the moment you came to know about subsequent event, the first step what you have to do is discuss the matter with the management. You have to go to the management, discuss with them, sir, so and so subsequent event I have identified. As a part of that discussion, determine whether financial statements need amendment. When you discuss with the management, as a part of that discussion, you try to analyze, because of this subsequent event, do the financial statements require amendment? Inquire it. If you have decided, yes, financial statements need amendment, then you have to inquire whether management amends the financial statements. 3 simple steps, guys. The moment you came to know about subsequent event before the financial statements are issued, first go and discuss that event with the management. Number 2, as a part of that discussion, determine whether financial statements need amendment. See, if the financial statement doesn't need amendment, well and good, no issue at all. When the problem will arise, financial statements need amendment. If you have decided that financial statements need amendment, you have to go and inquire the management. Are they ready to amend the financial statements, or they are not ready to amend the financial statements? So in some cases, what the management will do is, in most of the cases, management will try to amend the financial statements. In some cases, management does not amend the financial statements. So as an auditor, you are feeling financial statements require amendment. But in one case, in case 1, management might amend. Management will agree, okay sir, we will amend the financial statements. Then what you should do? Sometimes management will say, no sir, we will not amend the financial statements. Financial statements require amendment, but the management is telling we will not amend. Then what you should do? Clear? So let us see. We'll talk about what if the management amends the financial statements. Why? Because it is a favorable scenario. So we have decided financial statements need amendment. I asked the management to amend the financial statements. They did not mess with me. They told, okay sir, we will amend our financial statements. So if the management amends the financial statements, then what you should do? You should perform audit procedures relating to that amendment. So if they have told, okay sir, we have amended the financial statements, will you blindly believe whatever financial statements they have given? No. So what you should do, whether they have done the amendment properly or not, you have to perform the audit procedures, and you have to obtain sufficient and appropriate audit evidence whether they have done the amendment properly or not. And since they have amended the financial statements, do I require to modify my opinion? No. In this case, you are not required to modify your opinion. You can continue with the old audit report, but one small change you have to do. What you have to do is you have to change the date of the auditor's report. You have to add a new date. What you should do? You have to add a date. You have to change your date. Why? Because see, why I'm specifically asking you to change the date here is, as we have seen earlier, between the date of approval of financial statements and the date of auditor's report, which date should be earlier date of approval of the financial statement should be earlier. See, in this case, what has happened is, assume that I have given the audit report on 31st of May already. Then subsequent event was identified. Now management amended the financial statements on 15th June. Now when they have amended the financial statements, it will be approved once again. Assume that these amended financial statements are approved on 15th of June. So my old report, I have given it on 31st of May. But now the newly approved financial statements are containing a date of 15th of June. So can I give the audit report as it is? No. What you should do, you have to give a new audit report, simply changing the date. So change your audit report date also on 15th of June and give that auditor's report. Clear, everybody? Able to understand? The same thing they try to say there, very simple way. So if the management amends the financial statements, you try to perform audit procedures relating to that amendment, try to obtain sufficient and appropriate audit evidence whether they have done the amendment properly or not, and then finally give your audit report, simply changing the date. Why? Because your date can't be older. Change the date and give the audit report. Clear? So this is the favorable scenario. When actually problem will arise, management is not ready to amend the financial statements. So I am when I discuss the matter with the management, I have decided, we both have mutually agreed that financial statements need amendment, but management is telling, no sir, we don't want to amend the financial statements. This is a problematic scenario. No, in this also two cases could be there. Audit report is not yet given to the management. Sir, what is this audit report not yet given to the management? Take for example, you have signed the audit report on 31st of May. You thought you will give the audit report on tomorrow morning. I will come and give the audit report. But before you could hand over that audit report to the management, you came to know about subsequent event. You discussed with the management, you decided financial statements need amendment, but the management is telling, we will not amend the financial statements. But here you are in a favorable scenario. Why? Because even though you have signed the audit report, you have not yet delivered it to the management. The audit report is still with you. So you have decided financial statements need amendment. You asked the management to amend. They told, no, we will not amend. But here you are in a favorable scenario. The audit report is still there with you only. You did not give it. Then what you should do? Very simple. Tear that audit report which is there in your hands, throw it in the dustbin, give a new audit report containing a modified opinion. What you should do? Throw the old audit report. Since you have not yet handed it over to the management, you throw away that audit report, give the new audit report containing a modified opinion. Clear? But when will be a problematic scenario? You came to know about subsequent event. You have decided financial statements need amendment. Management is telling, we will not amend the financial statements. You have signed the audit report and you have given it to the management also. Here, you don't have audit report in your possession. You have already given that audit report to management. Now what you should do? Is first to go and instruct the management not to circulate the audit report. Go to the management and say, sir, whatever audit report I have given to you, don't circulate it. But sometimes management, what they will do is, even after auditor goes and requests the management not to issue that audit report, they will still issue it. Then what auditor should do? Then the standard says, if the management has circulated, even after you requesting not to circulate, if the still management has circulated, as an auditor, you have to take appropriate action to stop the people from relying on the auditor's report. So as an auditor, it is your responsibility to take appropriate action to stop the people from relying on auditor's report, like giving a newspaper advertisement, giving a news announcement. So whatever it is, take appropriate action to stop the people from relying on the auditor's report. And now finally, what you can do is give a new audit report containing the modified opinion, give it to the management, ask them to circulate it. Clear? Able to understand? So this is what auditors should do in case if the facts came to auditor's knowledge before the financial statements are issued. Comfortable? Now, sir, what if auditor came to know about subsequent events, but by the time he came to know about the subsequent event, financial statements have already issued, financial statements have already gone to the third parties. In that case, what auditor should do? Here also same steps. First, discuss the matter with the management. As a part of the discussion, determine whether financial statements need amendment. Then you have to inquire whether management agrees to amend the financial statements or not. The same three steps we have to do. But here, one more additional step you have to do. If you have decided financial statements need amendment, see, by the time you came to know about subsequent event, the financial statements and audit report is already there with third parties, no? Is already there with the common public, no? So first thing what you should do is, you should ask the management to take appropriate action to stop the people on relying the auditor's report. Why? Because by the time you came to know about subsequent event, financial statements have already reached the third party. So go and request the management, sir, financial statements need amendment, but we have already given it to the third parties. So you please take some appropriate action to stop the people from believing on our auditor's report. So go and ask the management to take appropriate action. Sir, what if management is not taking appropriate action? We went to the management and told, sir, we have to amend the financial statements, but the third parties have already received it. Ask them not to rely. But management is telling, no, we will not take any appropriate action. The standard says if the management does not take any appropriate action, as an auditor, you have to take the appropriate action to stop the people from relying on auditor's report. If the management takes the action, well and good. If the management refuses to take any action, as an auditor, you yourself have to take an appropriate action. So whatever it is, either management or the auditor, first someone has to take an action to stop the people from relying on auditor's report. Then what we'll do, then the same thing, we have to see whether management agrees to amend the financial statements or management does not agree to amend the financial statements. If the management agreed to amend the financial statements, well and good, we'll perform the audit procedures relating to that amendment and we'll try to obtain sufficient and appropriate audit evidence whether they have done the amendment properly or not. And we will give a new audit report which doesn't contain any modification. We'll give unmodified opinion only. Why? Because management did the amendment. But the standard says in the new audit report, whatever you are giving, either you use emphasis of matter paragraph or other matter paragraph. And in that emphasis or other matter paragraph, what I have to say? What you have to say is, see, you have already given an audit report and financial statements. They have gone to shareholder. Now you are giving new financial statements and new audit report. Now the user might get confused. What is the difference between old financial statements and new financial statements? So as an auditor, you in your emphasis or other matter paragraph, highlight what is the difference between old financial statements and the new financial statements, either in the emphasis of matter paragraph or other matter paragraph. Clear? So this is what as an auditor you are supposed to do if the management agrees to amend the financial statements. When the problem will arise, when the management doesn't agree to amend the financial statements. I am telling management to amend, but they are telling no, we will not amend the financial statements. Now what we will do? As an auditor, we will give a new audit report which contains a modified opinion, either a qualified or adverse. We will give a modified opinion depending on materiality and pervasiveness, and we will explain what are the reasons for giving this modification in the basis for modified opinion paragraph. Here we don't need any emphasis or other matter paragraph. Why? Because anyhow we are explaining the reasons in the basis for modified opinion paragraph. Clear, everybody? So this is what the auditor's responsibilities will be in case if he comes to know about subsequent event after the financial statements are issued. Clear? This is what overall SA 560 is about. I request you, in this chart I have only summarized the concept. I request each and everyone to go through the content, but in line with this explanation, if you read the content from the material, you will be able to easily understand it. Comfortable, everybody? So this is what regarding SA 560. Everybody able to understand till here? So now we will take up, since we are done with SA 560, the next standard which we will take up for revision will be SA 570. We will try to understand, very important standard, very important from the examination perspective. So without any delay further, let us try to understand what does this SA 570 talk about. So as you could see, the title of the standard SA 570 is going to talk about the auditor's responsibility relating to going concern assumption. So it is talking about, see, this point I have already clarified. Standards on audit actually talks about auditors' responsibilities. It doesn't talk about accounting treatment. It doesn't talk about management responsibility. So when I say SA 570 is talking about going concern, this standard is actually trying to specify what are the auditor's responsibilities in relation to going concern assumption in the process of conducting the audit of the financial statements. See, before we talk about auditors' responsibilities regarding going concern, let us first try to focus on what is the importance of the going concern assumption in the financial statements. Do you think going concern plays any important role in the preparation of the financial statements? 100% yes. Why? Because if you remember, if you go back to the basics of the accounting, there are three fundamental accounting assumptions over which the financial statements will be prepared. What are the three basic fundamental accounting assumptions? Going concern, accrual, consistency. So going concern is one of the fundamental accounting assumption in the process of preparation and presentation of the financial statements. Sir, what kind of impact the going concern will have on the financial statements? What kind of impact, or how the going concern assumption will affect the financial statements? See, if you take the balance sheet of any entity, if you see, there will be fixed assets. See, in the fixed assets, assume that the fixed assets are shown at a value of 100 crore rupees. And you take another item of the balance sheet, there is inventory. Inventory has been shown at a value of 50 crore rupees. Now I'm going to ask you a few questions. You please try to respond. See, when I show the fixed assets at 100 crore rupees, can you give me a guarantee if I sell all the fixed assets as on the balance sheet date, will I be able to fetch the value which has been stated in the balance sheet? No. So when it comes to fixed assets, we can never ever give the guarantee that the fixed assets will fetch the value as given in the balance sheet. We can't give that guarantee. Why? Because fixed assets are valued using historical cost approach. Fixed assets are valued using historical cost approach. Whereas if I ask the same question for inventory, will you be able to realize the amount stated in the balance sheet if you sell the inventory as on the balance sheet date? The answer will be yes. Why? Because here we follow realizable value. So for inventory, we are following realizable value. For fixed assets, we follow historical cost. Why, sir? For two different assets of the same entity, different valuation approaches. The logic is very simple. We hold fixed assets with the intention of selling it in the ordinary course of business. We hold the inventory with the intention of selling it in the ordinary course of business. So that's why we value the inventory at realizable value. But we hold fixed assets not to sell it in the ordinary course of business. We hold the fixed assets for the purpose of using it for further continuation of the business. That's why we follow historical cost approach. Which means when I'm telling we are holding the fixed assets not with the intention of selling it in the ordinary course of business, that means we have a reasonable estimate to continue in the future. That means the point which I'm driving here is very, very important. We can value our fixed assets or any other assets using historical cost approach only till the point of time going concern assumption is appropriate. That means when the management is reliable that entity will continue for the coming 1 year, when there is that certainty, then only entities will follow historical cost approach for fixed assets. However, if the going concern assumption becomes inappropriate, so what do you mean by going concern assumption becoming inappropriate? That means entity will not continue for the coming 1 year. So if the going concern assumption is inappropriate, in that circumstances, we hold even fixed assets for the intention of selling it in the ordinary course of business. In that case, we can't value even the fixed assets on historical cost basis. We have to value fixed assets even on realizable value basis or liquidation basis also, they say. What do they say? Liquidation basis. That means when we hold any asset, any liability with the intention of disposing it in the ordinary course of business, we have to determine as on the balance sheet date how much value they will fetch, and that realizable value or liquidation value, we will value all our fixed assets. When the going concern becomes inappropriate, not just fixed assets, guys. If the going concern assumption becomes inappropriate, all the assets, all the liabilities, everything will be determined. Well, everything will be valued as if we are holding it in the ordinary course of business. So we can continue to follow historical cost of approach for fixed assets only till the point of time going concern assumption is appropriate. The moment going concern assumption becomes inappropriate, all the assets, all the liabilities, we will determine its realizable value. All the assets and liabilities, we will value it at realizable value, and the differential, if any, we will take it to the statement of the P&L. So that much impact going concern assumption is going to have on the preparation of the financial statements. So if you see here, we have given the importance of the going concern assumption. So what is the importance of the going concern assumption? Meaning of going concern and its significance, very, very important from the examination perspective, guys. Please go through this paragraph once. So nothing but whatever I have explained you till now, the importance of the going concern assumption in the preparation of financial statements. The same thing in case if they ask you in the examination, you have to write it, right? So in order to get that clarity in writing, so please refer to this paragraph, whatever has been given in the material, meaning of the going concern assumption and also its significance. Nothing but whatever I have explained you till now, the same thing has been given in the paragraphical format here. Okay, so we have understood what is the importance of the going concern assumption in the preparation of the financial statements. Now let us talk about auditor's responsibilities. See, till now whatever I have explained, that is not from the standard on audit, that is from the accounting standards perspective. So now we will try to understand, okay, since we understood the importance of the going concern assumption in the preparation of the financial statements, now let us talk about what will be the auditor's responsibilities in case if you are conducting audit of the client X Limited. This client X Limited has prepared the financial statements. Now as an auditor, while conducting the audit of these financial statements, what are your responsibilities relating to going concern assumption? Clear? So let us try to understand the concept of the standard now. Now we are going into the standards on audit. Till now, whatever we have discussed, that is actually from the accounting concepts. So first of all, let me ask you a few questions. Who is primarily responsible for making assessment regarding going concern? Who is having the primary responsibility to make an assessment regarding going concern? Management or the auditor? The answer is always management. Management is responsible for preparation of financial statements. The management is responsible for making assessment regarding entity's ability to continue as a going concern. Whether entity will continue for the next 1 year or not, that responsibility has to be there always on the management. The management is responsible for making that assessment regarding going concern. Then what auditor will do? Auditor will try to obtain sufficient and appropriate audit evidence whether the assessment made by the management regarding going concern is valid or not. That means, for example, management will study the organization and they will decide whether going concern assumption is valid or not. If the management is telling going concern assumption is valid, as an auditor, I will try to obtain audit evidence whether really the going concern is valid or not. If the management, after making their assessment, they are telling that no, going concern assumption is invalid, I will try to obtain audit evidence, whatever management is telling, whether it is correct or not. Obtaining audit evidence is my responsibility, whereas the primary responsibility for making assessment regarding entity's ability to continue as a going concern will always rest on management. So first thing we have to be clear about it. So responsibility for making assessment regarding going concern. Who is responsible for making assessment regarding going concern? As you could see here, the primary responsibility is with the management. So management is primarily responsible for making an assessment regarding going concern. Okay, sir, management will make an assessment regarding going concern, but how they will decide? On what factors they will consider, what different factors they will consider to determine whether entity will continue for the next 1 year or not? How they will say? They will consider various factors. No, they will not simply take a coin toss and say heads, if heads comes going concern is valid, if tails comes going concern is invalid. It will not happen in that way. If the management is making an assessment regarding going concern, they will consider a numerous factors. So what factors will be considered for making assessment regarding going concern? Number one, size and complexity of the entity. So you have to pay attention to what is the size of the organization, what complex operations they are doing. Nature and condition of business. The management also should consider what is the nature of their business, what is their current condition of the business. Are they generating money? Are they not generating money? Are they able to pay their liabilities? Are they not able to pay their liabilities? So they will even consider nature and condition of the business, and even uncertainty of events and conditions. Like for example, if the client is going through some case, in case if the company loses that case, the penalty will be so huge that they will go bankrupt. So like that, if there are any uncertain events and conditions, the management will even consider the effect of that uncertain events and conditions also. And even they will consider effect of external factors like changes in the laws and regulations, etc., etc. So all these factors the management is going to consider. Then they will make an assessment regarding going concern, whether entity will continue for the coming 1 year or will not continue for the coming 1 year. That analysis the management will do after considering all these factors. Okay, sir, we have seen what is management's responsibility, but now what is auditor's responsibility? To obtain, see here, to obtain sufficient and appropriate audit evidence regarding appropriateness of management's use of going concern assumption. That means on considering these factors, whatever assessment management has made regarding going concern, whether that assessment of the management is valid or not, that auditor is trying to obtain sufficient and appropriate audit evidence. And also on the basis of that evidence, you need to even determine whether there is any material uncertainty relating to going concern. So in the process of that performing audit procedures, you have to determine whether there is any material uncertainty relating to going concern, and you have to report it in accordance with SS. These three are objectives. So don't worry about this. What is this material uncertainty? Next point will come to that only. But for now, they might ask you a question, what are auditors' responsibilities relating to going concern? Or they even might ask you a question, what are the objectives of the auditor as per say 570? These 3 points you are required to write. I will explain whatever points they have told, that I will explain, but 3 points you have to remember. Number one, the auditor is responsible for obtaining sufficient and appropriate audit evidence regarding appropriateness of management's use of going concern assumption. Number two, whether material uncertainty relating to going concern exists. Number three, you have to report in accordance with the essay. So how to report? That's what we will try to discuss now. Okay, so first we will come to the reporting part. I'm going to explain it in a simple way, how the going concern will have a impact on the auditor's opinion. See, once the auditor has performed audit procedures, in the objective they are telling, as an auditor, we are required to obtain sufficient and appropriate audit evidence. Sir, how we can obtain sufficient and appropriate audit evidence? By performing audit procedures. What audit procedures we will perform? That we will talk about it later. What audit procedure auditor has to perform, that I will talk about it later. We will come to that later. So whatever it is, auditor will perform audit procedures. After performing audit procedures, auditor will have certain observations regarding going concern. So there could be 3 kinds of observations. After the auditor has performed audit procedures, there could be 3 kinds of observations. Auditor has concluded that going concern assumption is appropriate. Going concern assumption is appropriate. Or auditor might find that going concern assumption is inappropriate. Going concern assumption is inappropriate. Or auditor also might think that going concern assumption, or sorry, the third scenario which could be possible is material uncertainty relating to going concern. There is a material uncertainty relating to going concern. Clear, everybody? So once auditor has performed all the audit procedures, which we are about to see it in the standard, there could be three kinds of observations. Number one, he might conclude that going concern assumption is appropriate. Yes, entity will continue for the coming 1 year. Or in some cases, he might find that going concern assumption is inappropriate. That is, entity will not continue for the coming 1 year. There is a sure evidence is that entity will get closed down in the coming 1 year. There is another scenario, material uncertainty relating to going concern. This I will come to later. First, we will discuss the first two cases. As an auditor, you performed audit procedures and you came to know that going concern assumption is appropriate. Management has prepared the financial statements on going concern basis only. Now, will there be any requirement to modify your opinion? The answer is very simple. Here, nothing you are supposed to do. Simply give an unmodified opinion. Why? Because going concern assumption is valid only. Entity will continue for the coming 1 year. There is no issue at all. So, going concern assumption is valid. So, no impact on the opinion. Unmodified opinion only we will give. Now, let us come to the second case. As an auditor, you came to know that entity will not continue for the coming 1 year. Entity will definitely not continue for the coming 1 year. Now, what you will do? So, directly will you go modified? No. The standard says here you need to check. In case if the going concern assumption is inappropriate, you need to check two things. You need to check one particular thing. Whether proper disclosure, or adequate disclosure also you can say, whether adequate disclosure is given in financial statements. By whom? Management. Or no adequate disclosure, no adequate or proper, whatever you want you can use, no adequate disclosure given in financial statements. So once you have decided going concern assumption is inappropriate, now the next thing what you need to check is whether the management has given a proper disclosure or management did not give a proper disclosure in the financial statements. Sir, what do you mean by giving a proper disclosure in the financial statements? What do you mean by giving a proper disclosure? Giving a proper disclosure means management has also agreed that yes, going concern assumption will be invalid. They have valued all their assets and liabilities on realizable value basis. The differential has been taken to the statement of P&L. In the notes to accounts also, they have clearly told that we will not continue for the coming 1 year. That is what the meaning of giving proper disclosure. So what is the meaning of management giving proper disclosure? They have valued all the assets, all the liabilities at their realizable value and have taken the differential component to the statement of P&L, and also they have given a proper explanation in the notes to accounts that they will not continue for the coming 1 year. In this case, you tell me, did they do any mistake? Have they done any mistake? No, in this case they have not done any mistake. So in that case, what auditor will do? Unmodified opinion only he will give. The auditor will do unmodified opinion only he will give. Why? Because the management gave a proper disclosure. But here the standard says, since the management has given proper disclosure, but you want to highlight it somewhere in your auditor's report. Management has given a proper disclosure, but you want to highlight it in the auditor's report. Then what you can do is you can use an emphasis of matter paragraph in the auditor's report to highlight. Nothing but we will tell the reader of the auditor's report, boss, I'm giving unmodified opinion, but the going concern assumption is invalid. Regarding this, the management has already given a disclosure in the financial statements at so and so note number. Please go and refer. So you can highlight that information in the emphasis of matter paragraph. So when the going concern assumption is inappropriate and when proper disclosure is given in the financial statements, auditor will give unmodified opinion only, but that information he can highlight it in the emphasis of matter. Sir, what if no adequate disclosure has been given? That means going concern assumption is inappropriate, but management is still continuing to value all their fixed assets at historical cost. They did not give a proper explanation that entity will not continue for the coming 1 year. So going concern assumption is inappropriate, but no adequate disclosure has been given in the financial statements. In those cases, what I have to do? The standard says give a modified opinion, and the standard has asked you to go to an extreme level. So you have to go and give directly adverse opinion. What opinion you should give? You have to directly go and give adverse opinion. Why? Because the effect of going concern is material and pervasive. It will not be just material. It is going to be material and pervasive. So in case if the going concern assumption is inappropriate and if there is no adequate disclosure given, directly give the adverse opinion and reasons you explain in the basis for adverse opinion paragraph. In the basis for adverse opinion paragraph, you have to give your reasons. Clear? Comfortable, everybody? So this will be the responsibilities of the auditor in case if the going concern assumption is inappropriate. Let us come to the third part, material uncertainty relating to going concern. This I will write it here. material uncertainty relating to going concern. Sir, what is this typical scenario? See, in this scenario, we have understood the first two. Going concern is appropriate means entity will continue for the coming 1 year. Going concern is inappropriate means entity will not continue for the coming 1 year. Material uncertainty relating to going concern means whether entity will continue for the coming 1 year or will not continue for the coming 1 year. It depends on some circumstances. There is some uncertainty. We don't know whether entity will continue in the future or will not continue in the future. That depends on some circumstances whose outcome is uncertain. We don't know what will happen. I will tell you one typical scenario, one simple case I will tell you. For example, assume that the client X Limited is there. So this client is going through some case in the Supreme Court. Now the case is still pending for discussion. There are two options. In case if the company loses the case, the amount will be so big that entity will be sealed, entity will be closed. Or in case if the company wins the case, there will not be any problem to the going concern assumption, entity can happily continue. So whether this entity will continue for the coming 1 year or not, that is depending on outcome of this case. But what is the outcome of that case? That is uncertain. Whether the company will win the case or lose the case, that is uncertain. So this typical scenario, we call it as material uncertainty relating to going concern. Whether entity will be able to continue for the coming 1 year or will not continue for the coming 1 year. It is depending on some circumstances which is uncertain. Clear? Now in this case, what I have to do? If there is a material uncertainty relating to going concern. So in this case also, the standard says there could be two cases. So there is a material uncertainty relating to going concern. In that case, you have to check whether adequate disclosure given in financial statements by the management or no adequate disclosure given in financial statements. Sir, what do you mean by adequate disclosure given in the financial statements? The management is going through this uncertainty. Okay, but the management did not hide it. In the financial statements, they have given one note. In that note, they have clearly explained, sir, so and so case is going on. In case if we win the case, we can happily continue. In case if we don't win the case, we might have to pay a huge amount of penalty. And we have appointed a lawyer. We have appointed a reputed lawyer who is fighting the case for us. So like that, without any mistake, they have clearly explained. Who? Management without hiding anything. They have clearly explained that information in the notes to accounts. That is what the meaning of adequate disclosure given. So when there is a material uncertainty and the management has given an adequate disclosure, has the management did something wrong? No. Whatever uncertainty they are facing, they have clearly explained in notes to accounts. Are the financial statements giving true and fair view? Yes. Why? Because management did not hide anything. So what opinion will be given in this case also? I will give unmodified opinion only. But don't you think this matter should be brought to the notice of the shareholders? Management gave the disclosure, but as I have told, since every user might not read the financial statements fully, don't you think there is a responsibility on you to bring this information to the notice of the shareholders? Yes. How you can highlight it to the shareholder? You will say emphasis. You are correct, but actually wrong. So you could highlight it in the emphasis of matter paragraph, but SA 570 specifically says that these material uncertainty, if you want to highlight it, don't highlight it in the emphasis of matter paragraph. Use a separate paragraph, material uncertainty relating to going concern. Use a separate paragraph, material uncertainty relating to going concern. In that paragraph, you highlight that uncertainty. In that paragraph, you highlight that uncertainty. See, if the standard did not have told this, we would have definitely highlighted in the emphasis of matter only. Like as you could see here in the previous case, when the going concern is inappropriate, we will give unmodified, but we'll try to highlight it in the emphasis. Why? Because standard did not say specifically anything. But when it comes to material uncertainty, the standard has specifically told that you give unmodified opinion, but highlight that information in a separate paragraph which contains the heading material uncertainty relating to going concern. In that paragraph only you have to highlight. If they did not have told this, we would have highlighted in the emphasis, but the standard is specifically asking us to use a separate paragraph with this heading, so we have to use it and highlight that information in this paragraph. Clear? So when material uncertainty relating to going concern is there, when adequate disclosure is given, you will give unmodified opinion, but that information you will highlight it to the shareholder by using a separate paragraph called material uncertainty relating to going concern. Next case, sir, what if there is no adequate disclosure? That means the management is going through some uncertainty, but the management did not give a disclosure, did not give that explanation in the financial statements. So in that case, what the standard says is you have to give a modified opinion. Sir, which kind of modified opinion I have to give? Either you have to give qualified or adverse, depending on materiality and pervasiveness of that uncertainty. You have to give either qualified opinion or adverse opinion, and the reason for that qualified or adverse opinion paragraph, you have to explain that in the basis for opinion paragraph. Sir, here also is there any requirement to use material uncertainty relating to going concern? No. Material uncertainty relating to going concern, that paragraph is not required here. Why? Because you are giving a modified opinion, and the reasons you are explaining it in the basis for modified opinion paragraph. There is no requirement of material uncertainty relating to going concern paragraph here in this case, but in this case we require material uncertainty relating to going concern. Clear? So I have explained you the reporting requirements. So if we go through the content of that standard, so if we talk about auditors reporting, see, when going concern is appropriate, we need not discuss specifically anything. So what if the going concern is inappropriate? What will be our reporting requirements? This I have clearly explained. Sir, what if there is a material uncertainty relating to going concern? Here also two cases. Disclosure is there, no disclosure is there. When disclosure is there, what you should do. When disclosure is not there, what you should do. That is also clearly explained. But there will be one more case. In some cases, what the management will do is management is unwilling to share its assessment, which means management had made an assessment regarding going concern, but they are not sharing it with you. On what basis they have done the assessment regarding going concern? What is their conclusion regarding going concern? That management is not making available the assessment, whatever they have done. In that case, what I should do? See, as an auditor, I need to obtain sufficient and appropriate audit evidence. For that, regarding going concern, for that management should give me the details. But management is not sharing their assessment with you. Then what you should do? Then you will not be able to obtain audit evidence. When you are not able to obtain audit evidence, what you should do? Either you have to give a qualified opinion or disclaimer of opinion. Why? Because this is a case of non-availability of audit evidence. Understood, everybody? So if the management is unwilling to make its assessment available to the auditor, in that case, that means management is not sharing the information. You don't have audit evidence in that case. In that case, you will give either a qualified opinion or you will give a disclaimer of opinion. Understood, everybody? So these will be the reporting requirements of the auditor regarding the going concern assumption. Clear? So we are done with audit reporting, but as I have told, first we need to perform audit procedures. No? See, we will get these conclusions only when we have performed audit procedures. We have seen after audit procedures what will be our observations, what will be our reporting requirements. But how we will get that audit evidence? By performing audit procedures. So what audit procedures auditor has to perform regarding going concern assumption? Let us have a quick look at it. So audit procedures regarding going concern assumption are divided into two categories. Number one is risk assessment procedures and number two is further audit procedures. So what auditor should do regarding risk assessment procedures? Number one, the auditor shall consider whether any events or conditions exist that may cast a significant doubt on entity's ability to continue as a going concern. So first, what the standard is asking you to do is you try to identify, are there any events or conditions which will give you a hint that there could be a possibility of going concern going invalid. That means they are not asking you to directly find out whether going concern is valid or not. First, they are asking you to identify, are there any indicators which will create a doubt to the auditor regarding going concern assumption? So that you have to do. How I can identify? First of all, what are that events or conditions which create a doubt regarding entity's ability to continue as a going concern? Those are actually given in the standard only, and those indicators are actually divided into three categories: financial indicators, operating indicators, and other indicators. Sir, what could be financial indicators? Like company is always having a net liability position. They're having long-term borrowings which are approaching maturity, but the company is not having funds to make the payment. Negative cash flows they are continuously incurring. Withdrawal of financial support. The creditors are withdrawing their financial support. Adverse financial ratios are having a bad financial ratios. Or there could be operating indicators like managements themselves are having an intention to liquidate the company, or loss of key management. The key management in the organization, they have lost it. Labor difficulties, they are not able to find the labor for their work. shortage of supplies, whatever raw material they are using which is required for their business, that is under short supply. Successful competitor, or all of a sudden a successful competitor has come who is eating away all your business. And there could be other indicators like non-compliances with the laws and regulations, pending cases, there are some calamities or catastrophes which are uninsured, and there could be changes in the laws and regulations. So first thing, as an auditor, what you should do is you should try to identify whether any of these events or conditions exist which will create a doubt regarding going concern. Sir, how I will come to know about any of these events and conditions are existing or not? By simply inquiring the management. What you should do? By simply inquiring the management if such events and by simply inquiring the management whether any of these indicators are there. Yes, you found some indicator. By inquiring the management, you found some indicator. If you find that events are indicators, then you have to perform the further audit procedures. On the other hand, if you inquire the management, you are unable to find out any of this operating, financial or other indicators, then you need not proceed any further. There your responsibility will come to an end. Like the way we have seen in SA 501. So same logic here. If by inquiring the management, if you find out any of the operating, financial or other indicator, then we will perform further audit procedures. If we don't find any indicator, then we will stop with the risk assessment procedure. With inquiry only, we will stop. When we actually get to know any of this indicator, when we found any one of this indicator, then what we will do? Then we will perform further audit procedures. Sir, what further audit procedures I will perform? Very simple. Request the management to make the assessment. If not yet done, if the management has not already made the assessment regarding going concern, I will ask the management to make the assessment now. Evaluate management's plans for future. Try to sit with the management, understand what are their plans for the future. Analyze the cash flow forecast. They will prepare cash flow estimate for the coming 1 year. Analyze that cash flow forecast. Or even you can ask for written representation. You can analyze the profits, cash flows of the company, read the latest interim financial statements, inquire legal counsel, go and consult the legal department, inspect the loan agreements, and also read the minutes of the meetings of board of directors. So perform all these further audit procedures. Then you will get the observations like we have told. Going concern is appropriate, inappropriate, or material uncertainty, and depending on your observation, you have to have a impact on your auditor's opinion. Clear? So this is what regarding SA 570, one of the most important standard from the examination perspective. Hope you guys are able to understand this. So we are done with two more standards, SA 560 and SA 570 also we are done with. Clear and comfortable everybody till here? The next standard which we will take up for revision will be SA 550. We will try to discuss. Try to revise SA 550. Very simple standard, very small standard, very easy from the examination perspective as well. So we'll try to revise now SA 550 talking about related parties. See, if you pay close attention, under applicable financial reporting framework, there will be a lot of special care which will be given to the related party transactions. Like if you see Schedule 3, in the Schedule 3, there are separate disclosure requirements when it comes to related party transactions. Similarly, when you have a look at accounting standards, we have dedicated accounting standards which are talking about the related party relationships and transactions. So especially when it comes to related party transactions, in the applicable financial reporting framework, a lot of emphasis will be given to the related party transaction. Why? Why there is a special attention required for the related party transaction? The logic is very simple. Whenever there are related party transactions, the chances for manipulations are very, very high. When two parties are related, they can influence each other, they can dominate each other, and they can manipulate the terms and conditions, and it is a little bit easier to commit frauds and crimes when the transactions are related party transactions. So that's why a lot of special care has been given in the applicable financial reporting framework. They ask the companies to give a lot of disclosures, a lot of explanations, a lot of explanations are required to be given when it comes to related party transaction. Similarly, from the audit perspective also, related party transactions are highly important. So that's why we have a dedicated standard on audit, which is talking about auditors' responsibilities relating to related party transactions while conducting the audit of the financial statements. Since there is a high chance of happening of fraud or crimes in the related party transactions, even the ICA has given a dedicated standard which is talking about exclusively auditors' responsibilities regarding the related party relationships. So let us try to understand what are that related party responsibilities, what are that auditors responsibilities as per SA 550. So before we talk about responsibilities and all, let us try to understand what is the meaning of the term related party. See, under Companies Act, there is an exhaustive definition for related party. Under accounting standards also, we have an exhaustive definition for related party. Then how come related party was defined in the standards on audit? See, in the standard on audit, the standard is trying to be on a safer side. The standard simply told that if the applicable financial reporting framework has already defined the term related party, please follow that definition only. What the standard on audit has told, it is trying to play it on a safer side. So what it is telling is, if the applicable financial reporting framework of the client has clearly defined the term related party, follow that definition only. Like if I'm conducting audit of a company, for company applicable financial reporting framework is Schedule 3 and accounting standards. Since in the Schedule 3 and accounting standards, the related party term is already exhaustively defined, we have to follow that related party definition only. Clear? So that's what it says. If applicable financial reporting framework has already defined related party, follow the same definition. In case if the applicable financial reporting framework does not define the term related party, or the definition given to the related party under applicable financial reporting framework is very minimal, then they have given some definition to the related party in this standard. And when this definition has to be followed, this definition has to be followed only when the applicable financial reporting framework did not define the term related party in a proper way. If applicable financial reporting framework has defined it, we will follow that definition only. In case if applicable financial reporting framework provides minimal or no definition, then related party includes the following. So what is that? Number one, a person or entity that has control or significant influence over reporting entity directly or indirectly. Take for example, your client is X Limited. Some other entity is controlling or having a significant influence on your client company. Assume that some Y Limited is having a control or significant influence on the client X Limited. Then X and Y will become related. Or another entity over which reporting entity has significant control or influence. That means assume that your client is X Limited, your client is having control over some other entity Z Limited, then also it becomes a related party. Or another entity that is under common control with the reporting entity, that means some other entity and your client entity both are under common control. Some common control is there between the two, either by way of common ownership. For example, one person is holding a ownership in X and Y, or they are under common control because the owners are close family members, or they are having a common key management. Able to understand? Guys, very simple. In case if the applicable financial reporting framework does not define the term related party, then the related party includes someone who is having control over our client, or our client is having control over somebody else, or my client entity and someone else we both are under common control. How that common control is arrived? Either by way of common ownership. In my client entity and some other entity, both are having some common person is holding the shares. Or my client entity, some other entity, both are having common owners. My client entity, some other entity, we are having common key management. Then also we will fall under related parties. Clear? Very simple, guys. So if I put it this way, assume my client company is there. Someone is having control over client company. That will be related party. My client is having control over somebody else, that also will be related party. My client entity is there, some other entity is there, we both are under common control. That common control could be by way of common ownership, or same owners, or owners are close family members, or even that could be common key managerial person like common directors, common CEO, common CFO. So these are the definitions of related party as per the standard, and this definition has to be followed only when the applicable financial reporting framework has a minimal or no definition. If the applicable financial reporting framework has a clear definition for related party, we will follow that only. However, one important point which is very important for the true or false statements, entities which are under common control by a state are not considered to be related unless they engage in significant transactions or share resources. So, see, I told when two entities are under common control, then we call it as related party, no? But this point does not become applicable for government, where two entities are controlled by same government, state in the sense government here. When two entities are under common control of the government, then they will not be treated as related parties unless they share the resources or unless they both are engaged in some significant transactions. See, what they're trying to say here once again is, so assume that there is a company X Limited, there is a company Y Limited. Under both of this, the control is exercised by government. See, practically speaking, as per the definition, these both, since they are under common control, they has to be related, they has to be treated as a related party. But when the common control is exercised by the government, they will not be treated as a related party directly unless they both are sharing the resources. This X Limited and Y Limited, they are both sharing the resources. Then we can treat them as a related party, or they are having some significant transactions between them. If they are engaging in some significant transactions, then only we call it as related. Just because two entities are under same control of a government, we will not treat it as a related party. Clear? So this is one important thing from the examination perspective. So this is what the meaning of related party. Now, what is the nature of related party transaction? See, generally, when the related party transactions are in the normal course of business, when the related party transactions are normal course of business, like terms and conditions are same, there is no special privilege given to the related party, whatever terms and conditions which are applicable for a third party, same transactions are also applicable for related parties. So if the related party transactions are carried out in the normal course of business without any special treatment given for related parties, then generally there will not be higher risk of material misstatement. There will be normal transactions only. We need not get worry about it when the related party transactions are in the normal course of business. No special privilege is given. Whatever terms and conditions which are applicable for a third party, the same terms and conditions are also applicable for related party. If that is the case, in that case, there is no higher risk of material misstatement. We need not worry much. But however, in some cases, related party transactions may give rise to high risk of material misstatement. This point is repeatedly listed in the examination. In some cases, the risk of material misstatement arising from related party transactions will be very higher. Sir, in which circumstances the risk arising from the related party transactions will be very high? Number one, related party transactions operate through extensive and complex relationships. So related parties are not direct relationships. They are engaging in very complex relationships. Like for example, I am conducting audit of client X Limited. This X Limited is having one subsidiary. That subsidiary is having another subsidiary. That subsidiary is having an associate company. In that associate company, one of the directors is a partner in firm XYZ and O. Now this entity will become related party to this. But the relationship is very complex. See, when the relationship is very complex, sometimes management themselves may not be able to identify who is a related party. So that's why when the related parties are operating through extensive and complex relationships, then the risk will be very, very high. Or sometimes the information systems which are used may be ineffective at identifying or summarizing the related party transactions. Today, organizations are using softwares. So in big entities, in their accounting software, there will be a specific function which will automatically identify the related party transactions and identify the disclosure. In case if the client's accounting software is not that advanced, if the client is using accounting software which is ineffective in identifying related party relationships or transactions, then also the risk will be very high. Similarly, related party transactions may not be conducted under normal market terms and conditions. That means you are giving special treatment, you are doing the transactions without consideration, then also the risk will be very high. So they might ask you a question, what are the circumstances in which the related party transactions risk could be higher? So three things you are supposed to write. Example, number one, when the related party transactions are operating through complex relationships and extensive relationships. Number two, information systems which are used by the organization are ineffective in identifying the related party relationships. Number three, related party transactions are not getting conducted under normal market terms and conditions. In these cases, generally the risk is higher. On the other hand, if the related party transaction is happening in the normal course of business only, then the risk will be lower. So we have seen what is the meaning of related party, what is the nature of the related party relationships. Next, we'll talk about responsibilities of auditor. So as an auditor, what you are supposed to do when it comes to your responsibilities of auditor regarding the related party transactions. Number one, as an auditor, we need to obtain audit evidence regarding accounting and disclosure requirements. As I have told, as per applicable financial reporting framework, there are so many accounting and disclosure requirements given under Schedule 3 and accounting standards. So as an auditor, I need to obtain sufficient and appropriate audit evidence. Whatever accounting and disclosure requirements are there, which are given under applicable financial reporting framework, whether they are followed or not, I need to obtain audit evidence. So how I should do it? Let us see. So the auditor should obtain audit evidence regarding accounting and disclosure requirements. How he will get to know it? For that, he shall perform audit procedures to obtain an understanding of accounting and disclosure requirement. First, you should go through the applicable financial reporting framework and understand what are actually the accounting and disclosure requirements of related parties. Then you need to obtain understanding of related party relationships and transactions. First, you understand disclosure requirements. Then you understand who are your clients related parties, who are having the what kind of relationships they are having with the related parties. And finally, you have to conclude whether financial statements give a true and fair view and they are not misleading, particularly because of the related party transactions. Because of related party transactions, the financial statements are not misleading. They give a true and fair view. That also we need to obtain audit evidence. So as an auditor, that is your first and primary responsibility to obtain audit evidence regarding accounting and disclosure requirements. Number two, you need to even identify fraud risk factors. Sir, what is fraud risk factor? See, fraud risk factors means the chances of happening of the fraud. As I have told, whenever related party transactions are there, see, it is very much easier when compared with outsiders. It is a bit easier to perform frauds, to conduct frauds in case with the related parties. So that's why as an auditor, you need to study in deep the related party relationships and find out, is there any possibility of happening of fraud because of related party transaction. That is what the meaning of fraud risk factor, the possibility, the indicators that there could be a possibility of fraud being committed. So that also I need to find it out. So if we read it, the fraud can be easily committed through related parties. Hence, understanding related party transaction helps the auditor in identifying fraud risk factors. Number three, inherent limitations arising out of related parties. If you remember, when we discussed inherent limitation, one of the inherent limitations is related parties also. So the chances of auditor's opinion going wrong because of inherent limitations are much higher. So the same thing they say, in case of related parties, the significance of inherent limitations are greater. That means the possibilities of auditor's opinion going wrong are much higher in case of related party transaction, because of the following reasons. Why? Because sometimes management themselves may not be aware of existence of related party relationship. Sometimes management themselves will not understand who is the related party, who is not the related party, and related party relationships may present a greater opportunity for collusion and manipulation. Even in the case of related party chances, related party transactions, the chances for manipulation, collusion are much higher. So that's why the risk of that's why the possibility of inherent limitations is much higher. Or if I put it in other way around, the significance of inherent limitations is much higher in the case of related party relationships. If I put it in other way around, the chances of auditor's opinion or auditor's opinion going wrong, particularly because of related party transactions, is much higher because of the following reasons. And also, how you can overcome that your chances of your opinion going wrong? Simply by maintaining professional skepticism. If you maintain the professional skepticism, then audit risk can be reduced to a very low level. So this is what your auditor's responsibilities are. Very simple. We need to obtain audit evidence regarding accounting and disclosure requirements. We need to identify the fraud risk factors. We have to pay special attention to our inherent limitations, and even we have to maintain professional skepticism. The requirement of professional skepticism is much higher in the case of related party relationships. Next, coming to the next point, how the auditor can verify existence of related parties. See, I'm telling, as an auditor, you have to identify who are your related parties, who are your clients, related parties, that you have to find out. But how you can find it out? By inspecting certain documents, whether there is a related party relationship or not. That how auditor can find out? By reading the following documents. So what auditor can do to verify existence of related parties? Go through income tax returns, go through the information provided to regulatory authorities like SEBI. You can even go through the shareholder register. By that you will come to know who is having a significant ownership in the company. Even go through statement of the conflicts which are submitted by the board of directors. Life insurance policies acquired by the company. Go through their investment register. By that you will come to know subsidiary associate companies. Go through contacts and agreements with the key management, with the top level management. You have to go through any contracts if you find which are not in the ordinary course of business, and even you have to go through internal auditors report. So if you go through all these documents, by that you will come to know the existence of related parties. Clear? So this is what SA 550 is all about. Hope you guys are able to understand this SA 550 as well. Clear? Understood, everybody? So since we are done with SA 550, the next standards which we will take up for revision will be, so we'll try to revise now SA 220, and along with that we will also try to revise the content of SQC1. So both put together we'll try to complete in one go. So the next thing which we are going to revise is what? SA 220 and SQC1, and both the standards we are going to complete in one go. So why? Because both are closely related with each other, will not take much of a time. So quickly we will try to revise the content from SA 220 and SQC1. See, first of all, I would like to explain what does this SA 220 and SQC1 talk about specifically. See, generally we do, as a practicing chartered accountant, for sake, we do different kinds of engagements. Being a chartered accountant, we perform different kinds of assignments. Like if you remember, when I was discussing about the introduction, when I was discussing this chapter, introduction, standards on audit, in that I have gave you introduction. As a chartered accountant, sometimes you do audit engagements, sometimes you do review engagements, sometimes you do assurance engagements, and sometimes you perform related services. So different kinds of engagements we will do. Being a chartered accountant, we will not just perform only audit services. We do different kinds of engagements, like we do review engagements also, we do assurance engagements also, we do related services also. And if you pay attention, whatever services we are offering, whatever, be it audit assignment, be it review assignment, be it assurance assignment, be it related service, there is a need for maintaining the quality. There is a need for maintaining the quality in whatever work which a chartered accountant is doing. Why? Because our work will form part of decision making of so many users. Like if you are doing audit on the basis of your auditor's opinion, there are so many people who are going to base that decision. Similarly, if you are conducting review assignment on the basis of your review report, so many people will be basing that decisions. If you are doing any assurance engagement on the basis of your assurance report, so many people will be basing that decisions. Similarly, on the basis of related services also, so many people will form that decisions. So whatever different services we are providing, these are very, very important, and these services form the basis for decision making of different stakeholders. Don't you think in such a scenario, whatever assignments we are doing, whatever different kinds of engagements we are doing, don't you think we need to maintain the quality in the audit assignments? Yes, 100% yes. So be it audit, be it review, be it assurance engagement, be it related services, whatever assignment we are doing, there is a need for maintaining quality in each and every assignment which we are doing. Sir, how we can maintain that quality? So in every kind of engagement, be it performing audit engagement, be it performing review engagement, be it performing assurance engagement, be it performing related services, how we can maintain the quality in all these assignments? Is there any guidance? Yes, there is a guidance, and that guidance has been given by way of SQC 1, Standards on Quality Control 1. So SQC1 is a standard which is guiding the auditor how they can maintain the quality in every assignment they are doing, be it audit assignment, be it review assignment, be it assurance assignment, be it related service assignment, any assignment which a chartered accountant is doing, how to maintain the quality, that guidance will be given by SQC1. Okay. Now, in the standards on audit, particularly when you are doing audit engagement, especially when you are doing audit engagement, how you can maintain quality exclusively in the audit engagement, that guidance is given under SA 220. So the basic difference between SA 220 and SQC1 is SQC1 talks about maintaining quality in all kinds of assignments which a chartered accountant is doing, whereas specifically when it comes to audit, how to especially maintain the quality in the only audit assignment, that guidance has been given under SA 220. So both SA 220 and SQC1 both are talking about maintaining the quality. Both are giving guidance how the chartered accountant can maintain quality. But SA 220 specifically talks about how the auditor can maintain quality only in the audit assignment, whereas SQC1 talks about how to maintain the quality in all kinds of assignments which the chartered accountants are doing. Clear, everybody? And if you see here, most of the standards content will remain same if you read SA 220 and SQC1. In fact, practically saying, SQC has actually been derived from SA 220 has actually been derived from SQC1 only. So SQC1 is talking about overall assignments. From that, a part of how to maintain the quality in the audit assignment specifically, that has been discussed under SA 220. More or less, both the standards will try to convey the same thing. Let us try to understand in a deeper manner how we can maintain the quality, especially in audit, how we have to maintain the quality in all the audit on all the assignments we are doing, not just audit assignments, in all the assignments whatever we are doing, how to maintain the quality. That guidance which has been given under SQC1, that also will look into how to especially maintain the quality in the audit assignment which we are doing. That SA 220 is telling us, that also we will have a look. But more or less both the standards will contain similar information. So first I will begin my discussion with SA 220. First I will begin my discussion with SA 220. So as you could see, SA 220 is talking about maintaining quality control for an audit of the financial statements. So the title itself says SA 220 is talking about how to maintain the quality, how to control the quality when you are conducting an audit assignment. It is not talking about any other assignment. It is only talking about how you can maintain quality in the audit assignment. So what is the objective of this standard? Why SA 220 has been given? So SA 220 has been given, it is asking the auditor to implement some quality control procedures to provide a reasonable assurance that whatever audit you have done, that audit is complying with the professional standards and also legal and regulatory requirements. And also you have to implement quality control procedures which will give you assurance that you are giving opinion which is appropriate in the circumstances. So nothing but this standard SA 220 is asking the auditor to implement some quality control procedures. so that you will get a confidence that whatever work you have done, that work is complying with the professional standards, that is standards on audit, and whatever work you are doing, that work is actually complying with the laws and regulations. And also, once you have done the audit, you should get that confidence that whatever opinion you have given is appropriate. It should not be like you have done the audit and you are having a sleepless nights. Hey, I have done the audit of this entity, I don't know what will happen, when which regulatory authority will come and question me. That worry you should not have. Once you have done the audit, you should get the confidence, yes, I have done the audit as per professional standards, laws and regulations, and my opinion is appropriate. That confidence you have to get. If you have to get that confidence, you have to implement some quality control procedures. So let us see what are that quality control procedures. So SA 220 says that if you want to maintain the quality in the audit assignment, you need to have some policies and procedures. If you want to have quality control in the audit assignment, the auditor should implement some policies and procedures. And that policies and procedures are required to be implemented in 6 different areas. So that we call it as elements of system of quality control. So if the auditor wants to maintain the quality control in the audit assignment, he needs to have some policies and procedures. And that policies and procedures should be in how many areas? In 6 areas that policies and procedures should be there. So what are that 6 areas in which policies and procedures should be there? Number 1, leadership responsibility. Number 2, ethical requirements. Number 3, acceptance and continuation of client relationship. Number 4, human resources. Number 5, engagement performance. And number 6, monitoring of the policies and procedures. So sometimes they might ask you a question, what are the elements of system of quality control as per SA 220? Nothing but in what areas we have to implement policies and procedures. What are they? 6 areas. What are they? Number 1, leadership responsibility. Number 2, ethical requirements. Number 3, acceptance and continuation of client relationship. Number 4, human resources. Number 5 is engagement performance. Number 6 is monitoring of policies and procedures. Now we will see what kind of policies we should have in each and every area. First, let me begin with the first one, leadership responsibility for quality control. So if you want to maintain the quality in the audit assignments, you can't assign the lead, you can't call each and every engagement team member and say each and every one of you will be responsible for quality. You have to assign a leadership responsibility. Someone from the engagement team should come forward and take the leadership responsibility. Okay, I'm going to take the leadership responsibility. I will make sure that my team will do the audit in a qualitative manner. Someone should come forward from the engagement team and take that leadership responsibility. Sir, who will be that appropriate person to take the leadership responsibility? SA 220 says none other than our engagement partner. So engagement partner should himself come forward and take the leadership responsibility for maintaining the quality. And in fulfilling that responsibility, for example, if an engagement partner has to fulfill his leadership responsibility, how he can fulfill his leadership responsibility? Just if we go and announce to the engagement team members, hey, I am the leader for maintaining quality. Will that be enough? No. Being a leader, you have to always highlight by your communication, by your actions. As an engagement partner, being a leader, you should highlight how important it is to comply with the professional standards. You have to educate your engagement team members how important it is to comply with the standards on audit. You have to educate them. You have to highlight how important it is to comply with the laws and regulations, how important it is to comply with firms' quality control policies and procedures, and you have to educate them how important it is to give appropriate audit reports. And you should create such a good environment in the firm where everybody able to raise their concerns without any fear. So such a favorable environment you have to create. Able to understand, everybody? So that is the first point. As an auditor, if you want to maintain the quality, you should come forward and take the leadership responsibility. Sir, how I can take the leadership who will take that leadership responsibility? Engagement partner. And being the leader, you should emphasize, you should highlight to your engagement team members the requirements like this. Clear? Second one, in order to maintain the quality, you should make sure that your engagement team complies with ethical requirements. We already know what are the ethical requirements. 5 ethical requirements we have. What are the? Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. This long ago we have seen in the chapter nature, objective and scope itself. So once again, 5 ethical requirements you have to make sure that your engagement team is complying with. Third area in which you are required to maintain policies and procedures, acceptance and continuation of client relationship. If you remember, this point also we have discussed in the nature, objective and scope of audit itself. Before you take a decision whether to accept the client relationship or whether to continue the client relationship, what factors you will consider? 4 factors you have to consider. What are the? Integrity of the management and those charged with governance, competence of the engagement team member, whether you have competent engagement team to complete the audit, whether your engagement team will be able to comply with the ethical requirements, and even you have to consider significant matters which have arisen during the previous audit assignments. Yes or no? See, these are not something new. We have already discussed it long ago as a part of our chapter, nature, objective, and scope of audit. In fact, I told you that one part has been taken from SA 220. So if you want to maintain the quality in the audit assignments before acceptance and continuation of client relationship, you have to check this 4 factors. Next area in which you should have policies and procedures is human resources. Nothing but your staff. In the audit team, there will be staff, no? Towards your staff also, there should be some policies to make sure that they do the audit in a qualitative manner. So what kind of policies and procedures should be there with regard to human resources? So you should have proper recruitment policy. You should have proper performance evaluation. Should increase their capabilities. You should increase their competence. You should have some policies for their career development. You should provide them opportunities for career development. Whoever is doing well, you should have a policy to promote them. You should offer them better compensation. If possible, try to estimate their personal needs as well. If you have these policies in your staff, they will become more competent and resultantly, ultimately will do the audit in a qualitative manner. And then we have engagement performance. When the engagement is actually getting performed, then also in that place, at that point of time also, you need to have some policies and procedures. When the engagement is actually getting performed, then also you need to have some policies and procedures. What are they? Number 1, briefing of the engagement team members. You have to give a short brief to all your engagement team members, what is expected from this audit, what are the roles and responsibilities. So a short briefing should be given to all the engagement team member. And you should not just tell them to comply with the standards, you should also tell them the process for complying with the standards. So just if I go to the engagement team members and say, dear team members, you should all comply with standards on audit, that will not be enough. You need to even let them communicate the process, how they have to communicate with the standards. And even you have to direct them, you have to supervise them, and you have to give them training wherever required. And whatever work which engagement team has done, that you have to review also. You have to verify whatever work that has been done by engagement team members. Tell them that they have to maintain appropriate documentation. Doing the work alone will not be enough. They have to maintain proper documentation as well. And it is your responsibility to keep the entire engagement team updated about the policies and procedures. So when the engagement is getting performed, these kind of policies and procedures should be implemented. And then we have monitoring of the policies and procedures. Finally, just implementing policies and procedures alone will not be enough. Even you need to check whatever policies that you have implemented, whether they are working effectively or not. That monitoring also you have to do. Sir, how we can monitor, sir? By doing a periodic inspection of completed assignments. Whatever assignments that are completed, you do the evaluation of that assignments, whether those completed assignments are done after following the quality control policies and procedures. So that periodic inspection you have to do. So in monitoring stage, it involves verifying whether quality control policies are adequate, relevant, and whether they are operating effectively. And how can I do it? By doing periodic inspection of completed engagements. Sir, why I should do monitoring? Why can't I just implement and ignore it? Why? Because the purpose of monitoring is it will give you comfort whether the professional standards and legal and regulatory requirements are met or not. So whatever audits you have done, have you really done the audit as per standards on audit? Did your engagement team did the work as after complying with the laws and regulations? That you will come to know. And also by doing that monitoring, you will come to know how far the quality control systems are effective, and whether whatever reports you have given till now we have given appropriate reports or inappropriate reports. That also you will come to know. And if at all any changes are required, you can do the follow-up and make the appropriate personnel to update that policies and procedures. So that's why monitoring is required. So if you want to make sure that whatever assignments you are doing that are happening in a qualitative manner, it is our responsibility as an auditor that we should implement policies and procedures in these 6 areas. Clear? So this is how you can maintain the quality in the audit assignments. Now let us come to SQC1. We'll try to complete SQC1 also. Most of the content will remain same like SA 220 only. So if you see the title here itself, SQC1, it is also talking about quality control for entire firm that performs audit, review of historical financial information, assurance engagement, related services engagement. So as I have told, SA 220 is only talking about quality control in audit assignments, whereas SQC1 is talking about maintaining quality in all kinds of assignments which a chartered accountant will do, be it audit, be it review, be it assurance, be it related services. Sir, how a chartered accountant can maintain quality in all kinds of assignments, sir? Here also same like SA 220. Sorry. Here also same like SA 220, the auditor should have some policies and procedures. The chartered accountant should have some policies and procedures. In how many areas policies and procedures should be there? The same 6 areas. What are they? Leadership responsibility, ethical requirements, acceptance and continuation of client relationship, human resources, engagement performance, monitoring. Same like we have seen in SA 220. So whatever elements of quality control are there in SA 220, the same elements in the same areas, you need to follow some policies and procedures even as per SQC 1 also. And specifically what SQC 1 says is leadership responsibility for quality within the firm. So how the leadership responsibility should be fulfilled? So the firm should establish some policies that recognize that quality is essential in performing engagements. So in the firm, on an overall basis, the firm should have some policies which will educate its team members, which will make them realize that quality is important in each and every engagement, be it audit, be it assurance, be it review, be it related services. So how much quality is important, that policies they have to implement in the entire firm. Generally, firms CEO or managing partner, they have to take the ultimate responsibility for quality. See, in audit we have engagement partner, but if we are doing some assurance engagement, review engagement, then we don't have something called engagement partner. So that's why what they're telling is keeping all the assignments in view. Generally, who will take responsibility for every kind of assignment, be it firm's CEO or managing partners? If it is audit, specifically engagement partner. If we talk from the entire firm perspective, either firm's CEO or managing partner. And persons who are assigned with operational responsibility should have appropriate experience, ability and authority. And to whom you are giving actual operational responsibility, to whom you are actually assigning the work, see, this firm's CEO or managing partner, they will take ultimate responsibility, but they will delegate the work to low level staff. No, even that low level staff also should have appropriate experience, ability and authority. By following these steps, leadership responsibility will be built within the firm. Number 2, ethical requirements. Same, entire engagement team should have ethical requirements. So here what SQC 1 says is the firm should establish some policies and procedures that provide reasonable assurance that its personnel are complying with ethical requirements. And not just ethical requirements, whatever engagement we are performing, we need to always observe independence. Independence is a basic requirement in every engagement we are doing. And as a firm, you should communicate your independence requirements with all your staff, be it article assistant, be it paid assistant, whoever it is. As an auditor, as a firm's head, it is your responsibility to communicate with all your engagement team members, to all your audit team, to all the members in the firm, the importance of maintaining independence. And if at all, if you find any threat to independence, we should try to eliminate it by applying the safeguards, like we have seen in the nature, objective and scope of audit chapter. So if you face any threats also we have seen 5 kinds of threats will be there: self-interest, self-review, familiarity, etc, etc. So if at all, if someone faces a threat, if you came to know that there is a threat to independence, we should take actions to eliminate them by applying safeguards. Or if we are unable to implement the safeguards, if we are unable to eliminate the threats, what we should do? We should ultimately withdraw from the engagement altogether. Okay, next, finally, all breaches of independence, if at all, if there is any breach in independence, that should be communicated with the firm. And at least annually, so at least every year, the firm should obtain written representation from its staff regarding compliance with independence. The firm should ask each and every person in their office to give a written statement that they are all complying with the independence requirements. Clear, everybody? So these are all the requirements of SQC 1 as per ethical requirements. So what they say, a summary is, every firm should have policies and procedures which will give them confidence that their personnel are complying with ethical requirements, and they have to observe independence in each and every assignment. It is their responsibility to communicate the independence with each and every person. If at all any threat to independence is there, we should be able to eliminate it. If we are unable to eliminate it, we have to withdraw from the audit. If any breach of independence is there, that should be communicated with the firm. And at least annually, once in every year, the firm should get a written statement from all its engagement team members that they have complied with independence. Clear? So this is what SQC 1 says regarding ethical requirements. Next one, acceptance and continuation of client relationship. Before you do any kind of engagement, you need to assess certain factors. Those factors are same. We have to check the integrity of the client. We have to check the competence of the engagement team members. We have to check the compliance with ethical requirements. Same like SA 220. Sorry guys. But SQC 1 specifically says how you will come to know about integrity of the client. So agreed, as an auditor, just I will have a bit of water, please. Yeah, sorry. So even SQC 1 also says the same thing. Before we accept and continue the client relationship, we need to check 3 things. Integrity we have to check, competence of the engagement team to perform the engagement we have to check, and even compliance with the ethical requirements also we have to check. But specifically SQC 1 says that how we can get to know about integrity of our client. So whether the management of our client is having integrity, whether they are honest people or not, How we can get to know about it? So they have given us the some factors to see to determine the integrity of the client. What are they? Identity and business reputation. Check the reputation of your client's business. Nature of client's operations. Try to understand what kind of operations your client is doing. Attitude of the clients, principal owners, those charged with governance. What kind of attitude top level management is having? Is client aggressively concerned with maintaining lower fees? Is the client always focused on keeping the fees as low as possible? Then they are not honest. Inappropriate limitation in the scope of work. They are unnecessarily keeping a restriction on your scope. Or indications of client's involvement in money laundering. There are some indications that your client might be involved in money laundering, like hawala transactions or other kinds of illegal transactions. Or reasons for proposed appointment. What is the logic they are appointing you? What is the reason for non-reappointment of the previous firm? Why they did not reappoint the previous firm? So all these factors, if you analyze, then you will come to know whether your client is having integrity or not. So SQC1 also says the same thing. Before accepting and continuation of client relationship, 3 things you have to check. But specifically they say about integrity, how as a firm we can get to know whether our client is having integrity or not, whether our client is honest or not, how you can come to know. Fourth area in which you need to implement policies is human resources. When it comes to human resources, the policies are going to be same like SA 220 only. Like we have to have some policy regarding their reputation, remuneration, their compensation, performance evaluation. It is same as SA 220. And similarly, whenever any engagement is getting performed, then also some policy should be there. Here also more or less same points they will try to say. Briefing, you have to give a briefing to your engagement team members how to comply with, and also processes for complying with the engagement standards. In case if there is any difficult or contentious matters, that means if there are any complex matters, there should be proper consultation happening within the firm. So if any engagement team member faces any matter as a difficult or very complex, they have to go and get the advice of the top members in the firm. So if there is any difficult or contentious matters, there should be proper consultation. Need to consult externally in case there is a lack of internal resources. In case if the firm is not having enough of internal resources, there should be proper external consultation. For example, if the firm wants to obtain evidence regarding laws and regulations, inside the firm there is no person who is having legal expertise. Now what the firm should do? They should consult some lawyer externally. So in case if there is any lack of internal resources, the firm needs to consult external resources as well. Review of significant judgments made in the engagement. Whatever engagement team members are making judgments, we have to review that judgments, nothing but review of their work. Engagement quality control review is mandatory for listed entities. In case if you are conducting audit of a listed entity, engagement quality control review is mandatory. Nothing but before we express the engagement quality control review means first we will do all the engagement. Just before we give the report, someone within the firm or outside the firm should come and check whether whatever work we have done, is it appropriate or not. Nothing but like an internal review. Before we finally submit our report, someone will come and verify whether we have done the work properly or not. So that we call it as engagement quality control review, and that is mandatory where in listed entities. In other entities, optional. And if there is any differences between engagement team, engagement partners, and engagement reviewer, then there should be proper resolution of the differences. They should sort out their misunderstandings if there are any differences between engagement team members, engagement partner, and reviewer. So when the engagements are getting performed, these kind of policies the firm has to implement. And finally, the same like the previous SA 220, monitoring whatever policies you have implemented, whether those policies are really getting executed or not, that you have to do it by doing a periodical inspection of selection of a completed engagements. Clear everybody? So this is what regarding SQC1. So very simple guys, SA 220 talks about only from one engagement perspective. SQC1 talks from the entire firm's perspective. So just keep that point in mind. More or less the content is going to remain same in both the standards. So with this we are done with SQC1 and SA 220 also. Clear and comfortable everybody till here? So now we have 2 more standards for revision. Out of 13 we are left with 2 more. So one standard is SA 710. So one standard which we had to revise is SA 710, and the other one is SA 450. See, SA 450 will make sense only when we complete the materiality concept, which we have actually integrated with audit strategy, planning, and program. So SA 450 we will try to revise it after this particular audit strategy, planning, and program. Once we are done with audit strategy, planning, and program, along with that chapter, we'll try to revise SA 450. Now when it comes to SA 710, see, actually SA 710 is one of the most complex standards. SA 710 is actually one of the most complex standards. Just I will show you. So this particular standard is not actually suitable for revision. So why I will tell you this standard is not actually suitable for revision? Why? Because the concept of this standard is very deep. See, I'm not skipping it actually, but I will tell you one thing. I have already uploaded a detailed video explaining the concept of SA 710 in a detailed manner. So what is this? I think almost 1.5 hours of video I have already uploaded on the YouTube, that you watch it. Then only you will get the clarity. So without the basic understanding of, without the basic normal level of understanding of the basics associated with this standard, even if we do the revision of content, whatever is there here, that will not make any sense. So this standard is very deep in its concept, so not actually fit for revision. See, even if I do the revision also, it will be simply like reading the charts, whatever has been given here. So what I would suggest you is, even though I'm not doing it here, even though I'm not revising it here, I have uploaded already a detailed video on SA 710. So I've uploaded somewhere close to 1 hour 20 minutes of video or 1.5 hour of video. I have already explained. I've already uploaded on the YouTube itself. I will add a description in the description of this video. I will even add the link of that video. So what I would suggest you to do is watch that SA 710 video. If you have already watched it for revision, watch it at 1.5x speed. Watch it at 1.5x speed. That itself will act as a revision. But just to doing overall revision like other standards, this standard is not that suitable because the concept is very complex and very deep in it. Please watch the full video, which I will add, whose link I will give it in the description below of this video. Understood? So with this, we are done with a revision of majority of the standards. So only standard which is left is SA 450, that I will try to cover it along with audit strategy, planning and program chapter. So with this, we will wind up revising the chapter standards on audit. And I have told you, especially this charts, you have to use it for revision. You have to read every standard from the main material once. That is compulsory. You have to read it. Okay, right. So now we will be revising the chapter audit strategy, planning and program. So since we are done with revising the content from standards on audit, so now we will be taking up the chapter for revision, which will be audit strategy, planning and program. So in this chapter, along with this concept of audit strategy, planning and program here, even materiality related content also we are going to discuss here. So what and all we are going to revise? So one is we are going to talk about planning of an audit of the financial statements. Along with that, we are also going to focus our discussion on materiality, how to determine the materiality. So all that things also we are going to focus. So in fact, when I say I'm going to revise audit strategy, planning and program, that entire content from the chapter has been taken from the standard SA 300. And whatever discussion regarding materiality which we are going to have, that is actually taken from SA 320. So when I say I'm going to revise this chapter audit strategy, planning and program, I'm actually trying to revise the two standards on audit. One is SA 300 and the other one is SA 320. So SA 300 is a standard talking about overall planning of the audit of the financial statements, whereas SA 320 is actually talking about determination of materiality and all. See, along with these two standards, I have already told you that out of 13 standards which you are supposed to discuss in the chapter standards on audit, one standard actually I have kept it on hold. Do you remember that? So that standard is SA 450. SA 450, I have kept it on hold. I told that SA 450 will make more sense when we are done with understanding the concept of materiality. So that also we will try to cover here. So when I say I'm trying to revise this chapter, in fact, in this session, in this entire session, I'm going to revise 3 standards now. SA 300 I'm going to revise, SA 320 I'm going to revise, and even SA 450, which is talking about evaluation of the misstatements, that also we are going to completely cover here as a part of this particular chapter's revision. Okay, so that's what going to be the agenda. And one more thing, let me give you a caution here before starting this chapter. See, in this chapter, the concept is very less. The overall concept is going to be very less. Why? Because see, the concept is very small here. Most of the questions in this chapter will be point-wise questions, like what factors you will consider in establishing audit strategy, what are the advantages of audit strategy, what are the benefits of audit strategy, what are the advantages of audit plan, what are the advantages of audit program. So like that point-wise questions will be more. Concept oriented discussion, very limited we are going to have here. Okay, so having said that, first I will take up SA 300 related revision. So we'll try to understand about planning. SA 300 is a standard which is actually talking about a planning of an audit of the financial statements. Guys, if you pay close attention, every activity at our personal level, at our professional level, before we want to do any activity, we do a lot of planning. For example, you're going for a destination, so you're going for a tour. For that, you do a lot of planning. or you are sitting for your examination. For that you are going to do a lot of planning. So for so many of our professional and personal activities, we before we actually start doing that concerned activity, we do a lot of planning. So even when you are doing audit also, for example, there is a client X Limited, they have approached an auditor and asked them to conduct the company audit for them. Now this auditor, whenever he wants to do, before he actually starts doing that audit of the client X Limited, he needs to spend some amount of time in planning his entire audit. Sir, why planning is required? Ignore audit, any activity you take. Why the planning is required? Why? Because if you have a plan in place, the work which you are doing will be in your control. If you have a perfect plan, if you have spent some time on planning an activity, the things will be in your control. You will be able to achieve your outcomes. You will be able to complete the task within the timeline. So if you want to have control over the activity which you are doing, if you want to complete the activities within the time, if you want to complete the activities as expected, as planned, or if you want to achieve the objective of the work, whatever you are doing, we need to definitely spend some amount on planning. Even audit is also not an exception for that. If we want to achieve the objective of the audit, if we want to do the audit in a perfect way, if we want to complete the audit in a timely manner, if we want the audit to be in our control, whatever audit we are doing, that should be under the control of the auditor. So if you want the audit process to be in control, even while doing audit also, you need to spend significant amount of time on planning of audit. Able to understand? So like any other activity, even planning of the audit is also highly important, highly crucial. It will contribute to the effectiveness of the audit. Now, so when it comes to planning of audit, the planning of audit will generally happen in 3 phases. The planning of audit involves 3 steps, you can say, or you can say the planning of audit goes through 3 phases, you can say, or 3 stages of planning, you can say. Whatever names you want to give, you give it. I will simply say planning of audit involves 3 steps or 3 phases it will involve. So planning of audit involves 3 steps, which are: number 1 is, first you have to establish the audit strategy. Number 2, on the basis of that audit strategy, you have to develop an audit plan. On the basis of that audit plan, you have to develop something called audit program. You have to develop something called audit program. So what are the 3 stages of the audit planning, guys? If someone asks you what are the 3 stages of audit planning, number 1 is establishment of audit strategy, then development of audit plan, then development of audit program. So planning of audit actually happens over this 3 phases. Now let us try to understand, what do you mean by this audit strategy? What do you mean by this audit plan? What do you mean by this audit program? So first I will concentrate on strategy. See, strategy is a very simple one. It is the most summarized version of the plan. Nothing but in the audit strategy, what I'm simply going to do is I'm going to decide on time which I require for completing the audit and how many resources I want for completing the audit. At the stage of development of audit strategy, or development of audit strategy simply means coming to a conclusion regarding within what time you are expecting the audit to get completed and with what number of resources you are expecting the audit to get completed. So nothing but I'm going to set the overall scope and timing of the audit. That happens in the audit strategy. Simply, if I have to put, take for example, if my client X Limited, I am the auditor. My client came to me and told, sir, you do the audit for me. Now, first thing what I do in the planning is to complete this audit, how much time I want. For example, I have decided that for completing this audit, I need 10 days of time. And for completing this audit, how many resources you want? You need engagement team, no? I have decided for completing this audit, 15 engagement team members are required. So you have decided that within 10 days of time and with the help of 15 engagement team members, you will complete the audit of X Limited, in which your objective is to obtain reasonable assurance and express the opinion. That is simply your strategy. This is simply your strategy, overall approach which you want to follow to achieve the objective. So this I call it as, simply in this case, I have established my audit strategy. So what is my audit strategy? I want to complete the audit within 10 days of time and I want to complete the audit with the engagement team of 15 members. I have decided on resources as well as time. And during this time of 10 days, with the help of these 15 resources, my objective is to express an opinion on the financial statements of the entity. That's all. This is what the audit strategy done. We are done with audit strategy. We decide on only 2 things: time required for completing the audit, resources required for completing the audit. That's all. Planning process is over? No, that you have just started the planning process. You have just told 10 days you want, 15 resources you want. Planning process is not just over with that. Now what you should do is you have to allocate this time and resources among different tasks which you have to cover in an audit. You have to allocate the time, and whatever resources you have divided, the allocation of time and resources should happen. So now what I will do is I will take a Excel sheet, or I will take one document, and I will list out what are the various activities which are required to be covered in the audit. Take for example, first I need to perform risk assessment procedures. This work is assigned to engagement partner, and two audit assistants will assist him, and the time required for completing this risk assessment procedures is 1.5 days. Then compliance procedures. In the compliance procedures, we need to verify internal controls. There will be internal controls in assets also, liabilities also, incomes also, expenses also. Assets related internal controls will be verified by engagement team member Mr. A. He has to complete the work in half day. Liabilities related internal controls will be verified by Mr. B. He has to complete the work in another half day. Income related internal controls will be verified by Mr. C. That will be completed within 1 day. And expenses related internal controls has to be verified by Mr. D. That for that time allocated is 1.5 days. Similarly, we will have substantive audit procedures. In the substantive audit procedures also, assets will be there, liabilities will be there, incomes will be there, expenses will be there. Who is going to take care of which work? Assets related expenses will be, asset related procedures will be allocated to which person, and how much time is required. So simply, if you observe here, the document which is there here, I simply call it as audit plan. Simply call it as what? Audit plan. So what basically is happening in the audit plan? See, whatever resources, whatever time which I have decided in my audit strategy, that allocation I am doing, the time and resources I am allocating among different tasks. Whatever time I have decided in the strategy, whatever resources I have decided in the strategy, that I am going to allocate it among different tasks which I am required to take care of as a part of my audit. That document which allocates the time and resources among different activities, that I call it as audit plan. Understood? So simply in the audit plan, in the process of development of audit plan, what actually happens is we simply try to allocate time and resources among different tasks which are required to be carried out. Then we have something called audit program. See, actually audit program is the most detailed version of the plan. Audit program is nothing but what? Most detailed version of the plan. We have a quick recap. Whatever we have done till now, in the audit strategy, we have decided time and resources. In the audit plan, we have allocated time and resources. Now, within the time allocated, what exactly needs to be done? The detailed set of instructions, the audit procedures required to be performed, all that detailed instructions will be given in a document called audit program. Take for example, expenses related substantive audit procedures. This work was allocated to Mr. E. The time allocated for him was 2 days. Now this person, Mr. E, while verification of expenses within the time allocated of 2 days, what and all procedures he needs to perform. So I will try to give a detailed instruction. So for example, I am telling in the expenses, try to take a sample of 10%. Whatever expenses are there more than 1 lakh rupees, try to verify inspection. Whatever expenses are there which are more than 10 lakh rupees, try to obtain external confirmation. Right. So, and I'm also telling how much samples I have to take in purchases. So in fact, within this 2 days of time, what and all detailed instructions I have to follow, what and all detailed audit procedures I have to apply. So that details I have to include in one document called audit program. So what is going to be there in the audit program? It contains a series of instructions which are required to be followed in each area, the procedures which are required to be applied, the number of transactions you have to verify. So all that things will be included in a document called audit program. See, there will be audit program for each and every item which is there in a plan. So for assets also there will be audit program, for liabilities also there will be audit program, for incomes also there will be audit program, for expenses also there is going to be audit program. So for each and every activity which is listed out in the audit plan, there will be one detailed audit program which will contain the instructions which are required to be followed and procedures which are required to be implemented. So that detailed document, we call it as audit program. So what actually happens in the audit program? It contains a series of instructions. What instructions the auditor is required to follow, the engagement team is required to follow, what audit procedures that are required to be performed. So the detailed instructions regarding audit procedures to be performed, methods to be applied, techniques to be applied. So all that will be there in a document called audit program. Clear, everybody? So this is what the meaning of audit strategy, audit plan, audit program. And the development of this entire audit strategy, audit plan, audit program, this process we call it as planning of an audit. See, there is a difference between audit plan and planning of audit. Planning of audit is a process. the process of development of audit strategy, audit plan, audit program, that process we call it as planning of an audit. Whereas audit plan means it is a document which contains the allocation of work. Both are actually different. I hope you have understood what I'm trying to say. So planning of audit is a process, the process of development of audit strategy, audit plan and audit program. That process we are going to call it as planning. Whereas audit plan is a document which contains allocation of time and resources. That's it. Clear? And if you see here, between audit strategy, audit plan and audit program, which is the most summarized, audit strategy is the most summarized version of the plan. Is the most summarized version. Which one is a more detailed version? Audit program is a more detailed version. Clear, everybody? So that's all. This is what simply you have to understand regarding the concept. If you understand the differences between audit strategy, planning and program, the questions in this chapter, the concepts in the chapter are going to be very easy. They are just point wise questions. Like if you want to develop audit strategy, what factors you will consider, how audit strategy will assist the auditor. If you want to develop audit plan, what you have to include in your audit plan. If you want to develop audit program, what points you have to consider, what advantages will be there, what disadvantages will be there. All the questions will be like that only. Clear? And one more thing I want to say here, see, between when audit strategy will be developed, before risk assessment procedures or after risk assessment procedures. When we will establish overall audit strategy, before performing risk assessment procedures or after performing risk assessment procedures. First of all, what actually happens in the risk assessment procedures? What we do in the risk assessment procedures? In the risk assessment procedures, we try to obtain an understanding of entity, environment, and its internal control in order to identify and assess the risk of material misstatement. See, in the audit strategy, as I have told, you will decide on two things: the time which you require for completing the audit, the resources which you require for completing the audit. Now, will you decide on this timing and resources before understanding about the entity or after understanding about the entity? After understanding about the entity. So what I want to say here is, first auditor will perform risk assessment procedures. By performing risk assessment procedures, he will get to know about the entity, what is the size of the entity, in what environment it is operating, what internal controls it is having. It will the auditor will try to obtain understanding of these things. On the basis of that understanding, he has to establish the audit strategy. Yes or no? Why? Because without understanding the entity, without understanding environment, without understanding internal controls, how can you decide how much time you want for completing the audit, how many resources you want for completing the audit? Without understanding about the client's business, how you can decide it? Even if you decide without understanding the client these things, will it be appropriate? No, it is not going to be appropriate. So that's why your audit strategy will be accepted, your audit strategy will be reasonable, your audit strategy will be helpful only when you have decided it after performing risk assessment procedures. So risk assessment procedures will happen first, and on the basis of outcome of the risk assessment procedures, auditor is going to develop a audit strategy. Clear and comfortable, everybody? So this is what regarding the introduction. Now with this background discussion, we can easily revise the content which has been given in the questions. Okay, so let us start with the first question. What are the factors which are required to be considered by an auditor in establishing overall audit strategy? So if you want to establish audit strategy, as I've told, first and foremost thing which we will develop is audit strategy. Now, when you are establishing audit strategy, simply you are deciding how much time you want, how many resources you want for completing the audit. So in establishing audit strategy, what factors you will consider? If you are deciding how much time you want for completing the audit, how many resources you want for completing the audit, you will not say whatever comes to your mind. You will take that decision after considering some factors. So what factors you will consider in establishing that overall audit strategy? What things you will keep in mind in deciding that time and resources? So in the answer, they have given the factors. So the following are the factors which we will consider. Number one, we will try to understand characteristics of the engagement. See, how much time I want for completing the audit, that I will come to know only when you know about your client. What is the size of your client? What process, what activities they are doing? How many locations they are having? Yes or no? So first thing which you need to consider is characteristics of the engagement. Nothing but you have to understand about your client's business, how many products they are doing, how many segments they are having, how many locations we have to audit. So first thing you have to consider this factor, then only you have to decide the timing and resources. Number two, even you have to ascertain the reporting objectives. Is there any timeline for submitting your report? How many reports you are required to submit? Is there any management's timetable for completing the audit report? So you will try to understand even reporting objectives of that particular engagement. Then you decide on the timing and resources. And also you will consider certain factors that in the auditor's professional judgment you will feel as significant. So apart from characteristics of engagement, apart from reporting objectives, if you want to, if you feel that as an auditor, there are certain other factors which you feel it as important, even that factors also you will consider in establishing overall audit strategy. Sir, what are the examples of that factors which could be significant in the auditor's professional judgment? So we have here examples like significant industry developments, like recently there was change in industry regulations, there are new reporting requirements, there you will try to allocate extra time. And significant changes in the financial reporting framework might be applicable. Financial reporting framework might have undergone some changes, so that's why you might be required to spend some extra time. Or other recent significant developments such as changes in laws and regulations, etc. So like this, there are, if there are any other factors that in the auditor's professional judgment, if he is feeling them as significant, even that factors also he will consider in establishing overall audit strategy. And even you have to consider the results of preliminary engagement activities. Guys, this we will talk about it later. What are preliminary engagement activities? I will come to this. After that, I will complete this fifth point first. Then we will talk about this preliminary engagement activities in a detailed manner. So one more factor which you have to consider in establishing audit strategy is knowledge gained on other engagements. For example, if for the same client you have performed some other engagement, last year you have done tax audit for the client. In the current year, you are doing company audit for the same client. Now you want to establish for the current year what is the audit strategy. Can you use the knowledge, whatever you have obtained in the previous year's tax audit, in developing audit strategy for the current year's company audit? Yes. See, what I'm trying to say here is there is a client X Limited. For the financial year 2021-22, for this company, you have done the tax audit. The same company asked you to do the company audit for the year 22-23. Now, for this 22-23 company audit, you have to develop audit strategy. In developing this audit strategy, can you use the knowledge which you gained in the last year by performing tax audit? Yes. Even use that knowledge gained on other engagements also for establishing overall audit strategy. So overall 5 factors you have to consider. What are the 5 factors which you have to consider? Characteristics of the engagement, reporting objectives, factors that in the auditor's professional judgment are significant, and even you have to consider the results of preliminary engagement activities and the knowledge which you have gained on other engagements. Now let us focus on this preliminary engagement activities. Important from the examination perspective, please pay complete attention. So what are these preliminary engagement activities? What is the meaning of preliminary engagement activities? You might have heard about this term preliminary. What do you mean by preliminary? Something which has to happen before commencement of certain activities. So when I say preliminary engagement activities means these are the activities which will be performed before actually starting the audit. Before you actually begin, before you actually commence doing the audit, you will perform some activities that I call it as preliminary engagement activities. Sir, what kind of activities will come under preliminary engagement activities? Here I have given the list here. The following activities are included in preliminary engagement activities. What are they? Procedures required to be performed by SA 220 regarding continuation and acceptance of the client relationship. If you remember, as per SA 220 also we have seen, before accepting, before we say yes to the client relationship, we will evaluate 4 factors, no? Checking the integrity of the management, competence, competence of the engagement team members, compliance with the ethical requirements, significant matters which has come across during the previous audit assignments. We'll consider 4 factors or not? Yes. When you are doing, are you doing it after accepting, after starting to do the audit, or before you actually start doing the audit? We will try to do these 4 steps, like checking the integrity of the management, checking the competence of the engagement team members, checking the compliance with the ethical requirements and significant matters consideration. This we will do even before we say yes for the audit. So since we are doing this thing as per SA 220 regarding acceptance and continuation of client relationship, this one activity will fall under preliminary engagement activities. Number 2, evaluating compliance with ethical requirements. Even you will check whether if you accept the audit, were you in a position to comply with the ethical requirements or not. That evaluation also you will do. That also will fall under preliminary engagement activities. And even you will establish an understanding of the terms of the engagement. Nothing but you will draft a engagement letter. You get it signed by the client. So in the engagement letter, terms and conditions all will be recorded. This is also something you are doing before you start doing the audit. So establishment of engagement letter is also one of the preliminary engagement activities. And even you have to communicate with the predecessor auditor. This is the requirement of Chartered Accountants Act itself. So if you are accepting any audit for the current year and for the last year, the position was held by another chartered accountant, you have to communicate in writing with the predecessor auditor, then only you can accept the current year's audit. This is also one of the preliminary engagement activity. Clear, everybody? So when I say preliminary engagement activities, these 4 activities will get covered here. evaluating the factors before accepting and continuing a client relationship, checking the compliance with the ethical requirements, establishing an understanding of the terms of the engagement, nothing but drafting of the engagement letter, and even communication with the previous auditor. These four things, these four factors you will evaluate. These four activities we call it as preliminary engagement activities, and by performing this preliminary engagement activities also you will get some information. Also use that information in establishing the overall audit strategy. See, we need to focus more on preliminary engagement activities. So preliminary engagement activities, we have to talk much more detail. See, this content has been added in the new scheme. This content was not there under old scheme. Okay. So regarding preliminary engagement activities, let us go a little bit deeper. Why? Because it is important from the examination perspective. So as I've told, first preliminary engagement activity, what is that? We need to perform procedures regarding continuation of client relationship and audit engagements. See, not just continuation, guys. Before we accept and continue client relationship, we need to evaluate some factors. First of all, we have to see when we need to take a decision regarding acceptance of client relationship, when we need to take a decision regarding continuation of the client relationship. Very simple, guys. This point I think I have already covered in the nature, objective and scope itself. Assume that some new client with whom you did not work previously, if a new client is coming to you and asking you to do some engagement, what decision you will take here? You will take the decision whether to accept this client relationship or not. Sometimes existing client, the client with whom you have worked in the past, now existing client is coming to you, but he is asking you to do some new engagement. Last year for one client you have done the tax audit. In the current year, the same client is coming to you, but he is asking you to do company audit. So existing client only, but he's asking us to do new engagement. Here also we'll take a decision whether to accept the relationship with the client. Accept this new relationship with the existing client. Sometimes what will happen is existing client only will come to you. He will only ask you to do existing engagement. Like last year I have done the company audit for the client. In the current year, the same client is coming to me and asking me to do the company audit. So here existing client is asking you to do existing engagement. Here we will take a decision whether to continue the client relationship or not. So before you accept the client relationship, before you continue the client relationship, before you take this decision, there are certain factors which you have to consider. There are certain factors which you have to consider. Sir, what are those factors, sir, which I have to consider? So you have to consider integrity of the principal owners, nothing but honesty of the top level management, like board of directors, those charged with governance. Competence of engagement team. Before you say yes to a client relationship, you have to evaluate whether your engagement team members are capable enough, whether you have capability to complete the audit. Accept the audit only if you have capability. If you don't have the capability to complete the audit, stay away from that kind of engagements. And even you need to consider matters that have arisen during current and previous audit engagements. If you have done the last assignments, if you have done some other assignments from the client in the past, so during that previous assignments, if you faced any struggles, even consider that information in saying yes or no to the client relationship. So that's what they say here. It should be ensured that appropriate procedures regarding acceptance and continuation of client relationship has to be followed. And in this point they are telling, when we take a decision regarding acceptance, when we take a decision regarding continuation of the client relationship, nothing but the same thing I have tried to summarize here in this chart. Now in this point they say the factors, actually what matters we will consider, like we will consider integrity of the management, competence of the engagement team members, and even matters that have arisen during previous audit engagements. And also in case of initial audit engagements, you have to even communicate with predecessor auditor, even you have to communicate with the previous auditor before you accept it. So these are the things which you need to perform before accepting and continuing client relationship. Now second preliminary engagement activity, if you pay attention here, the second preliminary engagement activity is compliance with ethical requirements. As an auditor, what are your responsibilities to check regarding the compliance with the ethical requirements that we have elaborated here in detail? The auditor shall continuously evaluate compliance with ethical requirements, whether all your engagement team members are complying with the 5 ethical requirements: integrity, objectivity, confidentiality, professional behavior, professional competence and due care. Whether all your engagement team members are complying with that requirements or not, you have to continuously evaluate. And also you have to check the requirements of independence. You should also check whether your engagement team members are all independent or not. Sir, what is the meaning of independence? Independence means judgment of a person is not subordinate to the wishes and directions of another person. That means you should not Your decision should not be changed according to the wishes and directions of other person. That we call it as independence. And particularly throughout the audit engagement, the engagement partner shall remain alert. Being an engagement partner, you have to remain alert. You have to make observations, you have to make inquiries to check whether any of your engagement team members made any non-compliance with ethical requirements. Throughout the audit, you have to remain alert. And as an auditor, if some matter comes to you, as an engagement partner, if some matter comes to you that engagement team have not complied with ethical requirements, you have to determine appropriate action. In case as an engagement partner you came to know that your engagement team members are not complying with the ethical requirements, you have to take appropriate action. Next, and finally, the engagement partner shall form a conclusion on compliance with independence requirements. And how he can do it? How, as an engagement partner, you can form a conclusion whether there is a compliance with the independence or not. You have to form that conclusion. How you will form that conclusion? You have to obtain relevant information from the firm to identify and evaluate circumstances and relationships that create a threat to the independence. That means you have to first obtain information. What kind of relationship will create a threat to independence? What kind of circumstances will create a threat to independence? First obtain that information. And if you found any breaches, if you found that any of your engagement team member has violated independence, find out is there any threat to independence for the entire audit engagement. And if at all, if you found any threat, take appropriate action to eliminate the threats. In case if you are unable to eliminate the threats, withdraw from the audit engagement altogether. Now, coming to the next preliminary engagement activity. So if you see here, the next preliminary engagement activity will be this one, establishing an understanding of the terms of the engagement. So as we all know, establishing the terms of engagement, nothing but mutual agreement between the auditor and the client regarding the terms and conditions of the audit is also very important. And how do you think that understanding of terms of engagement will happen? That understanding of terms of engagement is going to happen by way of engagement letter. Clear, everybody? Able to understand? So these are the preliminary engagement activities. So whatever content I have explained, that is actually newly added. So very, very important from the examination perspective. So there are high chances for asking a question from the preliminary engagement activities. So whatever it is, so till now we are done with only question number 1. We have understood what are the factors which are required to be considered in establishing overall audit strategy. And as a part of that, we have understood what are the various activities which will be involved in preliminary engagement activities. Till here, everybody comfortable? Now coming to the next question. So we are done with question number 1. Now coming to the next question. So going forward, the revision is going to be very easy and simple. So coming to the question number 2, which is asking about how overall audit strategy will assist the auditor in development of the audit plan. Guys, one more thing here you have to always remember. First, always we will establish audit strategy. On the basis of the audit strategy, we are going to proceed for the development of audit plan. See, why I am telling you this is very frequently they have tested one true or false statements in the examination. So they say that, see, this is actually the true statement, whatever I have highlighted here. So the sentence says, the auditor shall establish an overall audit strategy that sets the scope, timing and direction of the audit and that guides the development of audit plan. So first, auditor is going to establish audit strategy. It is going to set the overall scope, timing and direction of the audit. On the basis of that, we will develop the audit plan. This is what the process. But in the exam, how they will ask you a true or false statement is, they will say the auditor shall establish an audit plan that sets the scope, timing and direction of the audit and that guides the development of audit strategy. This is how they will replace the terms audit strategy and audit plan. So in that case, the statement is going to be false. Why? Because first we will develop audit strategy, which will set the overall scope, timing and direction. On the basis of that, we develop the audit plan, not the other way around. So this question has been tested in the true or false statements multiple times, high chance of testing in the examination once again. So you have to be very careful. So please mark this statement. So now the question is, if you develop overall audit strategy, how that will help the auditor in development of the audit plan? Or sometimes they even might ask you a question, what are the benefits of the overall audit strategy? So even if they ask you the question, how overall audit strategy will assist the auditor in the development of audit plan, or even if they ask you the question, what are the benefits of the overall audit strategy, we are going to write the same thing. So what are the benefits of overall audit strategy? Number 1, you can come to know the resources to deploy for specific audit areas. For which area, how many resources I want. For inventory verification, how many people I want. For purchase verification, how many people I want. For fixed assets verification, how many people I want. So you can take a better decision regarding the resources to deploy. Next one, the amount of resources to allocate, the number of resources to allocate for specific areas. See, actually, the first point they say, when they say resources to deploy, they are talking about expertise. First point, they talk about expertise. In which areas I have to allocate experienced engagement team members, in which areas I have to allocate less experienced team members. Whereas second point is actually talking about number of the resources. See, first question is addressing which resources, nothing but should I engage, should I deploy experienced resources or non-experienced resources. Second point, they're actually talking about how many number. Like for example, in physical verification, I want 5 people. In that 5 people, how many experienced, how many non-experienced. So like this, you can take better decision regarding which resources to deploy and how many number of resources to deploy for each kind of audit area. And also when these resources are required to be deployed, when you have to assign the work to the engagement team member. So this third point is addressing when. Third point is addressing when. Nothing but, for example, if you are starting to do the audit on 1st of April, you are starting to do the audit. See, on the beginning of the audit itself, you don't need 10 engagement team members. Initially, for 2-3 days, you can complete the work with 5 members. And when the risk assessment procedures are completed, then you want 5 more staff. So if you have decided I need 10 engagement team members for completing the audit, might be this engagement team members not required from day one itself. Some engagement team members can join after certain point of time. So that decisions also you can take when the resources are to be deployed. And also if you have an overall audit strategy in place, you can easily manage your resources, you can direct them, you can also supervise them. And also you can betterly plan when the meetings are required to be held, briefing and debriefing meetings among the engagement team members, when these meetings are required to be held, and how engagement partner and manager reviews are expected to take place, when the verification of the engagement team members work should happen. So these meetings you can betterly plan. So if you have overall audit strategy in place, this is how it will assist the auditor in the development of the audit plan. Or as I have told, even if they ask you the question, what are the benefits of overall audit strategy, we are going to write the same answer. Next one. So we have seen 2 questions regarding audit strategy. Now they talk about plan. Sir, what aspects are required to be covered in development of audit plan? So what and all things will be included in your audit plan? So first of all, as I have told, before we develop this audit strategy and audit plan, first we need to perform risk assessment procedures. So we need to obtain information regarding client's entity, environment, and its internal control. So basically, mainly we focus on understanding the entity and its environment. Then we will develop a audit strategy. So that's what they say. The auditor should plan his work to enable him to conduct an effective audit in an efficient and timely manner. And the plan should be developed on the knowledge of client's business. You have to get the knowledge of the client's business, then only you have to develop the audit plan. And in your audit plan, what has to be done? See, in the audit plan, what we do, like I have told you in the introduction, in the audit plan, we will try to allocate the time and resources among different activities. So in audit plan, for which and all activities you have to allocate the time. You have to allocate some amount of time for knowledge of the client's accounting system and internal controls, etc. Nothing but we should allocate some amount of time in the audit plan for performing risk assessment procedures. Number 2, we should also allocate some amount of time for establishing expected degree of reliance to be placed on internal control. Nothing but in our audit plan, we should allocate some amount of time for compliance procedures also. Why? Because in the compliance procedures, we actually try to verify internal controls, whether they are operating effectively or not. And on the basis of that, we will decide whether reliance on controls can be placed or not. So when they are asking you, you have to allocate the time for reliance to be placed on internal controls, they are indirectly referring you to, you have to allocate some amount of time for compliance procedures as well. And also you have to allocate some amount of time for nature, timing, and extent of audit procedures to be performed. Nothing but here they are talking about substantive audit procedures. So in your audit plan, you have to allocate, or you have to cover in your audit plan some amount of time for risk assessment procedures, some amount of time for compliance procedures, and even some amount of time for substantive audit procedures. And guys, if you take for example, if you want to complete the audit within 10 days, will you do the work till the last day? Even on 10th day also you will spend the time on doing the work only? The answer is no. See, if I have planned the audit for 10 days, for 8 days I will allocate the work to my engagement team members. The last 2 days will be kept for discussion, forming a conclusion, coordination among the engagement team members. So when I decided to do the audit for 10 days, I will not keep on doing the work till day 10. So I need the last 2 days for discussing our observations, for having the meetings, for forming a conclusion, drafting the audit report. So all these formalities are required to be completed. So that's why you should even allocate some amount of time for coordination of the work also. Clear and comfortable, everybody? So you should, in your audit plan, you should cover risk assessment procedures, compliance procedures, substantive audit procedures. Don't just allocate all the time for procedures only. Even try to allocate some amount of time for coordinating the work performed between engagement team members. Nothing but for having the meetings, forming a conclusion, drafting the audit report, and all this administrative work. Clear? So these are the various aspects which are required to be covered in an audit plan. Now, so what are the benefits of planning of the audit of the financial statements? Once again, direct straightforward question. If you plan the audit, how it will be benefited? You will come to know which areas require more attention, which areas require less attention. And you can identify and resolve potential problems on a timely basis. You can properly organize and manage the engagement team members. If you have a plan in place, you can manage your engagement team. If you don't have a plan in place, it becomes very difficult to manage your engagement team. Selection of engagement team members with appropriate levels of capabilities. Even if you have a plan in place, you will be able to select more appropriate engagement team members who are deemed fit for doing the work. And also, if you have an audit plan, it will help you to direct and supervise your engagement team members, and even it will promote the coordination of work done by auditors. So these are all the advantages of developing an audit plan. Next one. See, question number 5 is very, very important. See, we are all telling that knowledge of the client's business is important before we can develop an audit plan, audit strategy. So without the knowledge of the client's business, even if we develop an audit strategy and plan, that is not going to be that effective. That we all know. They're not questioning this. They're not questioning this. We all know this. We all agree to the fact that yes, knowledge of the client's business is very, very important before we can start developing audit plan. But the question here is, when I say you have to obtain knowledge of the client's business, what specifically you will try to obtain knowledge about? The question is not about why knowledge of the client's business is important. They're not asking that question. We all know knowledge of the client's business is very important before we can develop the audit plan. But the question here is, okay, knowledge of the client's business is important. But when I ask you, for example, assume you are my article assistant. I call you, we got audit of some client. I called you and told, boss, from tomorrow we are going to do this audit. First thing what you have to do is go and obtain the knowledge of the client's business. Now you are an article assistant. So when I told you obtain the knowledge of the client's business, what you will specifically go and understand about? What things you will try to obtain knowledge regarding your client's business? So that is what this question about. So if you see here, you see the question carefully, knowledge of the client's business, it is one of the important principles in development of overall audit plan. What understanding the auditor shall obtain? They are not asking you why you have to obtain the knowledge of the client's business. They are asking you what you will try to obtain the understanding about. So what you will understand here? See, very common sense. For example, if I ask you, you are my article assistant, if I told you to go and obtain the knowledge of the client's business, what you will try to obtain? First, you will try to know about the industry to which the client belongs to. Is it in the is it in automotive segment? Is it in a FMCG sector? Is it in a metal sector? So first we will try to understand the industry to which our client belongs. A regulatory requirement, what kind of laws and regulations are applicable for it, and other external factors including applicable financial reporting framework. So first you will try to understand what industry your client belongs, what regulatory requirements are applicable, what is their applicable financial reporting framework. These things you will try to understand. And after that, nature of the entity. So once you understood about the external factors, now you will try to understand about internal matters, like what are the operations. For example, if the client is manufacturing entity, is it labor intensive, is it capital intensive? And you will try to understand about ownership and governance structure, who is holding more than 51% of the shares. So what is our governance structure? Types of investment, where the company is going and making their investments. And also you will try to understand how the entity is structured and how it is financed, what kind of financing the client has obtained. So first you will try to understand the external factors. Once you are done with understanding external factors, then we concentrate on the internal matters. And we will also try to obtain knowledge of clients' accounting policies, what accounting policies they are following. Like for example, for charging depreciation, what accounting policy they are following. Are they following SLM or WDV? If they are following SLM, is that method appropriate? So we'll try to obtain understanding of selection and application of accounting principles. And if at all there is any change in the accounting policy, we will try to even understand what is their change, what is the reason for that change also we'll try to understand. And whether entities accounting policies are appropriate. As I have told, whatever accounting policy, whatever accounting policy your client is applying, is that appropriate? That accounting policies also we have to understand. Next thing, we will even try to understand what are the objectives of your client company and what strategies they are following. See, every client will have some risk. We'll try to understand what kind of potential risk every kind of client faces. what specifically your client faces. For example, your client is a FMCG sector. There will be specific kind of risk which are applicable for FMCG sector. Your client is in restaurant industry. A restaurant industry will have certain kind of risk. So we will try to understand what objectives your client is having, what risk they are facing, and what strategies they are following. That also we try to understand. So the entity's objectives and strategies and even related business risks also will try to understand. And here even they give here examples of potential business risk. See, this point they have a high chance of testing in the examination. They might ask you, as an auditor, you should try to understand the potential business risk which your client is facing. Give a few examples of potential business risk. So they are just asking you what kind of risks will be faced by different kinds of organizations. Generally, they are not talking about in specific terms. Generally, what kind of business risk will be there? Examples they are giving here. Number one, failure to keep up to date with new products, technology, or services. This is especially in the case of mobile sector, mobile phones sector, electronic sector. If you don't remain updated with the new technology, you will be thrown out of the industry. Nokia is one of the best example for that. Excessive reliance on a key supplier, product, or individual. See, if you are excessively relying on only supplier, if tomorrow something happens to that supplier, you might also go out of business. That is one risk for certain entities. Lack of personnel with expertise. You are not having enough of staff. You don't have resources who are having expertise in their respective fields. Or insufficient or excessive production capacity. If you don't know what is your supply demand, sometimes you do either excessive production, or sometimes you will do or you will sometimes have insufficient production. This is especially a risk in the case of restaurant industry. If you don't properly estimate the crowd which will be visiting the restaurant, if you have if you have prepared extra food, excessive production, that will go waste. That you can't resell it. For example, if you have made a lower estimation of the crowd, you have prepared a less food, then your customers might go to others. So inefficient, insufficient, or excessive production, or loss of financing. Your client might be losing the finance due to withdrawal of financial support from the bankers, creditors, etc. So like this, different entities will have different business risk. You try to understand that business risk, what objectives they have, what strategies they follow to overcome that. And finally, even you should get to know about entities' financial performance, how they are financially performing over a period of time. So what is their financial performance? Are their profits increasing? Are their profits decreasing? So all these things also you have to understand. Clear? So that is what particularly we will try to understand. Knowledge of the client's business is very important. But if they ask you what exactly you will try to know about the client's business, this is what we will try to know about the client's business. Clear, everyone? Next one. So audit planning is a continuous process. See, like we have told in the risk assessment procedures, understanding of the client's business is a continuous process. And just now I have told that knowledge of the client's business is required for development of audit plan. Previously in the risk assessment procedure, I told understanding risk assessment and internal control chapter, I have told understanding the client's business is a continuous process. And just now in this chapter, we have seen that if we have to develop an audit plan, first we should understand the client's business, then we have to develop the audit plan. And whatever knowledge we have obtained regarding client's business, that can change over a period of time, no? See, even understanding the entity is a continuous process. Even development of audit plan is also a continuous process. Even development of audit plan, development of audit strategy, this is also a what? Continuous process. Sir, what do you mean by audit planning is a continuous process? Throughout the audit, we'll be doing planning only? No, I don't mean that way. When I say audit planning is a continuous process, I don't mean throughout the audit, I'll be doing only planning. See, throughout the audit, if I'm doing only planning, when I will do the audit? So that is not what my intention. So when I say audit planning is a continuous process, what is my intention here is at the beginning of the audit, we'll develop an audit plan. No doubt about it. But if during the course of audit, if at all any change is required to be made to my audit strategy plan, I should be ready to do it. It should not be like at the beginning I have developed an audit plan, I will stick to it no matter whatever happens. You can't say it like that. At the beginning of the audit, we develop an audit plan, and if at all any changes required, we should be ready to make that changes to the audit strategy and audit plan. That is what the meaning of audit planning is, a continuous process. So that's what they say. And once again, one more important statement is there here. Planning is not a discrete phase of an audit, but rather a continual and iterative process. So planning is not just a one-time activity. It is going to be a repetitive, continuous activity. It will happen again and again. That doesn't mean throughout the audit I will be doing only plan. No, at the beginning I will develop the audit plan. Throughout the audit, if at all any change is required, I should be ready to adopt that changes to my strategy and plan. That is what the meaning of the sentence. And planning often begins shortly after the completion of the previous audit, and it will continue until the completion of current year's audit engagement. So for the current year, the planning will begin the moment the last year's audit gets completed, then it will begin and it will keep on going till the time the current year's audit gets completed. And if you plan the audit, what and all should be included in the plan? Here they say once again what and all should be included in the audit plan. So this will be same like the advantages or benefits of audit plan. So that is actually a kind of repetition. You can refer to that. Okay, so this is what regarding audit planning is a continuous process. Next one, sir, preparation of audit strategy and preparation of audit plan, it is whose responsibility? Preparation of overall audit strategy, preparation of audit plan, it is whose responsibility? No doubt it is auditor's responsibility. See, when I say responsibility related terms, engagement partner. Yes, engagement partner is ultimately responsible for development of audit strategy and audit plan. There is no question about it. Do you think engagement partner will single-handedly prepare the audit plan? There is no doubt audit strategy and audit plan are the responsibility of auditor, engagement partner. Do you think engagement partner, without involving anybody, single-handedly will he develop the entire audit strategy and plan? No. He will involve different persons in the development of audit strategy and audit plan. Sir, whom he will involve? Will he involve engagement team members? No doubt about it. So engagement partner will definitely involve all his engagement team members in the development of audit plan. Why? Because if you involve your engagement team members, you will come to know what are the capabilities of your engagement team member, and accordingly you can do better allocation of the work, because of which overall effectiveness of the audit will get improved. So there is no doubt engagement partner is going to involve his engagement team in the development of audit plan. Do you think is there any requirement to involve management, clients management and clients staff also in the development of audit strategy and audit plan? Yes. Even the auditor is required to involve the clients management and staff also in the development of audit plan. Why, sir? Why? Because in various circumstances, you need the help of the client's staff or management to proceed further with your audit. For example, you wanted to conduct inquiry. If you want to conduct inquiry, at that point of time, the client's staff should be available. So if you don't let them know when you are going to conduct the inquiry, if they are not available, your entire audit procedures will get affected. So that's why, yes, there is a requirement to include even the management and clients staff also in the development of audit plan strategy. But one thing you have to be very careful, when you involve the clients staff and management, don't discuss a detailed audit plan with them. Discuss only whatever their involvement is required. Nothing but you let them know when their presence is required during our audit. That's all. Don't discuss the detailed audit plan and audit strategy with the client's management and staff. Sir, why? What will happen? If you discuss the detailed audit strategy and audit plan with the client's management and staff, they will come to know what audit procedures you are going to do, what techniques you are going to follow. Then they will take all the precautions to make sure that no misstatement will come to your notice. So you have to involve, but make sure that you are not discussing the detailed audit plan and audit strategy with the client's management and the client's staff. But no matter how many people you will involve client also, you will involve client's management also, you will involve engagement team also, but ultimate responsibility for development of audit strategy and audit plan is always resting with the auditor. Understood? Next one. So write a short note on changes to planning decisions during the course of audit. I have already told you, yes, during the course of the audit, if required, we are required to make changes to our audit plan. Sir, first of all, why the need will arise to make the changes to the planning decisions? That could be because of unexpected events. Sometimes unexpected events could happen which will require you to make the changes to your plan and strategy. Or sometimes there could be change in conditions, circumstances, whatever are present at the time when you have developed the audit plan. The same circumstances might not be there when you are actually executing it. Then also you might be required to change your audit plan. Or sometimes auditor might come to know about extra information which was not available at the time of developing the audit plan. The time of developing audit plan, you didn't had some information, but now you got to know about that information. Then also you might think of making changes to your audit plan and strategy. So these are all the various reasons why changes to the planning decisions may be required. And if at all changes are required, yes, you are required to make changes to your audit strategy, plan and program. Understood? Next. This is one more important question, ninth question. What are the factors that affect the direction, supervision and review of the engagement team members? See, as I have told, if I got audit of some client, engagement partner will not single-handedly go and do the audit. So there will be engagement team. There will be engagement team. For example, 10 engagement team members have done to the client, have gone to the client X Limited, and they're doing the audit. Now, each and every engagement team member will be given some work, he will do it. Now, these engagement team members, do you think, do they need some direction? Yes, obviously. Why? Because sometimes my engagement team members might not know what exactly needs to be done. For example, one of the engagement team member is a newly joined article assistant. He don't know what exactly needs to be done. Does he require the direction or not? Does he require instructions from the engagement partner or not? Yes. So engagement partner is required to give direction, give instructions to his engagement team, and he has to supervise them. If at all any engagement team member is getting stuck, so who is required to help them? Who is required to supervise them? Engagement partner. Similarly, once the engagement team members have done their respective work, can the engagement partner blindly believe it, or he needs to verify the work done by the engagement team members? Once he needs to verify the work done by the engagement team members work, that means he has to review. So there is no doubt auditor should review, auditor should provide direction, he should supervise, and he should review the work done by engagement team members. But how much amount of direction, what extent of instructions you are required to give, what extent of supervision you have to do, and how much amount of verification you have to do, that depends on what factors. Should you give more direction? Should you give more review? Should you verify more, or should you verify less? This depends on what factors. What are the factors which affect the direction, supervision, and review of engagement team members? Very simple, guys, very simple point. So if your client's operations are very complex, your client is engaged in a complex business, there you require to give more direction, more supervision, more review. If your client is not doing so complex transactions, he is doing simply a retail business, it is not complex, then you give less direction, less supervision, less review. And it also depends on areas of the audit. Sometimes in the client's financial statement, some areas are more complicated. In that areas, I will give more direction, more supervision, more review. Some areas will be less complicated. In that area, I will give less direction, less supervision, less review. It also depends on assessed risk of material misstatement. If the risk of material misstatement is very high, I have to give more direction, more supervision, more review. If the risk is low, I will give less direction, less supervision, less review. And it also depends on competence and capabilities of engagement team members. If the engagement team members are all experienced staff, they have done this kind of audits previously so many number of times, so since they already have experience in this area, I will give less direction, less supervision, less review. On the other hand, my engagement team members are all new, so they don't have enough of expertise in the audit, they don't have enough of capability, they have not done this kind of audit previously, then I will give more direction, more supervision, more review. So these are the various factors which will decide what extent of direction, supervision, and review the engagement partner has to do. And talking about documentation of overall audit strategy and audit plan. See, whatever overall audit strategy you are developing, whatever overall audit plan you are developing, is it required to be documented, or will you throw it away? It is required to be documented. Why? Because during the course of audit strategy and audit plan, we take a lot of crucial decisions, we take a lot of important decisions. So definitely whatever overall audit strategy and overall audit plan, whatever you have developed, that should not be thrown away, that needs to be documented. That needs to be what? Documented. Sir, what and all you will document? So as I've told, you will document your overall audit strategy and developing that overall audit strategy, with whom you had communications, what is your final audit strategy, what is your audit plan, which area was allocated to which person, and if at all you have made any changes to your audit strategy and audit plan, that revised audit strategy and audit plan, and what are the reasons for making that changes to the audit strategy and audit plan. So all that things are required to be documented. So 100% documentation of audit strategy and audit plan is very much required. So with this, basically we are done with most important discussion relating to audit strategy and audit plan. So two components we are done in the planning. The next part, the next few questions, we are going to talk about audit program. The next few questions we are going to talk about audit program, which is the last element of the planning process. So if we discuss that audit program, our discussion of SA 300 will be over. Once we are done with that, then we will take it up materiality. Okay, so let us proceed further now. So let us start talking about audit program. See, we have already seen what is this audit program in our discussion of introduction. So I told that audit program is actually the most detailed version of the audit plan. Nothing but in the audit plan, whatever time we have decided for a particular area, whatever person we have assigned to that particular area, what he is exactly supposed to do, what instructions he has to follow, what procedures he has to follow, how much extent of checking he has to do. So all that things will be included in something called audit program. So the same thing has been included here in the meaning. An audit program consists a series of verification procedures which are required to be applied to each and every item of that financial statement, and we can also call it as implementation guide for audit plan. So we have audit plan in place now. For that we need implementation guide. That implementation guide is actually the audit program. And not just that, in other way, if I have to put it, we detailed plan audit program is nothing but a detailed plan of applying the audit procedures. So whatever plan we have, how we can apply that plan, the detailed audit procedures will be listed down in a document that we call it as audit program. And one more thing here, do you think we can develop one standardized audit program which can suit the requirements of the all clients? Can we have one single audit program which will meet the requirements of all the clients? No, we can't standardize the audit program. What we should do, depending on the requirements of each and every client, we have to customize our audit program. We can't develop one standardized audit program which suits for all the clients. Why? Because client to client transactions change, industry to industries changes will be there. The way in which one entity is operating, the same way the other entity might not operate. Internal controls will change, so a lot of things will change. So we can't develop one single audit program, one standardized audit program. We can't develop it for all the clients. We have to make changes to our audit program, and we have to customize our audit program as per the requirements of each and every client. Sir, what points I have to consider in development of audit program? If you have to develop the audit program, what points you have to consider? We should always stay within the scope and limitation of the assignment. So when developing audit program, you always try to stay within what is your scope and what is your limitation. Include only those instructions keeping in mind your scope of audit and limitation of your assignment. And out of various evidences, determine which evidence is reasonably available and identify the best evidence. So, and you try to include those procedures in the audit program which will try you to get the best possible evidence. So that's what this in the third point. Apply only those steps and procedures which are useful. Don't unnecessarily overload your audit program with unnecessary steps. And consider all possibilities of error. Try to include instructions after considering all different possibilities of error. Then you have to include, you have to develop the instructions. And even you need to include coordination of the procedures also in your audit program. You have to even include the coordination requirements also. Like in the audit program, I have to say the person whoever is verifying the purchases, he has to coordinate with the person whoever is verifying creditors. The person whoever is verifying the sales, he has to coordinate with the person whoever is verifying debtors. So like that, in your audit program, you have to even include the instructions regarding coordination of the works also. Sir, what will be the elements of the audit program? They might also ask you a question, what will be the elements of audit program? Audit program should always be in a written format. Oral instructions will not be enough. You have to develop one standard, you have to develop one written audit program. And in that audit program, you have to include your objectives, and also it should contain instructions which you are giving to your assistants. In that audit program, you have to mention whether reliance on internal controls could be placed or could not be placed. And even you have to include timing, within what time you are supposed to complete all that instructions. The timing is also required to be included, and whatever audit program that you are developing, that should be in line with your audit plan. You should not deviate your audit program with the audit plan. Whatever audit plan you have designed, that that audit program should match with that audit plan, though both should not be contradicting with each other. Next one. And whatever audit program that you have developed, that needs to be periodically reviewed. Like the way we review audit strategy and audit plan and make changes if required, in the similar way, you have to periodically review the audit program. And if you think that yes, change is required to be made to this audit program, you should be ready to make that changes to the audit program. Clear? So like the way we review our audit strategy and audit plan, even audit program is also required to be reviewed on a regular basis. And if at all any changes required, we should be ready to accommodate that changes to our audit program. Clear? Then we have a few set of questions like, what are the advantages of audit program? So what will be advantages? If you have an audit program in place, what will be the advantages? Very simple. It provides the assistants carrying out the audit with a total and clear set of instructions. It will act as a clear set of instructions for my engagement team members. It will give you total perspective of the work, in which area, how much time you have to spend. So it will give you overall perspective of the entire audit. And selection of assistants for the job becomes easier. If you see this advantage is there for audit strategy also, this advantage is there for audit plan also, this advantage is once again there for audit program. Common point, selection of better article assistants or selection of better assistants for the job. Next, there is always a danger of ignoring or overlooking certain books and records. See, sometimes if you don't have a program, what will happen is we tend to forget certain areas. But if you have a program in place, we will not forget any area. We'll try to cover each and every important area in our audit. And the principal, that is the engagement partner, can control the progress of the various audits. You can also have a track of the progress of the audit if you have a program in place, and it serves as a guide for future year audits also. If you have an audit program for the current year, that will help as a guide for the development of audit program for the subsequent years as well. And a properly drawn up audit program serves as evidence in the event of any charge or charge of negligence being brought against the auditor. If at all tomorrow someone is making a claim against you, this person did not do the work properly, this person is negligent, if someone is raising fingers at you, I can show my audit program as a evidence. I can take the protection of the audit program. Boss, see, all these instructions we have followed, still if your opinion has gone wrong, that is because of inherent limitations, not because of our mistake. So even audit program will come to your rescue in case if any negligence is brought against the auditor. And sir, what will be the disadvantages, sir? See, having audit program is not just having advantages, it also comes up with some disadvantages. Sir, what are the disadvantages? The work may become more mechanical. See, some article assistants feel that since audit program we will include all the instructions, some article assistants might feel that, see, here there is no scope for doing any extra work, so my partner is giving me a set of instructions, I have to blindly follow it. So the engagement team members feel that their work is becoming more mechanical, there is no application of mind. And sometimes the program often tends to become rigid and inflexible. Sometimes what will happen is some engagement partners, what they will do is they will develop a audit program for 1 year. The same audit program, they will use it year after year. For 3-4 years, they will use the same audit program. So if they use the same audit program, what will happen is the changes in the client might not get incorporated in the audit program. Because of that, audit effectiveness might be lost. But this can be overcome if the engagement team members remain cautious and year after year they try to understand the changes happening in the client's business and make that suitable changes in audit program. If they are proactive, they can overcome it. But most of the engagement team members, most of the engagement partners will not do it. They will develop one audit program, follow the same thing for 3-4 years. But during this span, when changes in the client's business happens and no respective changes are made in the audit program, it might tend to lose its effectiveness. And finally, inefficient assistants may take shelter behind the program. Sometimes what will happen is some inefficient assistants, those engagement team members who are not so good in their work, what they will do, they will try to take the shelter under audit program. If they are unable to identify misstatement, they will simply say, you did not include that instruction in the audit program. No, that's why I'm not able to find out the misstatement. So inefficient staff might try to take the shelter under audit program. Why? Because in the audit program, clear set of instructions will be there. Take for example, there is some misstatement which is clearly visible. He can easily find out with his common sense. But our engagement team member is a lazy fellow. He did not even identify the misstatement which is clearly visible on the face. And if someone went and asked him, boss, why you are unable to find out the misstatement, this engagement team member is telling, you did not tell me the instruction. So like this, inefficient staff might try to take shelter under audit program in some circumstances, and a very strict audit program, a very rigid audit program may kill the initiative of efficient and enterprising assistants. Sir, what is the meaning of this? As I have told, audit program is going to contain set of instructions, no? So some assistants will be might be very proactive. They always have that initiative mind. So they always want to explore new things. They always want to contribute something extra. But if the engagement partner is very strict, he's telling, I give you 10 instructions, only follow that 10 instructions. It will kill the initiative. So whatever their proactiveness is there, that will be suppressed. So that is also one disadvantage of audit program. So the audit program comes with advantages as well as disadvantages also. Clear, everybody? So with this, we are done with revising audit strategy, audit plan, and audit program. So SA 300 related discussion we are done with. Okay. So next we have to talk about materiality, which is relating to SA 320 related discussion we have to proceed ahead with. So let us now try to revise the content of SA 320. So SA 320 is a standard which is actually talking about materiality. So let us try to understand what exactly is this meaning of this term materiality, how to determine that materiality, and what does SA 320 say about the materiality. We will talk about that in a detailed manner. Guys, if you remember, the term material is very fundamental term which is used in the subject of audit. So if you remember the discussion whatever we had earlier, when we revised the chapter Introduction to Audit, I told that one of the objective of the auditor is to express an opinion whether the financial statements are free from material misstatements. So one of the objective of the auditor is to express an opinion whether financial statements are free from material misstatements. See, in the objectives of the audit, they did not just use the term misstatement, they have joined that term misstatements with another term called material. So what exactly is the meaning of this term material? See, materiality is something which is very relative term. Materiality is something which is very relative, so it is not something which is absolute term. So what is material? See, this the simple dictionary meaning of the term, if I have to give other terms for this term material, I can call it as something which is very significant, something which is very important, something which is very major. So that we call it as material. So what is material? That we can't absolutely define. That we can't absolutely say, see, this much amount, 10 lakhs will be material, 1 crore will be material, 10 crores will be material. We can't decide, we can't define, we can't decide what is material in absolute terms. Materiality is something which is very relative term. Materiality is something which is very relative term. See, whatever is material in all the circumstances, we can't define. So something which is material in one entity might not be material in another entity. So like if I take you back to the example, whatever I have used in the chapter introduction to audit, for example, if you are conducting audit of the Reliance Industries Limited and you came to know that in that entity 1 crore amount of misstatement has happened, this might not be material for you. Whereas if the same 1 crore amount of misstatement happens in an entity which is having a turnover of 100 crore rupees, now you will say, yes, this 1 crore amount of misstatement is material. So what is material? What is not material? That all depends on the facts and circumstances of each and every case. That all depends on facts and circumstances of each and every case. We can't absolutely define the term materiality. It is highly relative term. It is subjective term. It is highly relative term. It is highly subjective term. But the standards have tried to define when we call a misstatement as material. When we are going to call a misstatement as material, the standards say that a misstatement will be considered as material if it could influence the decision of users of the financial statements. Because of a misstatement, if the user's decision is getting influenced, because of a misstatement, if the user is ready to change his decision, such a misstatement, the misstatements which could influence the decision of users of the financial statements, that we are going to call it as a material misstatement. But what is material, what is not material, that has to be decided by the auditor himself using his professional judgment. So the auditor has to use his knowledge, experience and training and determine what is material, what is not material. There is no hard and fast rule anywhere stated. Now, sir, how the materiality will be decided? See, mostly in most of the circumstances, materiality is something which will be expressed in numbers. So in most of the cases, we decide materiality in quantitative terms. This much amount is material, 10 lakhs is material, 1 crore is material, 10 crores is material. So mostly we express the materiality in quantitative terms. But in some cases, some qualitative aspects also could be material. We can define materiality even in qualitative aspects also. Like for example, giving a disclosure regarding going concern is very, very important. So if the management gives some wrong disclosure regarding going concern, that is a material misstatement. See, here I am deciding the misstatement's materiality not on the basis of the value. Sometimes I define whether a item is material or not, even considering the qualitative aspects also, like accounting policies, fundamental accounting assumptions. So these are also material. So don't always assume that when I say materiality, it will always be something which will be expressed in numbers. No, sometimes even qualitative aspects also will be also material. So now how to define the materiality? So we understood we have to express our opinion whether financial statements are free from material misstatements or not. But if I am conducting audit of some so-and-so client entity X Limited, how I will decide in this client X Limited, while I am conducting the audit of this client X Limited, what amounts to materiality, how can I define it? How can I decide this much amount is material, 1 crore is material, 10 crores is material? How can I decide that materiality amount when I'm conducting audit of any entity? Here, SA 320 will tell us an approach. SA 320 will tell us an approach which we are supposed to follow in order to decide that materiality level. Once again, I am telling you, SA 320 will not give you exact rules. SA 320 will only give you approach. So what SA 320 says is you have to decide materiality in such a way that first you need to determine a percentage, and that percentage, whatever you have determined, that has to be multiplied with the benchmark. You have to decide one percentage and you have to choose one benchmark. That percentage, whatever you have chosen, that has to be applied to the benchmark. Sir, you are telling a percentage has to be decided. How this percentage has to be decided? Once again, auditor's professional judgment. The standard did not say it has to be 1%, 2%, 5%. The standard did not say. As an auditor, you use your professional judgment and decide certain percentage. For example, as an auditor, I used my professional judgment and I decided 5% as materiality level. Now this 5% should be multiplied with some benchmark. you have to take certain benchmark. Sir, what is benchmark? Benchmark could be anything from the financial statements. It could be turnover, it could be profit, it could be net profit, it could be gross profit, it could be net worth, it could be total expenses. So like this, any item of the financial statement can be taken as a benchmark. Sir, you are telling these many items can be selected as a benchmark. Out of this, which one I have to choose, sir? Once again, it depends on the professional judgment. Once again, it is going to depend on professional judgment. So any item of the financial statement, any item of asset, liability, income, expense, whatever it is, any item of the financial statement can be taken as a benchmark. Sir, but what has to be selected out of all these options? Which one will be appropriate? That has to be decided by the auditor himself, once again applying his professional judgment. Assume that using my professional judgment, I have decided turnover as a benchmark. Have decided turnover as a benchmark. So I will take this turnover. So assume that the turnover of the company is 100 crore rupees. So I have decided a percentage on my professional judgment. I have taken the benchmark from the financial statements. If I multiply, I will get a resultant value. Here it is 5 crore rupees. So now I will decide 5 crores will be my materiality level. If the misstatements either individually or in aggregate, if they exceed this value of 5 crore rupees, then I will consider financial statements contain a material misstatement. On the other hand, if the client's financial statements contain a misstatement, but this value is less than 5 crore rupees, then I will not consider it as a material misstatement. I will not give the modified opinion. Okay, so what I have told you till now, how to decide the materiality level. So first you have to select a percentage that you have to multiply it with the benchmark. Clear? And what could be taken as a benchmark? All that we have seen. Now, few more things to talk about it here. As per SA 320, materiality has to be decided at two levels. Materiality has to be decided at two levels. One is overall materiality and the other one is performance materiality. So as an auditor, you have to decide materiality at two levels. One is overall materiality and the other one is performance materiality. Sir, what is this overall materiality? What is this for performance materiality? Overall materiality refers to that materiality level which has been set for entire financial statements as a whole. The materiality level which is decided for the financial statements as a whole, that we call it as overall materiality. Take for example, I'm conducting audit of some entity. I have taken the balance sheet. The total assets are 100. The total liabilities are also 100. So I told that I will consider these entire financial statements will be materially misstated if the amount of misstatement exceed 2 crore rupees. So this 2 crores is a materiality level which I have decided for the entire financial statements. So the materiality level decided for the entire financial statements, that I call it as a overall materiality. Now assume that now in this balance sheet the total of the assets is 100. Now I will see the breakup. For example, fixed assets are 50 crore rupees, inventory is 30, trade receivables is 15, cash and cash equivalents is 5 crore rupees. Now what I am doing is, see, if I keep for the entire financial statements a materiality level, sometimes individual misstatements could be there which could be less material when compared with overall materiality, but collectively they could be more material. For example, if I found one misstatement of 5 lakh rupees in fixed assets, so I might feel that, if some 50 lakh rupees of misstatement I have found it in the fixed assets. Now since 50 lakhs is less than 2 crore rupees, I might ignore it. Why? Because it is less than my overall materiality level. Like this small misstatements could be there in other items. But if I compare it with the overall materiality, I can ignore it, which individually might not be material, but collectively when I take the aggregate value, then it could be material. So in order to avoid that risk, what we do is first we decide the materiality level for the entire financial statements as a whole. After that, for each and every item of the financial statement also, we decide one more level of materiality. So for the entire financial statements, I have decided if the misstatement exceed 2 crore rupees, then I will consider entire financial statements as materially misstated. And after that, what I am saying is, for each and every item, I am going to fix a separate materiality level. So I am telling here, if the fixed assets contain 30 lakh rupees of misstatement, I will consider fixed assets as materially misstated. If the inventory contains 10 lakh rupees of misstatement, then I will consider inventory as materially misstated. If the trade receivable contains 5 lakh rupees of misstatement, then I will consider trade receivables are materially misstated. If the cash contains 1 lakh rupee of misstatement, then I will consider cash as materially misstated. So if you pay close attention here, I am deciding the materiality for each item of the financial statement separately. That I call it as performance materiality. And one more thing, between overall materiality and performance materiality, which one will be generally lower amount? Performance materiality will ordinarily be lower than the overall materiality. Overall materiality will be a bigger figure, whereas the performance materiality will be a smaller figure when compared with the overall materiality. So as an auditor, as per SA 320, you have to decide the materiality at this two levels. Everybody comfortable till here? Now, So let us see what else what else the standard says. So we have seen what is this materiality and all, meaning of materiality and all we have seen, and how to fix the materiality. As we have seen, the materiality fixation will happen in such a way that first we will take one appropriate percentage. That appropriate percentage will be applied with the benchmark. And here you have an important sentence which is having a chance of getting tested in the true or false statements. This one: generally, the percentage applied on profit before tax benchmark is usually higher than the turnover benchmark. Very, very important sentence, guys. High chance of getting tested in the examination as a true or false statement. See, assume that you can take anything as a benchmark, no? See, I can take profit also as a benchmark. I can take turnover also as a benchmark. When I take profit as a benchmark, I will apply certain percentage. When I take turnover as a benchmark, then also I apply certain percentage. The percentage which you apply when you take profit as a benchmark will be higher than when compared with the percentage which you will apply when you take turnover as a benchmark. The percentage which you are going to apply when you take profit as a benchmark will be generally higher than the percentage that you will apply when you take turnover as a benchmark. I will give you a simple example. Assume that 100 crores is the turnover of the company. The profit of the company is 10 crore rupees. Now for turnover, if you have taken 1% as benchmark, you are taking turnover as criteria, and you are taking 1% as a 1% as appropriate percentage. So if you multiplied 1% into 100, you will get 1 crores as materiality level. But in order to get the same 1 crore of materiality, if you take profit as a benchmark, that 1% will not be enough. 10% you require. Why? Because profit is a smaller figure when compared with the turnover. So when you take turnover as a benchmark, you are taking a bigger figure. There, even if you apply small percentage also, you will get significant amount as materiality. But when compared with the turnover, profit will be a smaller figure. There you have to go for a bigger percentage in order to get a reasonable figure. Able to understand? I hope you are able to understand with the help of this example. And once again, I am telling you high chances of getting tested in the examination. So what is the sentence? Once again, I will take you through the sentence. This one: generally, the percentage applied on profit before tax benchmark is usually higher than turnover benchmark. So whatever percentage that you are applying when you take profit as a benchmark will be generally higher than the percentage which you will apply when you take turnover as a benchmark. Why? Because profit is a smaller figure, whereas turnover is a bigger figure. Now, as per SA 320, how many levels of materiality you have to decide? 2 levels of materiality. Number 1 is overall materiality. Number 2 is performance materiality. So I have explained in a detailed manner what is overall materiality, what is performance materiality, and which one will be lower. Generally, performance materiality will be lower than overall materiality. Now, what are the factors in identifying benchmark? I told benchmark can be any item of the financial statement. Sir, out of all that options, which benchmark auditor has to choose? That is depending on his professional judgment. But what factors he will consider? See, ultimately, auditor only will decide which benchmark will be appropriate. But in taking that decision, auditor will consider various factors. So various factors auditor will consider, then he will decide, okay, this benchmark will be appropriate. So what factors he will consider? Once again, important paragraph. In so many cases, they have asked this question. In so many attempts, they have asked this question. What are the factors in identifying the appropriate benchmark? So the following are various factors for determining benchmark. As I have told, any of the asset, liability, income, expense, anything can be taken as a benchmark. Sometimes there will be indication in the applicable financial reporting framework itself. The applicable financial reporting framework itself will give you a hint what could be taken as benchmark. Like if you have a look at Schedule 3, Schedule 3 says any item which exceeds 0.5% of the turnover has to be shown separately. That means indirectly Schedule 3 is giving a hint that you can take turnover as a benchmark. It depends on capital structure and ownership structure. It depends on information needs of majority of the users in the industry. See, in FMCG sector, people are more interested to know about revenue than profit. So if I am conducting audit of FMCG sector, I can take turnover as a benchmark. In case of IT companies, people are more interested to know about profits. If I am conducting audit of IT company, I will take profit as a benchmark. And even it also depends on law or regulation. Like for example, if you pay attention to the Income Tax Act, it says any cash payment which exceeds 10,000 that will be disallowed. Now you tell me, while verifying cash payments, what is the materiality amount? 10,000. How you have decided it? As per applicable law or regulation. And what are various examples of benchmark? As I have told, anything could be a benchmark. It could be profit before tax or net profit after tax also could be there. Turnover from continuing operations, gross profit, total expenses, net assets, net worth, whatever it is, everything can be taken as a benchmark. Sir, once I have selected benchmark, for example, considering the above factors, considering these factors, I have decided that turnover will be benchmark. From where you will take this turnover? Turnover is a benchmark. You have decided you want to use turnover. From where you will take this turnover figure? See, if the current year financial statements are ready, from the current year financial statements only you will take the figure. If you are starting the audit after the year gets closed, after financial statements are prepared, then what you can do is you can select the turnover figure from the current year financial statements only. But in case if you have started doing the audit even before current year financial statements are over, then what you will do? Then you will start looking for other sources. So if current year financial statements are ready, from the current year financial statements only we will take the benchmark. In case if the current year financial statements are not ready, then where we will take this figure from? We can go to prior periods financial statements. We can refer interim financial statements, quarterly financial statements we can refer. Even we can take the benchmark from budgets also. Even we can take the benchmark from budgets also. So these are all the various sources from which you can select the benchmarks. Clear, everybody? So this is all the major discussion from SA 320. We have understood what is materiality, meaning of materiality, determination of materiality, levels of materiality, factors in identifying the benchmarks, various examples of the benchmark, and sources for selecting appropriate benchmarks. See, one more point I want to concentrate here. See, generally at the beginning of the audit, we decide this materiality level. Following the techniques, whatever we have seen till now, we will decide the materiality level. See, whatever materiality level that you have decided at the beginning of the audit, are you allowed to revise that materiality level? Yes. Whatever materiality level that we have decided at the beginning of the audit, that can be revised. So sometimes during the course of the audit, there could be change in circumstances. We might get to know additional information, or sometimes what could happen is we might have taken the benchmark from budgeted financial statements. So if the budgeted financial statements are in close range with actual financial statements, no need to revise materiality. But when you have taken benchmark from the budgeted financial statements and the actual financial statements differ significantly from budgeted financial statements, then also you need to revise the materiality level. So I will give you an example for this, but first let me make the point clear. The point I want to convey here is at the beginning of the audit, we decide the materiality level. But during the course of the audit, because of the change in circumstances, if you want to revise the materiality levels, are you permitted to do it? Yes, you have to do it. Then only your audit will be effective. Clear, everybody? So that's what they say here. So yeah, this is the point which I'm talking about. So the overall materiality and the performance materiality may need to be changed as and when the audit progresses. So as and when your audit progresses, you might be required to make changes to your overall materiality and performance materiality. Because of what circumstances? Sometimes there could be change in circumstances. Sometimes you might get to know additional information which might require you to change the materiality levels. Sometimes there will be a change in actual financial results than the anticipated results. So as I have told, assume that you are conducting audit of 22-23. By the time you have started doing audit, financial statements are not yet ready. So you have taken benchmark from budgeted financial statements, from anticipated results. For example, as per the budget, the current year budget is 100 crore rupees. So you have taken that as a benchmark. Now, during the course of audit, year got closed, actual financial statements are ready. See, when the actual financial statements, the actual turnover is also in the range of 90 to 110 crores, no need to revise the materiality. Why? Because actual results are close to budgeted results. But assume that in the actual financial statements, the turnover was only 60 crore rupees. But you have taken the benchmark as per budgeted financial statements, and actual financial statements differ significantly from budgeted financial statements. Now what you should do? Revise the materiality level. So like this, or sometimes there could be an increase in the estimated risk, that also might require you to change the materiality level. Or sometimes auditor might get to know about new aspects regarding the client's business. Sometimes because of the change in knowledge of the client's business, also auditor might be required to revise the materiality level. So these are all the various reasons because of which auditor need to revise the materiality level, and in fact you have to do it. And is there any requirement to document the materiality? Yes, whatever materiality that you have decided, the background workings, how you have chosen the benchmark, what is the overall materiality, what is performance materiality, if at all you have changed the materiality levels, what are the revised materiality levels, and what are the reasons because of which you have changed the materiality levels. All these things are required to be included in the audit documentation. So you have to revise the materiality if required, and whatever materiality related work you are doing, all that determination of materiality, revision, reasons, calculations, everything also should form part of your audit documentation. So this is the major content from SA 320, which is important from the examination perspective. This is the actual concept here in SA 320. I hope you guys have understood that concept of SA 320. Clear? Everybody able to understand till here, able to follow whatever I'm trying to explain? So now since we are done with SA 320 also, as promised, I have one more standard pending for revision, SA 450. I have not yet revised it yet. I told that will be better if we revise it after discussing the concept of materiality. So since now we are done with the materiality, it's the proper time. It's a suitable time actually to discuss or to revise SA 450. So let us try to understand SA 450. See all the content of the standard SA 450, whatever content is there in the standard, that I have summarized in the form of this simple chart. So this is a comprehensive presentation. When it comes to other standards, as you could have observed, I have prepared handwritten charts, but as you know, right, when we keep on writing, our handwriting doesn't cooperate with us in some times. So I was lacking that focus in writing the content of this essay 450. I became a bit lazy when I have to prepare the summary of this essay 450. So what I have done is I have made use of some software, and the chart, whatever I wanted to do by way of handwritten notes, that I have prepared it using some software. But whatever it is, the outcome is before you, and actually it's much better also here. It's actually much better also. Why? Because my handwriting, some people might get to know about it, some people might not understand it, but if we type the information, everybody can watch it, everybody can understand it. Is actually a good thing. If possible, I will try to convert whatever remaining standards, handwritten standards are there. If time permits me, I will try to convert that also into this typed format, and I will upload it. But for the time being now, I did this experiment only on SA 450. So we'll try if time permits. Actually, I'm very much occupied with various other things. If time permits, definitely I will convert all the handwritten charts, whatever are there for essays, into this typed format. Right. So SA 450 actually talks about what? SA 450 is going to talk about evaluation of the misstatements identified during the audit. What does SA 450 talk about? The title itself says evaluation of the misstatements, whatever have been identified during the audit. See, as an auditor, for example, you are an auditor, you are appointed as auditor of the company X Limited. Now, when you start doing the audit, you actually start doing the audit. First, you will perform risk assessment procedures, understand about entity, environment, and its internal control. Then you perform compliance procedures. By that, you will try to verify internal controls. On the basis of that, you decide on nature, timing, and extent of substantive audit procedures. Now, while performing substantive audit procedures, actually, you will find out the misstatements. So by performing these substantive audit procedures, you will find out the misstatements, no? So assume that as an auditor, so let me use some space here. So assume that as an auditor, you are conducting audit of certain client X Limited. Okay. So just give me a moment. So you are conducting audit of the client X Limited. And while conducting this audit, assume that you have found some 10 misstatements. You have found some 10 misstatements. See, the moment you find the misstatements, immediately will you consider it as material or not, or will you immediately modify the opinion? The answer is no. See, practically what will happen is, while I am doing the audit, if I came across any misstatements, especially if I came across misstatements which have been caused because of errors. For example, one simple example I will give you. I came to know that there is certain expenditure. Okay. Some 10 lakhs worth of expenditure is there. It has to be taken to the capital expenditure. It has to be capitalized. But I have seen that the client has charged it to revenue expenditure. The client has charged it to revenue expenditure. Might be the person who is required to pass this accounting entry may not have proper understanding of the accounting standard. So that's why he thought it as a normal expenditure and taken it to the statement of P&L. It was a pure error. So like this, errors also will be there. Sometimes misstatements might have caused because of unintentional matters also. So like this, whenever I came across the misstatements, if I found out the misstatements during the course of the audit, immediately I will not consider it as material or not, and even immediately I will not modify the opinion. So whatever misstatements that I have identified, first as an auditor, what I should do is take it to the attention of the management. I will take it to the management. Sir, while conducting the audit, I have come across these 10 misstatements, and ask the management to correct them. Ask the management to correct the misstatements. So generally what will happen is, once I found out the misstatements, I will take it to the management, ask them to correct the misstatements. See, now if the management corrects the misstatements, that is a good thing, no? The management is accepting their mistakes. Okay, sir, these many errors we have done. Don't worry, sir. We will rectify the misstatements. We will try to pass the rectification entries. So if the management corrects the misstatements, that will be a good thing only, no? Ultimately, who will be benefited? The users of the financial statements will be benefited. So first, if I find the misstatements, whatever misstatements that I have identified, I will go and communicate that with the management and ask the management to correct the misstatements. See, if the management corrected the misstatements, gave the proper effect, then the financial statements will give true and fair view only. No, they are unnecessarily, I will not modify the opinion. When I will actually try to modify is, I have found out the misstatements, I have identified the misstatements, I will take it to the management's attention, I will ask the management to correct them. But if the management is not ready to correct, then whatever uncorrected misstatements are there, I will evaluate the impact of that uncorrected misstatements. If they are material, I will modify the opinion. If they are not material, I will not modify my opinion. So if I try to summarize whatever I am trying to say here, if I am doing the audit, and during the course of the audit, assume that I have found out 10 misstatements. I communicated with management. Assume that out of that, management corrected all the 10 misstatements. Now there are no uncorrected misstatements. So these 10 misstatements I have identified. These 10 misstatements I have identified. And management corrected all that 10 misstatements. Here, uncorrected misstatements will be 0. Uncorrected misstatements will be 0. I will not modify my opinion. Why? Because management has given the effector to all the misstatements. Take another case. Assume that I have found out 10 misstatements. So identified misstatements, the misstatements which auditor has found, that I call it as identified misstatements, are 10. I communicated with the management. Now out of that, management corrected 6 misstatements and management did not correct 4 misstatements. So these 6 misstatements becomes corrected misstatements. I need not bother about it. Why? Because management rectified it, and now the financial statements will not be misleading because of these 6 things. Now, whatever these 4 misstatements are there, they become uncorrected misstatements. They become what? Uncorrected misstatements, and the auditor will consider whether these uncorrected misstatements are material or not. If the uncorrected misstatements are material, then he will modify the opinion. If uncorrected misstatements are not material, he will not modify the opinion. Able to understand? So this is what exactly going to happen in the entire process of the audit. So first, auditor will identify the misstatements, communicate with the management. Now the management might take 2 options. Either they might correct the misstatements, they might not correct the misstatements. If they correct the misstatements, well and good. If they are not correcting the misstatements, they become uncorrected misstatements, and the auditor will evaluate the impact of that uncorrected misstatements and determine whether they lead to materiality or not. If the uncorrected misstatements are material, he will modify. If they are not material, auditor will not modify. As simple as that. Clear, everybody? Able to understand? So this entire evaluation of the misstatements only, they try to explain here in the form of a chart, in the form of material content they have given. That I try to summarize it in the form of a chart. This standard is also newly added standard under the new scheme, high chance of getting tested in the examination. So what is the objective of this standard? As I was continuously telling, every standard will have certain objective. Even SA 450 is also given with specific objective. So what is the objective of SA 450? The objective of the auditor is, the auditor has to evaluate the effect on the financial statements on identified misstatements and uncorrected misstatements. That means as an auditor, you have to evaluate what is the effect of identified misstatements. Sir, what is the meaning of identified misstatements? As I have told, identified misstatement means misstatements found by the auditor. And what is the impact of what is the effect of uncorrected misstatements? What is uncorrected misstatements? As I have told, whatever misstatements that you have identified, you communicated to the management, and whatever management did not correct, that misstatements we are going to call it as uncorrected misstatements. So as an auditor, your objective is to evaluate what is the effect of identified misstatements on the financial statements and what is the effect of uncorrected misstatements on the financial statements. Clear, everybody? Next paragraph, the standard says you have to accumulate all the misstatements identified during the audit. See, misstatement can happen because of variety of reasons. Misstatement can happen from fraud, misstatement can happen from error. In the errors also, different kinds of errors are there. So misstatement can happen because of various reasons. Should the auditor evaluate all the misstatements, or one misstatement he has to evaluate? The auditor should accumulate all the misstatements which has happened because of various reasons. Whatever may be the reason, the auditor has to accumulate all the misstatements. Then he has to analyze what is the collective impact of all that misstatements on the financial statements. So that is what the meaning of this here. A misstatement may arise from variety of reasons. The auditor shall accumulate misstatements identified during the audit. Whatever misstatements he has identified, he has to accumulate all that misstatements other than those which are clearly trivial. Trivial means what? Negligent. So whatever negligent mistakes are there, whatever small misstatements are there, which are very negligible, which are very trivial, that you need not accumulate, that you can ignore it. For example, in the entire Reliance Industries Limited financial statements, I found some 10 rupees of mistake. So this is very negligible, clearly trivial. Trivial means negligible. So if you find some misstatement as clearly trivial, very, very negligible, that you need not accumulate, that you ignore it. So whatever misstatements are there which are not negligible, that you have to accumulate it. Understood? Guys, you have to understand the difference between trivial and materiality. Material means something which is significant. Trivial means almost negligible. You need not bother about it. So that we call it as trivial. Negligible items. Whatever negligible misstatements are there that you can ignore. Other than trivial, other than negligible, whatever items are there that you have to accumulate. All that misstatements you have to accumulate. So consideration of misstatements identified as the audit progresses. So when you start doing the audit, when your audit progresses, whatever misstatements are there regarding that misstatements, what you have to do. So first thing, as I have told, the auditor shall determine whether the overall audit strategy and audit plan need to be revised. So once you have done the audit, for example, you initially did strategy, you initially developed, so pay attention here guys, you developed audit strategy, audit plan, audit program. You performed audit procedures. From that, you obtained audit evidence. On the basis of that evidence, you have found out misstatement. Sometimes what will happen is, after you have found out all the misstatements, sometimes you might feel that whatever audit plan I have followed, that might not be appropriate. I might be required to revise my audit strategy, planning and program. Sir, when you will generally have that idea? So generally, as an auditor, you came to know that initially you thought that, okay, this client is very good entity. In this client, the chances of misstatements happening are very less. So I will allocate less amount of time. You have allocated less amount of time. You have completed the audit in 10 days of time. But within that 10 days of audit only, you found so many misstatements. And you found that whatever estimation I have taken, I have thought in this entity, the chances of happening misstatement are very low. That's why I decided 10 days. But now I came to know, after I got to know about the misstatements, I realized, okay, here the misstatements are very high. So might be I should not have spent 10 days of time. I should have allocated 15 days of time. It will be better for me if I go and spend some extra time in my audit procedures. So that is the first thing which you have to consider. So once you have identified all the misstatements, the first thing what you need to check is, on the basis of the misstatements, whatever you have identified, the auditor shall determine whether whatever audit strategy you have decided, whatever audit plan you have decided, is there any requirement to revise that audit strategy and audit plan that you have to decide. On what basis? On the basis of nature of identified misstatements and the circumstances of their occurrence. Looking at the size of the misstatements, looking at the nature of the misstatements, looking at the circumstances in which that misstatements have happened, you have to make a decision. Is there any requirement to make changes to my audit strategy and plan, that you have to decide. And also, aggregate of misstatements accumulated during the audit approaches materiality determined in accordance with SA 320. For example, as we have just seen, as per SA 320, by doing all the calculation, we decide materiality. No, assume that I came to know that materiality level is 1 crore rupees. After doing all the calculations as per SA 320, I decided materiality level as 1 crore rupees. Now I came to know that after I have accumulated all the misstatements, whatever I have identified during the audit, my misstatement came to 95 lakh rupees. My misstatement came to 95 lakh rupees. Now, since my accumulated misstatement is close to material misstatement, might be close to my material misstatement, close to the materiality level, might be if I spend some more time in the audit, might be I might find more misstatements, and actual misstatement might go beyond my materiality level. So if you come across two circumstances, any of these two circumstances, that is after you have performed audit procedures, after you have identified misstatements, you will accumulate. No, now looking at that misstatements, depending on the nature of identified misstatements and circumstances of their occurrence, and if the aggregate of the misstatements is approaching close to the materiality level decided, sit and analyze once, is there any requirement to make changes to your audit strategy and audit plan. If you feel it is necessary to make changes to your audit strategy and plan, revise your audit strategy and audit plan. Try to spend some more time on performing audit procedures. Might be you will be able to find more misstatements. So that is the first step which you have to do once you have identified the misstatements. Second step, so once you have made the changes to the audit strategy, audit plan, once you have revised or not revised, after you have taken all that decision, next thing what you should do is, as an auditor, you have to request the management. What you have to request the management? I will request the management to examine the class of transactions, account balances or disclosure in order for the management to understand the cause of the misstatement. Sometimes repetitive misstatements you will be able to find out. Then what you will go to the management, or what you will do is go to the management and say, sir, this misstatement is happening very repeatedly. Take some time analyze that particular transaction, analyze that particular account, find out what is the reason why this misstatement is continuously happening. You can request the management to spend some time on that. So if you find some misstatement which is of repetitive nature, you can go to the management, request the management to do a detailed examination of that particular account and find out why, what is the reason, what is the root cause of that misstatement, ask the management to examine. And also you can request the management to perform the procedures to determine the amount of actual misstatement. See, generally you perform audit procedures on sampling. In the sampling only you found some 4 or 5 misstatements. Now you ask the management, sir, find out the reason and find out what is the actual misstatement in the entire transaction. On the basis of sample, I came to know there is 10 lakhs worth of misstatement. You try to do a detailed analysis and try to find out the reason for that misstatement and find out what is the actual misstatement in the entire population. That you request the management to do it. And also ask the management to make appropriate adjustments to financial statements after they have found the cause of the problem, after they have understood the reason for that misstatement, after they have decided the what is actual amount of misstatement. Ask the management to make the changes. As I have told, ask the management to correct that misstatements. So that is the second step in consideration of misstatements. Number 1, we will decide whether there is any requirement to change our audit strategy and audit plan. Number 2, we will ask the management, we will request the management to examine the accounts, find out the cause of the problem, determine the actual amount of misstatement and ask them to do the adjustments to the financial statements. And finally, after you have requested, if the management has examined the transaction and they have detected, so yeah, if you read this, if at the auditor's request, management has examined the class of transaction, account balances and disclosure, and even they have corrected the misstatements also that were detected, the auditor shall perform additional audit procedures to determine whether misstatements still remain. So I told the management, sir, this misstatement is happening. They analyzed the reason. They found out the total amount of misstatement and they even made the corrections also. Management came and told, thank you for bringing that misstatement to our notice, sir. We made the correction to the financial statements. Will you blindly accept? No. If the management is telling they have corrected the misstatements, you will perform additional audit procedures and try to verify, did the management correct all the misstatements or the misstatements are still remaining in the financial statements, that you have to analyze it once again. So that is what the consideration of the misstatements identified as audit progresses. 3 steps, guys. First, we will decide, is there any requirement to change our audit strategy, plan and program. Number 2, you will request the management to make changes to examine the reason, to understand, to determine actual amount of misstatement and make the corrections. The management following your request, they have examined the transaction and corrected the misstatements. Then you have to perform additional audit procedures to find out whether they corrected all the misstatements or any misstatements are still pending, that you will try to verify. Next one. So communication and correction of misstatement. Sir, why communication of misstatement is very, very important? Why can't we just simply decide the impact on the financial statements? You are telling, first, if you identified misstatements, first you have to communicate with the management. Why communication is required? Why can't we completely ignore and proceed with giving a modified opinion? Why? Because as I have told, see, ultimate objective is to make sure that financial statements are giving true and fair view. If you communicate with the management, if they correct the financial statements will not be misleading. No. As I have told, if you give the opportunity to the management to correct the financial statements, they will correct it. If they correct it, financial statements will give true and fair view. Ultimately, who will be benefited? The users of the financial statements will get benefited. And also, if you let the management know that what misstatements are happening, they will also analyze and they will also take precautionary measures and they will try to make sure that in the future these kind of misstatements will not happen and they can reduce the risk. So that's why communication of misstatements is very, very important. So that's what they say here. The auditor shall communicate on a timely basis all misstatements accumulated during the audit with appropriate level of management, unless prohibited by law or regulation. Unless you are prohibited by law or regulation, in all the circumstances, you are required to communicate whatever misstatements you have identified with the management and those charged with governance. Sometimes law will prohibit you. Law will say, if you find any misstatements, don't communicate with the management, because they become cautious and they will try to mislead others. So in some cases, law or regulatory restriction will be there. Unless there is any legal or regulatory restriction, in all the circumstances, whatever misstatements you have identified, first you communicate with the management. Sir, why communication is important? Why? Because if you communicate with the management, it enables the management to evaluate whether those items are misstatements, inform the auditor if it disagrees. See, sometimes what will happen is auditor might have misunderstood. Sometimes there could be mistake from the auditor side also. He is in a wrong perception that it was a misstatement. Might be the actual intention of the transaction is wrong. So if you let the management know, they will explain why they don't treat it as misstatement. Why? Because sometimes auditor also might be under a wrong impression. So if you communicate with the management, the auditor also can rectify his mistake. Sometimes auditor might not understand the transaction properly and might conclude certain item as misstatement. So if you communicate with the management, if they disagree that is not a misstatement, they will explain you why it is not a misstatement, why it is a correct treatment only. Next one, and it after you have communicated the misstatements to the management, as I have told, request the management to correct those misstatements. Sir, why you should give the opportunity to the management to correct the misstatements? Why? Because if you give them the opportunity to correct the misstatements, that will enable the management to maintain accurate accounting books. See, ultimate objective is to make sure that books of accounts and financial statements are accurate. So if you let the management know, if you give the opportunity for the management to correct the misstatements, they will correct it. Ultimately, financial statements give true and fair view. The readers of the financial statements will be benefited because of that. And sir, in case if the management refuses to correct some or all of the misstatements, if the management is not correcting, either some of the misstatements they are not correcting or all of the misstatements they are not correcting, then what you should do? Then as an auditor, you obtain an understanding of management's reason. First ask them. The management is telling, if as an auditor I found 10 misstatements, went to the management and told, sir, these 10 misstatements are there, please correct. Management is telling, no, we will not correct it, we will not correct them. So first, as an auditor, try to understand the reasons why the management is not ready to correct that misstatements. Ask them the reasons. Then, and the auditor shall take that understanding into account while evaluating whether the financial statements are free from material misstatements. Now management will give you some reasons. If you found those reasons are acceptable, see, why management is not correcting is because they are having a valid reason. They are explaining the auditor, sir, actually you understood that item in a wrong way. That is not capital expenditure, that is revenue expenditure only. So management gave me good reasons. Actually, I only misunderstood. Well and good. If the management does not give you valid reasons why they are not correcting the misstatements, then what I will do? Then I will consider the impact on the auditor's opinion. So first, you will communicate with the management, give them an opportunity to correct. If they are not correcting, try to understand the reasons, and on the basis of that understanding, evaluate whether the financial statements are free from material misstatements. Which means, if the management gave you valid reasons why they are not correcting, or might be auditor is only under wrong perception, management explained it, well and good, we will not consider financial statements are containing material misstatement. On the other hand, if the management did not give me valid reasons why they are not correcting the misstatement, then I will conclude that uncorrected misstatements are material and I will give a modified opinion. Understood? Next. So evaluating the effect of uncorrected misstatements. So whatever uncorrected misstatements are there. So first you identified the misstatements, communicated with the management corrected some, uncorrected some. So whatever uncorrected misstatements are there, finally that you have to evaluate, that you have to analyze. So prior to evaluating the effect of uncorrected misstatements, the auditor shall reassess the materiality level determined in accordance with SA 320. As I have told, whatever uncorrected misstatements are there, that you will analyze whether those uncorrected misstatements are material or not. But before you evaluate that uncorrected misstatements, first decide whatever materiality that you have decided, is it required to be revised? Just in the previous standard, I have told because of what circumstances you might be required to revise the materiality. So just analyze once before you evaluate the effect of uncorrected misstatements. Just analyze once, is there any requirement to revise the materiality level, that you analyze it. And then finally, the auditor shall determine whether uncorrected misstatements are material either individually or in aggregate. And so finally, after you have reassessed the materiality level, now you have to analyze whatever uncorrected misstatements are there, are they material or not material? And while making this determination, you have to consider certain factors. So what things you have to consider in determining whether uncorrected misstatements are material or not? Size and nature of the misstatement. Obviously, what is the size of the misstatement? What is the nature of the misstatement? In what circumstances it has occurred, and also what is the effect of the uncorrected misstatements related to prior periods. Sometimes you can even find out the misstatements relating to prior period, even consider the effect of that prior period related misstatements on the current year's financial statements. So after considering all these factors like size of the misstatement, nature of the misstatement, and the uncorrected misstatements of the prior period, consider the effect of all this and finally decide whether uncorrected misstatements are material or not. And even you have to communicate with those charged with governance. Communication not just with the management. As an auditor, you are required to even communicate with those charged with governance also. So what things you are required to communicate with those charged with governance? The auditor shall communicate with those charged with governance regarding uncorrected misstatements and the effect that they individually or in aggregate may have effect on the auditor's report. So whatever you have discussed with the management, out of that, whatever uncorrected misstatements are there, those uncorrected misstatements, and what is the effect of that uncorrected misstatements, because of that uncorrected misstatements, what is the effect on your opinion, all these things you communicate with those charged with governance also once. And the auditor's communication shall identify material uncorrected misstatements individually. In that communication, whatever you are doing with those charged with governance, each and every individual misstatement you try to highlight it. And the auditor shall request that uncorrected misstatements be corrected. If the management is not correcting, at least ask those charged with governance whether they can do something to make the management to correct the misstatements. And the auditor shall also communicate the effect of uncorrected misstatements related to prior periods. If at all, if you find any misstatements relating to prior periods, that also you communicate with those charged with governance. So not just communication with the management, as an auditor, you even try to communicate the misstatements with those charged with governance. And in addition to that, even you are required to obtain written representation from the management regarding the effects of uncorrected misstatements. So even ask the management to give a written representation, ask them to give a written statement why they did not correct the misstatements, because of what reasons they have not corrected the misstatements. Even ask the management to give a written representations regarding uncorrected misstatements, and whatever document, whatever misstatements, whatever communication that you had, everything should be documented. Documentation regarding misstatements identified during the audit. So whatever misstatements that you have identified, everything should be documented, and particularly you have to include in your documentation the amount below which misstatement would be regarded as clearly trivial. As I've told you at the beginning, you have to accumulate all the misstatements other than which are clearly trivial. So how you have decided, on what basis you have decided certain misstatement as trivial? So the basis for your decision regarding trivial misstatements, that you document it. All misstatements you have accumulated, whatever complete misstatements are there, so all that misstatements also you have to include in your documentation. And finally, auditor's conclusion as to whether uncorrected misstatements are material or not. So what is your final conclusion? On what basis you have decided whether uncorrected misstatements are material or not material? Even that also include in your audit documentation. So this is what SA 450 is about. See, this is a revision, so we can't go much deeper into the concept. By now only I have spent close to 20 minutes of time on revision itself, so complete explanation will take even more time, but this is actually a revision. We have to restrict our explanation till here. I can't afford to spend more time on the standard, but I have covered each and every important content from the standard which is relevant for your examination perspective. So please refer this charts and also refer the material once. So with this, we are successfully done with audit strategy, planning and program, SA 320 talking about materiality, and SA 450 evaluation of the misstatements. Hope you guys have understood this. So since we are done with revising the chapter audit strategy, audit planning and audit program, along with that we have also revised SA 320 and SA 450 also we are done with. So now the next chapter which we will take up for revision will be audit in an automated environment. So once again, very important from the examination perspective, this chapter is very small when compared with the previous chapters whatever we have revised. This chapter is going to be pretty small, and not just it is very small, it is also important from the examination perspective. And let me give you one more caution before I go into the details of this chapter. See, you will not be able to find a chapter with this title in the study material. In the study material, you will not find a chapter with the title audit in an automated environment. You will not find this chapter in the study material. Sir, if it is not there in the study material, why you have included in our material? Let me finish it. So what I'm trying to say here is you will not be able to find this chapter separately, but this content is actually integrated in the chapter risk assessment and internal control. So if you open from the study material, the chapter risk assessment and internal control, in that chapter you will be able to find this section audit in an automated environment. But the content here is significant, the content here is important, and if I add this content also in the risk assessment and internal control chapter, the chapter will look very lengthy. So that's why what we have done is we have taken that content audit in an automated environment and we have created altogether a separate chapter. Okay, so whatever content we are reading here, don't search for separate chapter in the study material. If you go and go through the content of the study material of the chapter risk assessment and internal control, you will be able to find this content. So let us now proceed further. Sir, what exactly is this automated environment? What exactly is this automated environment? As we all know today, see, in various business operations, technology is getting used. So everywhere computers are getting used. You take manufacturing entities today, manufacturing entities like automobile companies, they are using the robotic machines. They are highly making use of technology for manufacturing activities like manufacturing of the cars, etc. And you look at some other entities, like for example, you take some companies are there which are exclusively built because of technology. Like you take IT companies, you take e-commerce platforms, you take this food delivery applications and all. See, these companies are there because there is technology. If there is no technology, these companies will not exist at all. So in the organization, various operations like manufacturing, production, HR activities like that, various activities in the organization are happening through the systems. And even accounting is also not an exception. In fact, if I have to say, accounting area is one of the most important area in the organization, which is making high use of technology. So you can find some organizations where production could be manual, where HR activities could be manual. You could find some companies or industries where still production is manual. But today it is very hard to find the companies where accounting is manual. It is very, very difficult to find. So than compared with other areas, especially in the area of accounting, in the area of finance, technology has taken its strong presence. So gone are those days where people used to maintain their manual accounts. So today no one is maintaining the manual accounts. Frankly speaking, no one is maintaining the manual accounts. Why, sir? Why people are not maintaining manual accounts? Because the technology has become cost effective. Technology has become cost effective and technology is offering so many benefits. Today there are accounting softwares which come with a lot of benefits, and because of increased adoption of the technology, the cost of the accounting softwares have also come down. Today we have some subscription models even on the mobile app. So we can have some accounting softwares on the mobile app. By paying some monthly 500,000 rupees, you can pay monthly subscription and use an accounting software. So we have so many accounting softwares available, and even for small business persons, in the GST website, the GST department even give the free accounting and billing softwares. So the technology has become very cost effective and it is coming with so many advantages. So what has actually happened is, in every organization, especially accounts department is computerized. Accounts department is computerized. So the point which I want to say here is, the accounting area, the finance department of every organization is adopting to technology. Today the softwares are getting used, especially in the area of accounts. And being an auditor, we verify the financial information, we verify the outcome of the accounting process only. So don't you think when the entire accounting process is getting done with the help of the computers, don't you think as an auditor we should also adopt to that softwares for doing the audit? Obviously, yes, 100% yes. So now if you are an auditor, today's auditor can't say, I'm very good with accounts, I'm very good with taxation, I'm very good with my financial management, but I don't know how to use accounting software, I don't know how to use Excel, I don't know how to use a system. Will you become a good auditor? Definitely not. You are definitely not going to become a good auditor. So today in this digital environment, if we want to survive even as an auditor, we also should have a good knowledge about computers. We should be aware of softwares which are getting used for accounting. Today we have some softwares available for doing audit. As an auditor, we need to have knowledge even about that auditing softwares also. So this chapter will briefly let us into the world of this automated environment. So as an auditor, why we have to be concerned about information technology? As an auditor, what we should understand regarding clients' automated environment? So what risk IT environment will bring? What kind of controls will be there? So like that, this particular chapter will let us into the world of this automated environment, into this information technology. Okay, so let us go into the details of the chapter now. First of all, let us try to understand what is the meaning of automated environment. What is the meaning of automated environment? The chapter title is Audit in an Automated Environment. So first, let us try to understand what is automated environment. See, automatic, the term automated has been derived from automatic. Automatic means what? If something is happening without any manual intervention, that we call it as automatic. So what is automated environment? Automated environment refers to such a business environment where operations, production, accounting, and even decision making is also carried out with the help of systems. Such a business environment, we are going to call it as automated environment. So what is the meaning of automated environment, guys? So it refers to such a business environment where processes, operations, accounting, and even decision making is also done with the help of the computer systems. Such a kind of business environment, we are going to call it as automated environment. There are other names for automated environment. We call them as information systems, or we also call them as information technology systems. Simply today's business environment. Today, every business environment is an automated environment. Just imagine the functioning of a bank today. How the banks are functioning? In the bank, the operations, daily withdrawals, the transfers, everything is done with the help of system. And even accounting. In the bank, entire accounting is happening with the help of softwares. And even decision making. Which person should be allowed to withdraw how much amount? For example, if in your bank balance 10,000, if in your bank there is only 10,000 rupees of balance, But if you went to the ATM and you have entered the amount for withdrawal of 12,000 rupees, system will reject. It will say insufficient funds in your account. So whether to give the cash to the customer or not to give the cash to the customer, this decision is done by whom? Software. The software which is there in that ATM machine. So the business environment, the best example for automated environment is today's banking environment, in which processes, operations, accounting, and even decisions are also carried out by using computer applications. And this automated environment, we also call it as, there are other names, information systems also we call, information technology systems also we call. Sir, why the companies, why the businesses, why the entities are rapidly adopting to this technology? See, when a business entity spends some amount of money, unless and until they find some advantage in that, they will not do it. So definitely, if the companies of this large numbers are adopting to technology, why they are adopting? Why? Because usage of the technology is giving certain benefits to the companies. Usage of technology is giving certain advantages to the entities. Or there are various features which softwares are offering. So what are that key features of an automated environment? Or even sometimes they might ask you a question, what are the benefits of the automated environment? For that also you can write the same points. So what are that features of automated environment? It enables a faster business operations. Whatever business operations are there, that can happen in a very quicker way. And also accuracy in data processing. See, humans will do a lot of mistakes, but systems, once they have been coded properly, they will not do errors. So which will ultimately increase the accuracy of data and computations. They can process large volumes of data. The softwares can handle large volumes of data. We humans have a limitation, restriction. We can't process large volumes of data. We can process only limited volume of data. But system, if you have enough of resources, it can handle a huge amount of data. Integration between business operations. Today, with the help of softwares, one department can be integrated with another department. Like for example, attendance software can be integrated with the security software, and this attendance software can be linked with the payroll software. Payroll software can be linked with the banking software. So like this, between the systems, between the departments, connectivity can be established with the help of automated environment. And even better security and controls. See, traditionally internal controls are used to get implemented manually. For example, in IT companies, unauthorized person should not be allowed to enter inside the company. Traditionally, how they used to implement this internal control is, there will be a security guard standing at the entry gate. He will check the identity card. On the identity card, a photo will be there. If that photo is matching with the face of the person standing in front of him, then the security guard will allow him inside. Are there any lapses here? Yes. See, sometimes, take for example, a person, an employee who is coming to the software company, he has shaved his head. Then his face will not match with the photo on the identity card. Then security guard will not let him inside. But today, the same internal control, that unauthorized person should not be allowed to enter inside the company, the same internal control is getting implemented with the help of system. How, sir? Biometric. So this biometric function will be more effective. So when internal controls are getting implemented through the system, it offers a better security, and controls also will become improved and less prone to human errors. Like we humans tend to make errors. We have been created in such a way that we tend to create errors. We tend to make errors. But if you have coded the software properly, it will not do human errors. And it will also provide latest and up-to-date information. For example, let me give you an example from accounts perspective only. Assume if manual accounts are maintained. You have run the business for 3 months. You asked your accountant, boss, for this 3 months, I want to know how much profit I have made. And assume that manual accounts are there. What your accountant will say, sir, you give me some 1 week of time. From this 3 months of books of accounts, I will prepare ledgers, I will prepare trial balance, then I will prepare P&L, then I will tell you profit. He will ask 1 week time. But just imagine if you are using accounting software. If you want to know the profit of this 3 months, you need not wait for 1 week. Just with a click of a mouse, you can get the profit from whatever duration to whatever duration you want. So that provision of latest information is possible only with the help of softwares. So today the technology, today the automated environment is offering all these features or benefits. That's why the companies are rapidly adopting to this information technology. Understood? Next one, sir, is IT relevant for audit? Just now, as I have told. So as an auditor, can you say, I have good knowledge of accounts, I have good knowledge of audit, I will not be concerned with information technology, I will ignore the information technology? Can you say these things today? No, as an auditor, you can't say this. Why? Because IT is becoming more and more relevant today. Sir, why IT is becoming more and more relevant today? Because certain activities are getting automated, certain transactions, especially some accounting transactions, are happening within the system. Sir, what kind of transactions are happening within the system? Computations and calculations. Take one simple example. If you have a bank account, once in 6 months, interest will be credited. Do you think a person will sit and calculate your interest and post it to your account? No. The banking software which the banks will use, they will automatically do the calculation and post it. So today, computations and calculations are automatically carried out with the help of systems. And even accounting entries are also getting posted automatically. See, with a lot of effort, you might have read it in your accounts how to pass a journal, from that ledger posting, from that trial balance preparation, from that financial statements preparation. Lot of effort you have put and learned all these things. No, trust me, you will not do any of these things in your practical life. You will not do. So today, only thing what you should know is how to pass a journal entry in the software. So once you pass a journal entry in the software, that will automatically be posted to ledger. From there, it will automatically go to trial balance. From there, it will automatically get reflected in the financial statements. Why? Because everything has been automated. And today we have some softwares available. Even you need not pass the journal entry also, it will be passed by the system automatically. Like for example, if you do a mobile recharge, if you have a SIM, definitely we all use certain SIM. No, for example, I'm using a Geo SIM. If I make a recharge of that Geo SIM, that will get automatically recorded in the books of accounts of Reliance. Even entry also will not be posted. Automatically it will be recorded. So today even accounting entries are also getting posted automatically. Business policies and procedures, whatever policies and procedures of the businesses are there, that is also getting implemented through the system. And reports which are used in business are produced from system. Whatever reports that are getting used in business, from where they are getting generated from systems. Ignore the reports. Whatever financial statements which the users are reading, where that financial statements are getting prepared from system. User access and security is also controlled by systems. Today, which user should have access to which department, which user can go to which room, which user can access which system. So who is deciding all these roles and responsibilities? System. Computer. So today all these activities, especially accounting related activities, are getting automated. So that is one reason why IT is becoming more and more relevant today. And they say even few more reasons supporting the statement why IT is relevant. Why as an auditor you have to be concerned about IT. To support that statement, they give few more reasons. Number one, companies are deriving benefit from use of IT systems as enabler to support various business operations. So today by using information technology, companies are getting more benefited. And as an auditor, you need to understand relevance of these IT systems. Since your clients are using IT systems, as an auditor you have to obtain understanding of IT systems. And even auditor is required to understand, assess and respond to the risk that arise from IT systems. You need to understand what IT systems your client is using. Because of that client's IT systems, what risks they are facing, what your client company is doing to overcome that risk. You have to understand about all this. And even SA 315 also require you to obtain understanding of client's automated environment. SA 315, which is talking about that risk assessment procedures, it says as an auditor you have to obtain understanding of entity and environment. No, so if you do a deeper reading of SA 315, the standard says that understanding of environment includes understanding the client's automated environment also. So even standards on audit like SA 315 is also putting a requirement on the auditor to understand about the client's automated environment. And they give few more situations given below, or few more situations in which IT is becoming more and more relevant. Nothing but guys, if you focus on all these points, they are giving justification why IT is becoming more and more relevant in audit. So few more reasons: increased use of systems and application softwares in business. Today in businesses, so many businesses are making use of softwares. Complexity of transactions when compared with the olden days, today the complexity of the transactions have increased a lot. To handle that complex transactions, you need systems. High-tech nature of business. Today some businesses are existing only because technology is there, like telecommunication business, IT companies. If technology is not there, that business is not there. Volume of transactions. See, even the volume of the transactions have also grown much higher. Just imagine once again banking sector. Today, thanks to this UPI payments and all, even the person who sells the vegetables, that person is also accepting payments through UPI. Just imagine per day through SBI how many crores of transaction will get processed. Do you think will you be able to verify manually all the transactions? No. As an auditor, in those volume of transactions, in those voluminous transactions, you have to make use of some audit softwares. And even regulatory requirements, Companies Act 2013, IT Act 2008. So even laws and regulations are also asking the auditor to understand about IT and to become relevant about IT. And even it is required by Indian and international standards. Some international standards also request the auditor to be concerned about IT. And if you ignore all these reasons, if you ignore all the mandatory requirements, if you voluntarily go and make use of the information technology in your audit, ultimately your audit's efficiency and effectiveness will be increased. So anyhow, there are regulatory requirements. Even if you ignore the even if you ignore the regulatory requirements, you try to do that verification on your own, ultimately you only will be benefited. Clear? Why? Because the efficiency and effectiveness of the audit is going to get increased. So these are all the various reasons why IT is becoming more and more relevant today for the audit. Understood? Clear and comfortable, everybody? Now coming to the next question. What are the points that an auditor should consider while obtaining an understanding of company's automated environment? See, by now you all have agreed that yes, as an auditor, we need to obtain understanding of the client's automated environment. But I'm asking you a question now. Okay, you agree, I also agree that as an auditor, you need to understand about the client's automated environment. We all agree with that. But now my question is, if you are my article assistant, I told you, boss, you please go to the client's premises and try to obtain understanding of client's automated environment. What things you will understand? Just imagine a scenario, just imagine a typical scenario. You are a article assistant under me. I'm an auditor. I got one audit assignment. I called you. I asked you, did you read essay 315? You told yes, sir. You tell me, as an auditor, should you be concerned about client's automated environment? You are telling yes, sir. Our audits are told that as an auditor, we need to be concerned about client's automated environment. I told, very good. Then I'm asking, okay, we got audit of this assignment. Go there and understand the client's automated environment. Just he told that and asked you to go to the client's premises. What you will exactly go and verify regarding the client's automated environment? What exactly you will try to understand regarding the client's automated environment? Very simple. What you have to do is, first you have to go to the client's premises and make a list of all the softwares, whatever they are using. Try to understand their purpose. What software they are using? What is the purpose? Is it for financial purpose? Non-financial purpose? Then try to understand, did they buy that software or they have developed that software in-house? That means they have custom built that software, or they have bought the software over the counter. And is it a local software or is it an international software? Is the software is a standalone software, or is the software integrated with other softwares? Like for example, sometimes there will be connectivity between the software. Try to understand which software is connected with which software. If they have bought the software from the market, like Tally, which version of the Tally they are using? Are they using outdated version or the recent version? Yes or no? So these are the various things which you will exactly try to understand. The same list has been given here. So if someone is asking you what exactly you will try to understand regarding client's automated environment, this is what we will understand. Information system being used. First, we will make a list of all the softwares your client is using. Then we will determine their purpose. For what purpose they are using. Location of IT systems. Are they local or global? Are they local softwares or international softwares? Architecture. That means, are they app based, or you have to go it and access over internet? See, some apps require installation, some softwares you can access it over internet. So try to understand the architecture. What version of the software your client is using? Interfaces within the system. Is there any connection between the softwares? Is it in-house versus package? Did the client develop it internally or they have procured it from the market? Outsourced activities. So whatever, see, just acquiring the softwares alone will not be enough. You need to do the maintenance also. If at all some problem comes, there should be people to resolve. See, what some companies will do is they will recruit the people for maintenance. What other companies will do is they will outsource that maintenance activity to others. Try to understand whether they have outsourced any IT activities and who are the key persons in the organization, who are the key people in the IT organization. Key people in the IT department, like who is CIO, that Chief Information Officer, Chief Information Security Officer, Administrator. Try to understand who are the key IT people in the organization. And whatever understanding that you have obtained regarding client's automated environment, are you required to document it? Yes, that should be included as a part of audit documentation. So whatever understanding that we are getting regarding the client's automated environment, everything should go and sit in my audit documentation. Now, coming to the next part, see, when we use the information technology will not just offer advantages. Along with it, it is also bringing so many disadvantages. When you use information technology, definitely there are advantages, but there are various risks which are arising out of client usage of information technology also. Sir, what are the various risks that are arising from the use of IT systems? What and all various risks today organizations are facing because of IT systems? Number one, inaccurate processing of data or processing inaccurate data. There are two aspects here. Number one is inaccurate processing of data. That means if you have a bug in the software, no matter how much correct data which you input, always you will get wrong output. Inaccurate processing will happen. And also processing inaccurate data. Sometimes system will not be able to differentiate between what is correct data, what is incorrect data. Even if you enter incorrect data also, it will process. Like take for example, you might have filed online application forms. There will be mobile number. Sometimes you are required to enter your mobile number in the online form. See, in the mobile number, you have to enter only numbers. If you enter alphabets, it will not accept. But try entering all ones. For example, 10 digits you have to enter. I'm entering my mobile number as 11111111. Now, if you click submit, it will say OTP has been sent to registered mobile number. That means system is not able to differentiate what is correct data, what is incorrect data. It will process even inaccurate data also. So either it could do inaccurate processing of the data. That means you enter correct data, but processing is wrong. But even it could do inaccurate or even it could do processing of inaccurate data. Even if you enter wrong data also, it will process. So these are two major risks which arise from the use of IT systems: inaccurate processing of data or processing inaccurate data. Unauthorized access to data. Some people who are not supposed to get access to the data, they might get access beyond their powers. They can get access to the data. Direct data changes. Sometimes what people will do, they will not just restrict themselves with seeing the data. They will even go and make the changes to the data also. So that is also one risk. And sometimes people will get some access beyond their requirements. For example, an accountant should have access only to pass accounting entries. He should not be given the power to look at the P&L position. Just for example. So, but because of bug in the software, because of some issue in the software, the accountant is not just passing accounting entry. He is also having visibility of how much profits and losses the company is making. So that means here the accountant is getting the access beyond his requirement. Privileged access he is getting. And also lack of adequate segregation of duties. Sometimes segregation of duties might not be made suitably. That could also cause major damages to the organization. And unauthorized changes to systems or programs. Sometimes some people, what they will do is they will hack the software and make changes to the coding only. Some people will make changes only to the data. Some knowledgeable people, they will even change the original code of the data also. So that is also one more problem. Failure to make necessary changes to systems or programs. Sometimes because of the advancements happening in the industry, you are required to make a change to the software. When you don't change it, that is also a problem. Like for example, assume that you are selling a product. That product, it was attracting 18% of GST. In the software, you have fed that rate for that product is 18%. So whenever you generate the bill, invoice 18% of GST will be automatically added. Recently, there was an amendment. The GST rate was increased from 18% to 28%. If you did not go and make the change to the accounting software, what the software will keep on doing? It will keep on generating the invoices at 18% only. But actually, the rate has changed to 28%. So sometimes you will fail to make the changes to the systems or programs on time. That is also one risk. And most common risk is loss of data. Sometimes system crash might happen. Sometimes some hackers might install some virus or some worms into our software, or sometimes because of some calamities, our servers might get damaged. In that case, the data will be lost. And if you don't have a proper backup, then you are going to face a huge crisis. So these are all the various risks which are arising from the use of IT. And if you came to know that if these risks are not mitigated in your client organization, that is going to have an impact on your substantive audit procedures. That is also going to have an impact on your compliance procedures, and even that will have an impact on the reporting also. Sir, how it will have an impact on the compliance procedures? So if you came to know that your client is implementing internal controls through software, and if you came to know that the client is facing major risk from that software, will you rely on that internal controls? No. If you don't rely on internal controls, what you will do, you will try to perform more substantive audit procedures. That means you will not be able to rely on automated controls, and hence more substantive audit work is needed. Sir, how it will impact substantive audit procedures? If you came to know that the software, whatever the client is using, that is not reliable, you will not be able to use the data directly, whatever is generated from the software. So what you will do is, first you will verify the data from the system is correct or not, then only you will use it for your audit purposes. That means unnecessarily here also your work is getting increased. So your time on audit is getting increased because of IT related risk. And sometimes this if the risks are very severe, as an auditor you might even consider modifying your opinion also. So if the above risks are not mitigated, it is going to have an impact on the substantive audit procedures, it is going to have an impact on the compliance procedures, it will even have an impact on your report, whatever you are going to give on the financial statements. Understood? So these are all the various risks which are arising from the use of automated environment. Next one, write about testing methods in automated environment. If you want to test the client's automated environment, what methods will be suitable. So if we want to test the automated environment, whether client's automated environment is perfect or not, if you want to know it, what methods you will perform. See, as I was continuously telling, throughout the world, whenever we are performing audit procedures, there are only 7 methods available. These 7 methods I have already explained to you in the chapter Audit Evidence. So can you list that 7 methods which are available for performing the audit procedures? Number 1, inspection. Number 2, inquiry. Number 3, observation. Number 4, external confirmation. Number 5, recalculation. Number 4, reperformance. Number 5, external confirmation. Number 5 is external confirmation. So we need to find out of these 7 methods, which methods will be suitable for testing the automated environment. Out of the 7 methods or techniques, which will be suitable for testing the automated environment. Can we do inspection? Yes. What is inspection? Inspection means checking the documents, reading the documents. So you can read the user manuals, control manuals relating to that client's software, and from that you can test the automated environment or not. Yes. So we can do inspection. We can do the documentary examination. From that we can test the automated environment. Can you do inquiry? Yes. We can inquire the people in the organization. By inquiring the people also, you can get to know about client's automated environment. Can you do observation? Yes, you can sit and observe how the software is functioning. From that also, you can get to know how the software is working. Can you do external confirmation? No. Whatever software your client is using, that you can't get to know from outsiders. You have to know it from your client's staff only. And even recalculation or reperformance. See, in the case of automated environment, recalculation, reperformance, both are same. For example, client is using some software. Take for example a banking company. It is using a software which will automatically calculate the interest and post it to the customer's account. I want to know whether this calculations are done correctly or not. What I will do, I will take a piece of paper, calculate the interest on my own and check it with the calculated figure of the software. So here I am doing recalculation, checking arithmetical accuracy, and I'm also doing reperformance. Whatever calculation software has done, I'm independently doing it once again. So when it comes to testing automated environment, both recalculation and reperformance are same. So I will give a combined name, reperformance. You can even do reperformance to test the automated environment. Finally, what? Analytical procedures, sorry. Can you also perform analytical procedures? Can you study the relationship between financial and non-financial item? And from that, can you test the automated environment? No, you can't do. So basically, out of the 7 methods which are available, we can apply 4 methods for testing the automated environment. We can do inquiry, we can do inspection, we can do observation, even we can do reperformance. Any of these 4 things we can do to test the automated environment. But here you have to remember one more thing which is important from the examination perspective. Out of these 4 methods, which one is more efficient? See, efficiency means less time consuming. When I call someone as efficient, okay, let me take some time to explain. Efficiency and effectiveness. See, this term we very frequently use it. Efficient, effective. We often use these terms, but most of the people misunderstand these two terms. They might be under impression that efficient and effectiveness both are one and the same. Not actually. Efficiency and effectiveness both are actually different. Efficiency means the ability to complete the task in less time. Efficiency means what? The ability to complete the task in less time. Effective means doing the work in a perfect way. Doing the work in a perfect way. Doing the work in a best possible way. So efficiency means less time consuming. Effectiveness means doing the work in a perfect manner. So you tell me, out of these 4 methods, which method is more efficient? Which activity we can complete in less time? We can complete in less time inquiries. So out of these 4 methods, the most efficient method is always going to be inquiry. Inquiry is most efficient. It can be completed in less time, but it is not effective. Which one is most effective? By performing which activity will get the best possible evidence? Reperformance will give best possible evidence, but it is time consuming. So inquiry is efficient but not effective. Reperformance is effective, but it is not efficient. So if you want to strike the balance between efficiency and effectiveness, if you want to complete the audit by satisfying both, if you want to compromise, if you want to satisfy on both efficiency and effectiveness, you have to follow the combination of inquiry along with inspection. Who is telling that? Standards is telling that. So if you want to concentrate only on efficiency, inquiry. If you want only effectiveness, reperformance. But if you want to satisfy both, if you want certain combination which will be efficient as well as effective, then you have to go for a combination of inquiry along with inspection. Understood? So these things are very important from the examination perspective. What is efficient, what is effectiveness, and which method is efficient, which method is effectiveness, which method will be efficient as well as effective. Actually, the combination inquiry along with inspection. So very, very important from the examination perspective. Everybody able to understand till here? Comfortable? So now let us try to proceed ahead with remaining questions, remaining concepts from this chapter, audit in an automated environment. So we'll begin with question number 6, which is what is data analytics, and also state its uses in audit. One of the important question from the examination perspective, very frequently tested question in the examination. So let us try to understand what exactly is the meaning of this term data analytics. So very simply, I will try to put it. See, today the data is available everywhere. Today we have terabytes of data available. We are leaving behind tons of data as a part of our usage of the technical devices. Like for example, when we are using our social media platforms, along with when we actually use the social media platforms, these social media platforms are actually getting a lot of data from us. Like for example, if you take the Google, the world's biggest search engine, or the if I could comfortably say it now, the widely used search engine in this entire world is Google. And Google is also offering various other kinds of services as well. Like it is having it is having YouTube, which is catering to the needs of entertainment purposes, and Google is even having the maps, which is even which will help you for your navigation. So Google is freely giving you a Gmail account. Google is also giving you some 15 GB of free storage space. So if you see here, today we all have become so used to the Google ecosystem as a whole. But if you pay close attention, most of the people, most of the things, whatever we are using, most of the products of the Google, whatever we are using, we are not paying even a single penny for that. We are not even paying a single rupee, but we are able to enjoy all these services of the Google. Why? How come? How come Google is able to provide all these services free of cost, but still the Google, that is the parent company of Google company, which is Alphabet Incorporation, still it remains the highly profit making company, most profitable company listed in the New York Stock Exchange. So where do you think this Google is getting money from? Same happens with even Meta. So like you take Instagram, Facebook. So even these platforms also we are using free of cost. But even Meta is also one of the very good profit making company, which is listed on the New York Stock Exchange. So how come these companies, when they are providing all their services free of cost, still they are able to make tons of money, still they are able to remain profitable? How do you think it is possible? So they are actually into two main businesses. This Google you take, or this social media platforms you take, they are mainly into two businesses. Number one, they are into marketing business, they are into advertisement business. Number two, they are into data selling business. They are into data selling business. So actually, when we are Google is not letting us use all their platforms free of cost. We are actually paying the cost by using the Google Meta platforms. We are actually paying the cost, but we are paying not in terms of money. We are paying in terms of giving access to our data. So when we have used our Google account, when we are using YouTube, when you are using our maps, when you are using Gmail, when you are using that any other platform of the Google, actually you are all paying the cost in terms of data, in terms of your data. You are all leaving behind the traces of data with the Google and all the social media platforms. Now what the social media platforms will do with all this data? So what simply the social media platforms will do with this data is they will sell the data. What they will do, they are into the business of selling of data. They will simply sell your data, our data. So whatever data that we are having, our data will be sold by these companies. Sir, who will buy these companies from these social media platforms, sir? So there are plenty of entities who are buying this data. There will be FMCG companies who will be buying this data. There will be advertising companies which will be buying this data. There will be PR companies which will be buying this data. There are political parties which are buying this data. Sir, why these people will buy this data? Because whatever data they have, that data they will use it for the expansion of their business, for planning their marketing strategies. Political parties will use that data for designing their election campaigns to convert the people to in their favor. So like this, all these companies, all these business entities, political parties, they buy all this data and use it for their decision making purposes. But having data alone itself will not do any favor. As I've told, today terabytes of data is available, tons of data is available. See, just having a data alone will not create any edge, or just having access to the data will not create any value addition. So whatever that bulk amount of data we have, whatever that raw data we have, that raw data needs to be analyzed. So just if you have access to the data, that is not going to do any favor for you. That data need to be analyzed, but we can't manually analyze the data. We can't manually analyze the data. So in order to analyze that large volumes of data, today we have some tools and techniques available. Practically, if I have to call it, there are some softwares which are available in the market which will help the entities to analyze those large volumes of data and make some meaningful conclusions out of it. So those tools and techniques which are used to analyze the vast amount of data to make some meaningful interpretation out of it, that we call it as data analytics. At a very in a very easy way, if I have to give you an example, MS Excel. Microsoft Excel is one of the best examples for data analytics tool. Why? Because MS Excel is such a tool which is helpful to analyze the large volumes of data and make some reasonable conclusions out of it. Able to understand what I'm trying to say? So that is what the meaning of the data analytics. So the same thing they try to say here in the definition. The processes, the combination of processes, tools and techniques that are used, the combination of processes, tools and techniques that are used to tap vast amounts of electronic data to obtain some meaningful information out of it, that we call it as data analytics. And today the companies can immensely benefit from the use of data analytics. Sir, why data analytics is growing such rapidly? See, today if you pay attention, the data analytics courses are a highly popular courses among the professionals. Even IIMs and IITs are conducting for the post qualification courses for graduates and working professionals. IIMs and IITs are conducting the post qualification courses on data analytics. So just imagine how much data analytics is growing. So companies can immensely benefit from the use of data analytics in the increase in what ways? By way of increased profitability. By using that data analytics, they can increase their profitability, they can improve their customer service, they can gain their competitive advantage over the competitors, and even they can make their operations more efficient. Similarly, not just companies, even auditors also can make use of that tools and techniques for their audit purposes. Not just companies. Today there are some softwares available in the market. Today there are some tools and techniques available in the market which even auditor also can use for his audit purposes. So we have some softwares like IDEA. So like this, we have this kind of audit software. See, this audit software, even today the technological tools are available which can be used by the auditor to make his audit more effective and efficient. So if those tools and techniques are used by the auditor, if the data analytics tools are used by the auditor for conducting audit, then we call them as computer assisted audit techniques, or CAAT in short. So data analytics means the tools which are used to analyze large volumes of data. If those kind of tools are getting used by the auditor for conducting audit, for obtaining sufficient and appropriate audit evidence, then we call it as computer assisted audit techniques, or even we can call it as CAT, which is actually a short form for computer assisted audit techniques. Clear? Now, sir, how particularly auditor can use that data analytics in audit? How, as an auditor, for what purposes you can make use of data analytics tools in your audit? So we can use it for multiple purposes, like using the data analytics tools, we can check the completeness of data and population. Whatever data the client has given to us, whatever population the client has given to us, is it complete or incomplete? That we can find it out by using some softwares. And even selection of audit samples. So today, as we know, auditor will verify the transactions on sampling basis, sir. But how to select the sample? But how the auditor will select the sample? Today the softwares are doing that job. Today auditor will make use of some softwares to select the samples. And even recomputation of balances, to know whether the balances are calculated properly or not. For that also auditor can make use of data analytics tool. Reperformance of mathematical calculation. Practically speaking, third and fourth point both are same. Recomputation of balances or reperformance of mathematical calculation, both are same. Analysis of journal entries. So today even there are some softwares which will automatically analyze the journal entries and give you unusual circumstances. Today we have some softwares available in the market where you input entire accounting data, where you, for example, if you are using Tally software, if the client is using Tally software, you have to download all the accounting data from the Tally software. That Tally data you input into some software like Idea. Now what this software will do is, this software will analyze all the journal entries which are extracted from this software, and it will automatically highlight what could be problematic transactions. So today we have softwares for even analysis of journal entries as well. And even today the softwares are getting used for fraud investigation also. Today there are some forensic softwares available in the market which are getting rapidly used for fraud investigation. And even today the auditor can make use of data analytics tool to evaluate the control deficiencies. Even to find out control weaknesses also, auditor can make use of data analytics. So very important question from the examination perspective, very frequently tested. So they might ask you a question, how data analytics can be used by the auditor, or how the auditor will get benefited from the use of data analytics tool. This question has been asked a numerous amount of time, very important from the examination perspective. Next, Sir, how the auditor shall assess and report audit findings in automated environment. See, when you have tested the client's automated environment, sometimes you will have some observations, you will have some comments regarding the client's automated environment, you will have some findings regarding client's automated environment. What you will do? You will report it to the management. That's it. If you have any findings regarding the client's automated environment, what you will do? You will report it to the management. So the same thing they will try to say here. At the conclusion of each audit, it is possible that there will be certain findings or exceptions in the client's automated environment. So what you should do? You have to report it to relevant stakeholders. Sir, who could be that stakeholders to whom it has to be reported? It could be management, it could be those charged with governance, etc. And some points what you have to keep in mind while reporting it. First, find out, is there any weakness in internal controls, especially IT controls? If yes, what is the impact of this weakness on the overall audit? And if you find normal deficiency, you report it to management. If you find significant deficiency, that you communicate with those charged with governance. This we have already seen in SA 260 or 65 itself. And what is meant by deficiency in internal control? Have we discussed this? Yes, deficiency in internal control, the same thing we have discussed in SA 265. So deficiency in internal control means you have designed the internal control, but it is unable to prevent, detect or correct a misstatement. Or a control which is required to prevent, detect or correct a misstatement is altogether missing. Both the circumstances we call it as deficiency in internal control. So if you find any deficiency in internal control, report it to relevant stakeholders, and depending on the organization, stakeholders will be there. And if it is a normal deficiency, communicate with the management. If it is a significant deficiency, communicate with those charged with governance. Clear? Next, we have something called digital audit. Sir, what is digital audit? Nothing but doing the audit in this digital environment. We call it as digital audit. Nothing but if you are doing the audit using the digital tools. Today, for example, we are not doing the manual accounts. We are not taking the books of accounts, physical copies, and verifying the entries, supporting documents, verifying physical copies. That we are not doing. Since entire industry, various operations are all making use of technology, even for doing audit also, we are making use of technology. So today, even for doing, we are using audit, we are using systems. We are no longer doing the audit in a traditional way of pen and paper checking, signing, manual checking, all that things we are not doing. So in order to adopt with the changes happening in the industry, since each and every activity is getting digitized, like operations are getting digitized, accounting is getting digitized, HR activities is getting digitized, and primarily whatever financial statements are that are getting prepared, that is also not prepared manually, that is also getting generated by system. So when each and every part of the organization is getting digitized, why not audit has to be digitized? Why don't we do the audit making use of some technology? So that doing of the audit using technology, that only we are going to call it as digital audit. That they try to elaborate it little bit further. Like if you see, entities are embracing digitization. That means so many entities are encouraging that digitization of their operations, and new technologies are even helping companies. So because of adopting to the new technologies, what is happening? Companies are getting immensely benefited, and even companies are restructuring their business models driven by technology. Today the companies are reshaping their business in order to adopt to the technology. And automation is a key to digitization. In such a business environment, use of digital technology is being made even by auditors also, from planning to expression of opinion. So when the companies are adopting to the digitization in each and every area, why not auditors should also adopt the digitization while doing audit, be it planning, be it performing audit, be it expression of opinion? Why don't auditor also should make use of technology? So even today, auditors are making use of artificial intelligence, data analytics, and other latest technologies to help understand business processes in a better way. Not exactly, still artificial intelligence is not getting used in the audit so effectively. At a very lighter level, they are using artificial intelligence in audit, but data analytics is getting used very rapidly. By using such tools, what will happen? Auditor can conduct audit in a better way and devote more attention to areas requiring greater focus. So digital audit is helping the auditors to identify risk, making use of technology. Nothing but simply digital audit means performing the audit using the technology. That we call it as digital audit. They are telling the background for that, advantages of that. That's it. Next one, write about manual elements of the control, automated elements of the control. Sir, what is manual elements in control? Manual element, first of all, we know internal control. What is internal control? A process which is designed to prevent, detect, or correct the misstatement. That we call it as internal control. Now, internal controls might contain manual elements. Internal control might contain automated elements also. I will tell you one simple example. Assume that the company is having a policy. The company wants internal control where unauthorized A company wants to have internal control where it wants to prevent unauthorized people from entering inside the company. This is internal control objective. Now in that there could be a manual element. Sir, how that internal control can have a manual element? So by having a security guard. So security guard, every person going inside the company, he will check the identity card. He will find the photograph on the identity card, match the face, match the photo on the identity card with the face standing in front of him. If both are matching, he will let the person inside. If both are not matching, or if a person wants to enter inside the company without identity card, he will not allow. So this is internal control, but this is a manual internal control. Now the same internal control can be implemented through a system. So what the company has done is at the entry gates, it has installed scanning machines. So if an employee want to enter inside the company, at the main gate, he has to show his identity card. He has to give his biometric. If both are matching, then only the gate will open. If the gate opens, then the only person can enter inside. Same objective, unauthorized person should not be allowed to enter inside the company. But here the control is getting implemented automatically with the help of system. Whereas the security guard is a manual element. For both the controls, objective is same, but one is a manual element, one is automated element. Sir, whether manual element will be better or automated element will be better? Practically speaking, automated elements will be much better. Automated element will increase the effectiveness of controls. Why? Because when there is a manual element in the internal control, there is a chance of lapse. The chances of lapses are very high. The possibility of compromises are very high. The possibility of collusions are very high. Yes or no? But most of these things can be avoided by implementing automated elements. But there will be certain areas where it might not be, where we might not be able to implement controls in an automated way. Sir, when it might not be always possible to implement automated elements in internal control. Number one, when the transactions are very non-routine. See, when there are routine transactions are there, routine transactions can be automated through internal controls. But once in a while transaction is happening. So unusual transactions, if they are taking place, or there is something which is not routine once in a while, or which involves a human element. So in those cases, automated elements might not be possible. In those cases, we have to go for manual elements. But on the other hand, if the transactions are more routine, if the transactions are more regular, if there is a possibility of getting automated, then the organization should always look for automating internal controls. In some cases, it might not be possible. In case if automated elements are not possible, then only the organization should look for manual elements. Why? Because automated elements will make the internal controls more effective than the manual elements. The same thing they try to say here. Manual elements in internal control will be suitable where judgment and discretion are required. Where human judgment is required, where human decision is required, their manual elements have to be incorporated, especially in the areas like large, unusual, non-recurring transactions. If there are any unusual transactions, not something of non-routine nature, then we need to bring in manual element. Circumstances where errors are difficult to define, anticipate, or predict. If there are certain areas, in that areas we can't predict in which manner error will happen, then we can't implement automated controls. See, we can implement automated elements where we know in what different ways error could happen. If we can predict in what different ways errors can happen, then we can design the software. If we don't know in what way error can happen, then we can't define software. We have to rely on manual elements. Similarly, in changing circumstances that require control response outside of the scope of an existing automated control, sometimes the activities will not remain constant. There will be certain areas where constant change will happen. Whenever constant change is happening, there also we can't define a standard program. There also we need a manual element. And also whether automated controls are working effectively or not, to check that we should have manual element. We will implement automated controls, but whether those automated controls are working effectively or not, to check that we need manual elements. So which one will be more reliable? Automated elements will be more reliable than the manual elements. So manual elements in internal control may be less reliable than the automated elements. Why? Because they can be more easily bypassed, ignored, or overridden. When there are manual elements, there is more chance for bypassing that internal control, ignoring that internal controls, or overriding that internal controls. So consistency of application of manual element cannot be therefore assumed. We can't assume that if there is a manual internal control, that manual internal control will always work effectively. We can't assume. Why? Because there is a chance of bypassing it, ignoring it, or overriding it. And then finally we have, sir, when manual controls are suitable, manual control elements may be less suitable. That means now they are talking about when automated controls are more suitable. Here they told where manual elements are more suitable. Now they are telling where manual control element may be less suitable. When they are telling manual control is less suitable, means which one is more suitable? Automated elements are more suitable. So in what kind of areas automated elements are more suitable? When there are high volume of transactions, or in situations where errors can be anticipated or predicted by control parameters. Control activities where the specific ways to perform the control can be adequately designed. Nothing but opposite of these points they are telling. So when you can exactly define what error can happen, when there are large and routine transactions, wherever there is a possibility of automating, there you should always go for automation. In case automation is not possible, then only you should look for manual elements of internal control. Clear? Right. So then we have one more question, guys. This is actually different types of controls in automated environment. So this is something which is very technical. What I would suggest you to do is, when it comes to these types of controls in internal in automated environment, just I would request you to remember the definitions here. So they say broadly two kinds of internal controls will be there. One is general IT controls, other one is application controls. Simply first you have to remember the difference between the two. What is general IT control? The controls which are functioning over entire IT application, entire IT environment. For on the overall IT environment, whatever controls are there, that we call it as general IT applications. For one specific application, if any control is there, that we call it as application control. Say I will give you one simple example. See, simple mobile analogy I will give you. We are all using mobile phones, right? See, in the mobile phones, we keep a screen lock, either by fingerprint or our face scanning or this pattern. You put a screen lock. Screen lock is a general IT control. Why? Because it protects the entire mobile phone. Now, after that screen lock, now for each of the specific applications, some applications you don't want to have others to have access. For example, it might be your gallery, it might be your web, it might be your WhatsApp. Now for WhatsApp, what you will do? For WhatsApp, once again, you will keep a separate app lock. That is an application control. So having a screen lock is a general IT control, with the control which is operating over the entire IT environment. That we call it as general IT control. Whereas this app lock is there, no, that app lock is application control. Why? Because that is specifically working on some specific application. So if I give you one basic example, if I give this example from the industry perspective, take for example, let me put it this way. A person will not be allowed to enter inside the company. An unauthorized person will not be allowed to enter inside the company. See, if you don't allow an unauthorized person to enter inside the company, first, it is protecting the entire organization. That is a general IT control. Next, a system in the accounts department can be opened only by the person who is having accounts ID. A software which is there in the accounts department, that can be accessed by only the employee of that accounts department, and he has to log into that system using his software and password, using his username and password. That is a specific application control. This control is specifically protecting accounts software. Able to understand? So like this, general IT controls are the controls which are protecting the overall IT environment, whereas for each specific application, if a control is specifically mentioned, specifically implemented, that becomes a application control. So you have to understand this basic difference. So general IT controls are policies and procedures that relate to many applications and support the effective functioning of application controls. That means they protect the entire organization, they relate to many applications, and if the general IT controls are strong, they will help the application controls to work more effectively. They apply to mainframe, miniframe, ignore all this technology. And there are different types of general IT controls like data and network operation controls, program change controls, access security controls, application system acquisition and maintenance controls. So just remember the names and what is the purpose. Okay, so this is purely technical, IT technical perspective. So what I want you to do is just you have to remember the name along with objective that you have to buy hard at. So application controls, that is what the meaning of general IT controls. Now when we talk about application controls includes both manual or automated controls that operate at a business process level. At each application level, if the controls are functioning, that will be called as application controls. Then there is one important statement here. General IT controls are needed to support the functioning of application controls. This is one statement which is very, very important. If you want application controls to function effectively, first general controls should be working effectively. So general IT controls are needed to support the functioning of application controls. Now how they can twist this statement in the true or false statements is, they will say application controls are needed to support the functioning of general IT controls. False. It is false. So you have to remember this sentence. General IT controls are needed to support the functioning of application controls, but not the other way around. You should not say application controls are needed to support the functioning of IT controls. No, general IT controls are required to support the functioning of application controls. Clear? So these are the few various kinds of internal controls in automated environment. So this is what overall chapter audit in an automated environment is all about. So the chapter is very small, easy content only, and also highly important from the examination perspective. Hope you guys are able to understand it and you are able to revise it in a better way now. So since we are done with revising the chapter audit in an automated environment, now the next chapter which we will take up for revision will be relating to audit sampling. So the next chapter which we are going to take up for revision is what? Audit sampling. And whatever content which we are about to discuss from this chapter, whatever things we are going to revise from this chapter, all that content has been actually taken from SA 530. So when I say I'm going to take you through the content of the audit sampling chapter, I'm actually trying to take you through the content which has been given in SA 530. So very small chapter, very easy chapter, and that too important from the examination perspective. High chances of getting the question, particularly when it comes to MCQs, true or false statements. In these kind of questions, the scope for testing the questions from this chapter is peculiarly very high. So that's why. So please pay complete attention. Will not take much of a time. We will revise it in a very quick time. So a very easy chapter. So let us have a quick understanding of the provisions, or let us try to have a quick understanding of the contents which have been given under audit sampling. So let us first try to understand what is this exactly sampling. See, the sampling is a term which is not something we are listening or hearing for the first time. We have already come across this term sampling when we understood the concept of inherent limitations in the chapter nature, objective and scope of audit. So if you remember that the auditor has to complete the audit within a reasonable amount of time, the auditor has to complete the audit within a reasonable cost. If the auditor has to complete the audit within reasonable time and cost, he can't go for 100% verification. If he attempts to go for 100% verification, he will not be able to complete the audit within the reasonable time and cost. So that's why what today auditors are doing is, instead of doing 100% verification of all the transaction, instead they are performing the audit procedures on a sample. So instead of doing 100% of the verification, what the auditors are doing, they are selecting a sample from that entire population, and they are actually trying to perform the audit procedures on that sample of the transactions. And on the basis of that audit procedures performed on the sample, they are forming the conclusions on entire population from which they are selecting the sample. So, sir, is it permitted? Is the auditor permitted to do sampling? Yes, standards on audit permit the auditor to conduct the audit by way of verifying the transactions on sampling basis. Even standards have also identified the problems faced by the auditor. Today, if you look at the size of the operations, today you look at the business sizes, take for example Reliance Industries Limited, take for example DMart. So if you just, or take for example Geo Communications. So just if you look at the size of these entities, the number of transactions which will be there in the books of accounts of these kind of entities will be beyond our imagination. There will be crores, lakhs of entries will be there in the books of accounts. Or even you take IT companies, the volume of the transaction is going to be very huge. And in this kind of business environment where volume of the transactions is extremely high, do you think is the auditor in a position to do 100% verification? No. If you ask me, in these kind of business entities where the volumes of the transactions are very huge, if the auditor attempts to do 100% verification, he's trying to do some impossible task. So that's why today 100% verification is in some cases it is not at all possible. Even if the auditor wants to do it, it is not at all possible in today's business. In certain circumstances, the auditor will not be in a position to do 100% verification. It has become close to impossible looking at the volume of the transactions happening today. So that's why standard has also recognized this fact, and they have told, okay, as an auditor, if you want to verify the transactions on sampling basis, you do it. We will permit you. We will not object it. We will not blame you. If you want to do the transactions, if you want to do the audit on sampling basis, do it. The standards doesn't have any kind of specific objection. So standards have given permission. But I have a question for you. Do you think is it mandatory for the auditor to compulsorily verify the transactions on sampling basis? The question I'm asking is there any mandatory requirement? Do you think is a standard putting mandatory requirement on the auditor to compulsorily verify the transactions on sampling basis? Think and tell me the answer. Why I'm asking you to think is, we have a dedicated standard SA 530 talking about audit sampling. We have altogether a dedicated standard which is reserved and talking about the concepts of audit sampling. So think and tell me, do you think is the auditor under a mandatory obligation to compulsorily verify the transactions on sampling basis? The answer is no. The answer is no. No. Just because a dedicated standard is there which is talking about audit sampling, that doesn't mean the auditor has to compulsorily verify the transactions on sampling basis. No, SA 530 never said this. So what actually happens is whether auditor will go for 100% verification or auditor will verify the transactions on the sampling basis, that has to be decided by the auditor himself using the professional judgment. So it is nowhere mandatorily written. It is nowhere statutorily stated that the auditor has to compulsorily verify the transactions on sampling basis. No standard says that. Not even SA 530 says it. So even SA 200 also says the objective of the audit is to express an opinion on the financial statements. That opinion you will express either by doing 100% verification or you will do it by sampling. That is completely up to the choice of the auditor. That is completely up to the professional judgment of the auditor. There is no mandatory requirement. There is nothing statutorily stated anywhere under any standards that mentioning that auditor has to compulsorily go for sampling. No, there is no requirement like that. So it is up to the auditor's choice whether he has to go for 100% verification or he has to go for sampling. That will be decided by the auditor himself. If at all, auditor using his professional judgment, if he has decided, okay, using my knowledge, experience and training, I am deciding that I will verify the transactions on sampling basis. I will not do 100% verification. I will verify the transactions on sampling basis. If the auditor using his professional judgment, if he has taken that decision, then SA 530 will come into picture. Then SA 530 come into picture. So the point which I want to conclude here is SA 530 did not say auditor has to compulsorily verify the transactions on sampling basis. No, SA 530 did not put the mandatory requirement on the auditor to go for sampling. So what SA 530 says is, once as an auditor you have used your professional judgment and once you have taken decision that you will verify the transactions on sampling basis, then I will give you guidance. Then I will tell you what procedures you have to perform. Then I will tell you what precautions you have to take. Then I will tell you what methods you have to follow. Then I will tell you what approaches you have to follow. I hope whatever I'm trying to say, that is going into your brains. So SA 530 is not putting any mandatory requirement on the auditor to compulsorily verify the transactions on sampling basis. See, when actually SA 530 comes into picture is if the auditor using his professional judgment, if he has decided that he will verify the transactions on sampling basis, then SA 530 will come into picture. Then in that case, SA 530 will try to give the guidance to the auditor. It will tell him some approaches. It will tell him some precautions which are required to be taken. So then SA 530 will come into picture and give the guidance to the auditor. Whereas on the other hand, if the auditor using professional judgment, he has decided that I will do 100% verification, in this case SA 530 has no role to play. In case in certain audit, if the auditor has decided I will not go for sampling, I will do 100% verification, if the auditor has taken this decision, in those cases SA 530 is not having any role to play. In those cases SA 530 will not be applicable. SA 530 will become applicable only when the auditor has taken the decision that he will verify the transactions on sampling basis. If he has taken that decision, then only SA 530 is having certain role to play there. Understood? So this is one thing you have to always keep in mind. Verifying the transactions on sampling basis not mandatory requirement. It is completely up to the choice of the auditor, that can be taken by him using his professional judgment. So I hope everybody is clear with this. Now let us come to the point. Sir, you are telling audit sampling, audit sampling, audit sampling. What is the meaning of audit sampling? Is there any definition to the term audit sampling? Yes, there is a technical definition. But before we try to understand the technical definition, let me try to explain the concept of sampling from other than audit perspective. We'll take one simple analogy to understand what exactly is the meaning of this sampling. Other than audit example, we will take. Take for example, there is a classroom. In the classroom, there are 100 students. So take for example, you are watching to this live class. So assume I'm standing in front of you and teaching the class, and in that class 100 students are there. Now I want to know whether the students who are attending my class, whether they are having good conceptual understanding of the auditing or not. I want to know. So there are 100 students sitting in front of me and I have taught them auditing subject. So I want to know now whether the students who have attended my class, whether they have a good conceptual clarity about the subject of audit. I want to know. Now these entire 100 students on which I want to form a conclusion, this I call it as population. This I call it as population. Some large mass of data, I'm going to call it as population. So these are the 100 students I'm going on which I want to form a conclusion. So this 100 students becomes my population. but I want to know the understanding of the class, but I don't have enough of time, enough of resources to go to each and every student, ask him questions and get the understanding. I can't afford that much amount of time. I want to form a conclusion on entire class, but I can't afford that much amount of time where I can go to each and every student, ask him the questions, analyze his understanding. I can't do it for every student. So what I have done is, I thought one thing. So I will do one thing. Out of this 100 students, randomly I will pick 10 students. Randomly I will pick 10 students. So out of the 100 students, I have picked up 10 students. So from the population of 100 students, I have specifically picked up 10 students. Now these 10 students will become my sample. Now these 10 students will become my sample. On this sample, I will perform some work. I will perform some procedure. I will perform some task. So to these 10 selected students, what I'm going to do is, I'm going to ask them certain questions. I will go to each of the 10 students, ask the questions, and they will give me the responses. Now on the basis of responses given by these students, I have to form a conclusion. I have asked the questions to 10 students and those 10 students have given me answer. Now I have to form a conclusion. So on the basis of results, whatever I have got from asking the questions to the students, I want to form a conclusion. Now you tell me, whatever results I have got, on that basis, will I form conclusion only on this 10 students, or will I form a conclusion on the entire class? I will form a conclusion on the entire class, not just the sample. So the point which I want to make here is, in sampling, what we do is, we perform some procedures, we perform some tasks on a sample, and on that basis we get some results. On the basis of that results, we want to form a conclusion not just on the sample. I don't want to form conclusion only on this 10 students. I want to form a conclusion on the entire class. I want to form a conclusion on the entire population. Able to understand? So if you apply the same analogy to the audit, you will get to know what is audit sampling. Take for example, I am conducting audit of some client X Limited. While conducting the audit of this client X Limited, I came to know that there are so many purchases transactions. There are a total of 10,000 purchase entries are there. So now this total 10,000 purchase entries will become my population of purchase entries. But I don't have enough of time to verify each and every transaction. So what I have done is, I will do one thing. From these 10,000 transactions, I will select 1,000 items. Now this 1,000 becomes my sample. Now this 1,000 becomes my sample. I will perform audit procedures on the transactions which have come into my sample. By performing that audit procedures, I will get the results. On the basis of that results, I will form a conclusion about the entire population, about entire purchase transactions. I will form a conclusion on the basis of results, whatever I get from the sample. For example, in the 1,000 items, whatever I have selected, I did not find any misstatement. Then I will form a conclusion that entire purchases does not contain any material misstatement. If in this sample I found a misstatement, then I will form a conclusion that the entire purchase population is containing a material misstatement. Able to understand? So whatever concept I have explained you here, whatever example I have given you here, if we put the same thing into technical terms, we get the definition of the audit sampling as given under SA 530. So if we have a look at the definition given as per SA 530 regarding audit sampling. So audit sampling, it refers to application of audit procedures to less than 100% of items in the population. You are performing audit procedures, but not on 100% of the items in the population. To less than 100% of items in the population, you are performing audit procedures. When I say less than 100%, that could be 5% also, that could be 10% also, that could be 20% also, that could be 90% also. But the thing is, you are not performing audit procedures on the entire 100% of the transactions. You are performing audit procedures on less than 100% of the items in the population. And on the basis of that, you want to form a conclusion on the entire population from which the sample is selected. We will perform procedures to less than 100% of the items in the population, but on the basis of that, you are going to form the conclusion on the entire population, not just on the sample whatever you have selected. So the same thing I try to explain it here in the form of all this example. Now, what is the objective of SA 530? Why SA 530 has been given? SA 530 has been given to provide the assistance to the auditor how to betterly perform the audit procedures on the sample and how to form the better conclusions regarding the entire population. So SA 530 has been given with the objective of helping out the auditor how he can do better sampling so that he can form better conclusions about entire population. To help the auditor in that matter, SA 530 has been given. That is actually the objective of auditor as per SA 530. Understood? So we understood the basic meaning of the term audit sampling and what is the objective of SA 530. Now let us try to proceed further with the next important concept. We'll try to proceed further with the next important concept. We will have a look at it. So the next important concept from this chapter is various approaches to sampling. So the next important concept from this chapter is approaches to sampling. So there are broadly two approaches to the sampling. Very important concept, guys. Please listen carefully. So if an auditor wants to select a sample from the entire population, see, just take the previous example, whatever I have used, there are total 10,000 transactions are there. There are total 10,000 transactions are there, purchase transaction. Out of that total 10,000 transactions, I want to select a sample of 1,000 transactions. Out of total 10,000 population, I want a sample of only 1,000 transactions. Now, how to select that 1,000 transactions? How to select that 1,000 transactions? So when it comes to selecting the sample, there are basically two approaches. There are broadly two approaches. So the two broad approaches to sampling are, number one is statistical sampling. Number one is statistical sampling, and the other one is non-statistical sampling. Number one is statistical sampling, and the other one is non-statistical sampling. So let us try to understand what exactly is a statistical sampling, what exactly is non-statistical sampling, how do they differ from each other. Let us try to understand that in a detailed manner. So statistical sampling refers to such a sampling where there will be random selection. What will be there? Random selection will be there. Where in the statistical sampling, sir, what is random selection? Random selection means each and every item of the population will have an equal chance of selection. I will not show partiality to any item. I will not give priority to any item. I will give equal chance of selection for each and every item in the population to come into my sample. That is what I call it as random selection. So first point, in the case of statistical sampling, there will be random selection. Every item will have an equal chance of selection. Since I'm giving every item an equal chance of selection, this method can also be called as objective method. This method is very objective. Objective in the sense unbiased. Here sample selection will happen in an unbiased manner. And here in the statistical approach, I'm going to make use of mathematical theories, and I'm also going to make use of probability theories. I'm going to make use of mathematical theories, and I'm going to make use of probability theories, globally accepted concepts I'm going to use. So that's why we call it as, this method is going to be more scientific. This method is going to be more scientific. Why? Because we make use of scientific methods like mathematical concepts and probability theories we use, then and we resultantly we select this sample. So the sampling approach, which is having these characteristics, what are the characteristics of statistical sampling? There will be random selection. The selection is going to happen in an objective manner, and this method is scientific. Why? Because we are going to make use of mathematical theories and probability theories. So then what is non-statistical approach, sir? When I say non-statistical approach, what does that mean is the approach which does not have the characteristics of statistical sampling. That means in the case of non-statistical sampling, there will not be any random selection. I will not give equal chance of selection for each and every item. Since I'm not giving equal chance of selection, this method is not going to be objective. And in this method, I'm not going to make use of any scientific approach. I'm not going to make use of any mathematical theories and probability theories. Sir, if none of the features of the statistical sampling are there in the non-statistical sampling, then on what basis we will select the sample, sir? In the cases of non-statistical sampling, the sample will be selected purely on the basis of professional judgment. The only thing which will be done in order to select the sample in the case of non-statistical sampling is what? Purely professional judgment. If we select the sample exclusively on the basis of professional judgment of the auditor, that I call it as non-statistical sampling. Able to understand, everybody? So these are the two broad approaches for statistical versus non-statistical sampling. Sir, any example? So let me give you one simple example. I will give you one simple example to make you understand this statistical versus non-statistical. Let us take the classroom example. See, in the classroom example, there are 100 students are there. Out of that 100 students, I want 10 students. Now, if I look at the face of the student and pick the student, there I'm not objective. If I want to select the 10 students, assume that from the last 10-15 days I have been teaching the classes. So I know in the class who is active, who is not active, who is sleeping, who is watching the mobile, who is not attentively listening, all that I know. So if I look at the face of the student and pick him in the sample, I'm telling from third bench, fourth student. Why? Because regularly he's talking in the class. I selected him into my sample. Now you tell me, am I giving equal chance of selection for each and every item? No. Am I objective? No, I'm unbiased. On the other hand, am I following any scientific approach? No. Then how I have selected that student? Purely using my knowledge, experience and training. From the last 15 days, I have been teaching you and I know you are the mischievous one. That's why I have picked you up. So that we call it as, that is an example for non-statistical sampling. On the other hand, if I want to, out of this 100 students, I want to select the 10 students using statistical approach, how it will look like. So now I want to pick the students not by looking at the face of the student. What I have decided is I will call the roll number. Randomly, I will call out some roll number and that roll number person should stand. That person will fall in my sample. So here I am giving equal chance of selection for each and every item. I'm not looking at the face of the student and picking him. So that means I'm not being biased here. I am giving each and every item in my population to come into my sample and I am here objective. So that could be an example of statistical approach. So like that, we have two broadly used methods, two broadly approaches. One is statistical sampling and the other one is non-statistical sampling. So let me ask you one simple question. You use your knowledge and tell me Between statistical versus non-statistical sampling, which one is less risky? Between statistical versus non-statistical, which one is less risky from the auditor's perspective, where he faces less risk? So if you ask me personally, when we do a comparison, statistical sampling is less risky. Sir, why it is less risky? Why? Because here you are using scientific methods, which are globally accepted method. You are using mathematical theories and probability theories. For example, if you have selected sampling using statistical approach and you have verified that sample, in that sample you did not find out material misstatement, you gave a unmodified opinion. But later a big fraud was found out in the company and it was in the public domain. Now regulatory authorities are asking you, you are an auditor, regulatory authorities are asking you, boss, you did the audit of that company on certain year and you gave unmodified opinion, but now fraud is noticed. Why you are unable to identify the fraud? Why you are unable to identify the fraud? The auditor is telling, sir, standards are permitted to verify the transactions on sampling basis. I have selected the sample. In that sample, this fraud did not come. That's why I'm unable to find it out. So it's not my blame. Now, regulatory authority will ask a counter question. Okay, you are telling this fraud did not come into your sample. How did you select your sample? I will say, I followed statistical approach. I followed so and so mathematical theory, probability theory. Will the judge ask you a counter question to prove that mathematical theory and probability theory? No, no need to prove. Why? Because they are already proven. So you need not prove the basis for your sampling once again to the regulatory authority. When you show them that I have followed statistical approach, you will be on a safer side. But if you take the non-statistical sampling, take for example, using your professional judgment, you have selected a sample. In that sample, you did not find any material misstatement. Resultantly, you gave unmodified opinion. Later, a fraud was identified in the company. Regulatory authorities are calling the auditor and asking, boss, why you are unable to identify the fraud? Auditor is telling, sir, I have taken the sample. In that sample, fraud did not come. Now the regulatory authorities are asking a counter question, on what basis you have selected the sample? Auditor is telling, I have used my professional judgment and I selected the sample. Will the regulatory authority ask a counter question? Yes. What counter question they will ask? Prove your professional judgment. Why you have selected this sample as appropriate? Prove your professional judgment. So when you do the comparison between statistical versus non-statistical, the burden of proof is higher in the case of non-statistical sampling. So when we do the comparison between statistical versus non-statistical, which one is actually less risky? Statistical sampling is less risky from the perspective of the auditor. Does that mean the auditor should always make use of statistical sampling? No. The answer is absolutely no. So whether auditor will use statistical sampling or he will use non-statistical sampling, that is once again the professional judgment of the auditor. The standard did not say the auditor has to always use statistical sampling only. The auditor shall not use non-statistical sampling. These kind of terms you will never be able to find it in any standard. So what in fact the standard has told is, we are giving you two approaches, either follow statistical or non-statistical. It's up to your choice. It's up to your choice which approach you want to follow. That you as an auditor, you decided on the basis of a professional judgment. I only told if you do the comparison, it is less risky, but I never told the auditor should make use of only statistical sampling. I never said this term. I told only by doing comparison, this is less risky. But which one auditor will use, that is completely auditor's professional judgment. But the standard has told one thing, whether you follow statistical sampling or you follow non-statistical sampling, you make sure that the sample whatever you have selected, it is representative of entire population. Whether you follow statistical sampling or you follow non-statistical sampling, you try to make sure that your sample is representing entire population. Sir, what do you mean by sample representing entire population? Nothing but whatever different characteristics in the population are there, all those characteristics must be there in your sample also. I will give you one more analogy to make you understand here. Take for example, this is a population. Now in this population, different kinds of entries are there. Just imagine different shapes indicate different entries. Now from this population, you have selected a sample. Now in this sample, these entries only you got only these characteristics. Now you tell me, is a sample representing the population? All the characteristics whatever there are there in the population, are they there in sample also? No, this sample is not representing entire population. You have taken another sample. In that another sample, you got these kind of entries. Now you tell me, is this sample representing entire population? Yes, this sample is representing entire population. So whether you follow statistical or you follow non-statistical, as an auditor, you try to make sure that your sample is representing entire population. But whether you follow statistical, non-statistical, that is completely up to auditor's choice. There is no mandatory requirement stated anywhere under any standard. Clear? So with this, we are done with statistical versus non-statistical approach also. So you'll be able to find a set of questions talking about these matters. Like if you see, what are the various approaches to sampling? And also you'll be able to find a question, what are the advantages of statistical sampling? So all this I have already explained, the concept wise I have done. So you can read the content, you will be able to easily understand it. So now let us come to balance concepts from this particular chapter. So we'll have a look at question number 5. Very important question from the examination perspective. Very frequently tested from the examination perspective. So let us see what is that question. First, we'll try to understand the question. The question is, what are the various factors which are to be considered by the auditor for deciding upon the extent of checking on a sampling plan? What are the various factors which are required to be considered by the auditor for deciding upon the extent of checking on a sampling plan? Let us try to understand this question in a correct perspective. Sir, what this question is exactly asking about? See, I told as an auditor, you have to express the opinion. Your objective is to express the opinion. Will you express that opinion by doing 100% verification, or you will express that opinion by verifying the transactions on sampling basis? This decision has to be taken by whom? This decision has to be taken by auditor himself. And on what basis he will take the decision? On the basis of his professional judgment, on the basis of his knowledge, experience and training, he will take that decision. In taking that decision, whether auditor will decide whether the auditor wants to do 100% verification or he will go for sampling, that decision will be taken by the auditor. But while taking that decision, what factors auditor will consider, what things auditor will try to keep in mind while taking the decision, whether he will go for 100% verification or he will go for sampling, the auditor has to take that decision ultimately. In taking that decision, what factors he will consider, what things he will try to keep in mind and take the decision whether he will go for 100% verification or he will go for sampling. Hope you have understood the context of the question. I will tell you one simple logic. For example, you are conducting audit of a very bigger entity, very large entity you are conducting the audit, like Reliance Industries Limited. What decision you will take? Here I will say, since the size of the organization is very big, I will go for sampling. You are conducting audit of a very small entity, which is having hardly 100 transactions for the entire year. There you can decide to go for 100% verification. So one of the factor which you are considering in deciding whether you will go for 100% verification or you will go for sampling is size of the entity. Do agree with that? So like that, what other factors auditor will consider in deciding whether he will go for 100% verification or he will go for sampling? So that is what the meaning of the sentence. What are the factors which will be considered by the auditor for determining upon the extent of checking on a sampling plan? Which means what factors auditor will consider in deciding whether he will go for 100% verification or he will go for sampling, whether on what basis auditor is going to decide it. Clear? So one factor I have already told you, he will consider size of the organization under audit. First, he will have a look at the size of the organization. If the size of the organization is very big, he will go for sampling. If the size of the organization is very small, he will go for 100% verification. He will also consider state of internal controls, how effective the internal controls are. If the internal controls in the organization are very, very effective, excellent internal control system the client is having, then he will be more comfortable in going for sampling. And also, he will consider adequacy and reliability of books and records. How adequate and how reliable books and records are. If books and records are more adequate, more reliable, then he will be more comfortable in going for sampling. If he feels they are not adequate, they are not reliable, then he will be less comfortable in going for sampling. And D point, I will talk about it later. It also depends on degree of desired confidence. Sometimes auditors require more confidence, highest level of confidence they want, then they will go for 100% verification. Some auditors will be satisfied with lower degree of confidence. Those auditors will always prefer to go for sampling. So it also depends on degree of desired confidence. And one more thing, tolerable error range. What is tolerable error range? Tolerable error range means the errors which auditor is willing to tolerate. Tolerate means what? Accept. If I put it in the other way around, the mistakes which the auditor is willing to accept in the client company. So if the auditor's tolerable error range is high, what do I mean by auditor's tolerable error range is high? That means auditor is willing to take more risk. Then he will be more comfortable for going for sampling. If I say auditor's tolerable error range is 0, that means auditor is not at all willing to tolerate. Auditor is not at all willing to accept a little amount of risk also. In that case, he will go for 100% verification. Able to understand? So all these factors will be considered by the auditor in deciding whether he will go for 100% verification or he will go for sampling. So 5 factors, guys, very important from the examination perspective: size of the organization under audit, state of the internal controls, adequacy and reliability of books and records, tolerable error range, and even degree of the desired confidence required by the auditor. So all these factors auditor is going to consider, and accordingly he will take the decision whether he will go for 100% verification or he will go for sampling. So this is what regarding question number 5. So since we are done with question number 5, let us try to understand a few more important concepts from this particular chapter. So now the next most important concept from this chapter is what are the various methods for selection of sample. Very, very important. So let us first try to understand the difference between methods and approaches. So most of the students often get confused here. Let us try to understand what is the difference between approaches and methods. See, previously we have seen there are how many approaches to sampling? There are 2 approaches to sampling. What are the 2 broad approaches to sampling? One is statistical, other one is non-statistical. So how we have decided the approach? So we have divided these approaches on the basis of logic behind this sampling. What is the logic behind this sampling? On that basis, we have divided the approaches to samplings into two categories: statistical, non-statistical. We told that in the statistical sampling, the logic is this the logics behind that are, it is going to be random, it is going to be very scientific, it is going to be objective, blah blah blah. And we told that we call such approach of sampling as non-statistical, in which the samples are selected purely on the basis of professional judgment without following any specific technique or method. So this is approach. We have divided the approaches on the basis of logic. See, when you see non-statistical sampling, here there is no technique required. Practically speaking, in the case of non-statistical sampling, we don't follow any technique. We simply follow professional judgment. Whatever our mind is that we select. But in the case of statistical sampling, you want to make sure that items are selected randomly, every item having an equal chance of selection. And you have to make sure that the scientifically you are doing the selection. You have to make sure that your selection is objective. Now, in order to achieve these objectives, you need to follow some methods. You need to follow some methods. Able to understand? I hope I'm able to make the differentiation between it. So we have decided approaches on the basis of logic. So in the case of non-statistical sampling, practically speaking, there is no method or specific technique required. It is purely on the basis of common sense of the auditor. But when it comes to statistical sampling, I am telling you have to do random selection. You have to do it using scientific methods. You have to do it by way of objectively. So if we have to achieve all these objectives, we have to follow some methods or techniques. So if I put it in other way around, the methods or techniques which we are going to discuss are to achieve the outcome of these approaches. The methods and techniques which we are about to discuss are actually the tools for achieving that objective of the approaches. So what are that various methods or various techniques also you can say? So what are the various methods for selection of sample? So practically in the material, if you read it, there will be 5 kinds of method. There will be 5 methods for selection of sampling. Number 1 is random sampling, which is very popularly and very widely used. And number 2, we have interval sampling or systematic sampling. Number 3, we have monetary unit sampling, which is also called as value weighted selection. Then we have something called haphazard sampling, and we have something called block sampling. So these 5 are, see, practically speaking, there are even various other methods also for selection of sampling. But for our classroom purpose, as per the study material, they have included only 5 methods. We are going to talk about 5 methods only. So what are the 5 methods for selection of sample? Number 1, random sampling. Number 2, interval sampling or systematic sampling. Number 3, monetary unit sampling or value weighted selection also we call it. Number 4, haphazard sampling. Number 5, block sampling. Let us try to understand what we actually do in each of this method. We'll try to understand along with the help of examples. Once again, most important question from the examination perspective, and particularly for case scenario based MCQs, this is very, very important. Case scenario based MCQs, if they ask, there is a high chance of asking the case scenario based MCQs from this particular concept. So that's why I want you all to be cautious and pay full attention whenever I'm explaining this. So first we will talk about statistical sampling. First we talk about random sampling. I'm so sorry. Random sampling. Now this random sampling is further divided into 2 categories. Number 1 is simple random sampling. Number 2 is stratified random sampling. Number 1 is simple random sampling. Number 2 is stratified random sampling. So random sampling is one of the method. In that we have 2 sub methods: simple random sampling, stratified random sampling. And let me make the conclusion well in advance. Simple random sampling, we use it for homogeneous transactions. Wherever all the transactions are similar, in those kind of populations, we use simple random sampling. Whereas in case of heterogeneous population, where the items in the population have different characteristics, there we make use of stratified random sampling. But first, let us try to understand what exactly is the approach in both the cases. So first I will talk about simple random sampling. And this simple random sampling also, I will try to explain it from the perspective of classroom analogy. Whatever classroom analogy I was using, the same analogy I will try to explain. See, take for example, 100 students are there in the class. From these 100 students, I want 10 students. And I want to make sure that each and every student will have an equal chance of selection. So I thought, okay, I will call out the roll numbers of the 10 students. So what I have done is I have started calling the roll numbers 5, 15, 25, 35, 45. So like this, I have called the roll numbers. So like this, I have called out the roll numbers and selected 10 students. You tell me, have I done the selection in a random way? Do you think have I given equal opportunity for each and every student to come into my sample? No. Even though I have called out the roll numbers, if you see the sequence of the roll numbers which I have called, they are all in multiples of 5. So that means somewhat bias is there here. Even though I selected the sample calling out the roll numbers, but still there is some bias. Why? Because the roll numbers which I am calling is having certain sequence. Able to understand? So I thought I don't want even this kind of bias also. I want to select the 10 students completely without any bias. So then what you can do is you can call out that roll numbers by using some statistical tools. Statistical tools like random number tables and random number generators. Today we have online tools, random number generators and random number tools we have. I will take the help of the statistical tools like random number tables and random number generators and then pick up the sample. I will show you one live example for this. I will show one simple example for this. See, just go to the Google and search for random number generator. Go to the Google and search for random number generator. So if you go to the Google and search for this random number generator, something like this will open. Okay, so this kind of template will open. So now I am giving the roll number. Minimum roll number is 1, the maximum roll number is 100. Minimum roll number is 1, the maximum roll number is 100. Now out of this 100 roll numbers, I want some 10 random students. So once I have entered the minimum value, maximum value, what I will do is I will click the generate button. So once I click the generate button, if you see here, the number which is shown is 80. Now I will say roll number 80. He will come into my sample. Once again, I will go and click the generate button. Now the system is telling 92. I will call out roll number 92. 92 will come into my sample. Once again, I will click the generate button. Now it is telling 96. Now the 96 will come into my sample. Once again, I am clicking here. Now it is telling 25. 25 will come into my sample. So like this 10 times I will press, and by clicking 10 times, 10 roll numbers I will get, that 10 people will come into my sample. Now you tell me, did I select the sample in a completely random manner? Did I give equal chance of selection for each and every student? Now the answer is yes. So how I made it possible? I made it possible with the help of this online tools or random number tables or random number generators. It's the same kind of tools you can use even for accounting entries also, even in the audit also. Take for example, in the current year, the starting purchase invoice number is 10,000. The last purchase invoice in the current year is 19,876. So these many purchase entries are there. Out of these purchase entries, I want to select a sample of 100 transactions. So I have given starting invoice number, last invoice number, and I will click the generate button. Now system is telling 16069. I will take invoice number 16069 into my sample. Once again, I click the generate button. Now it is telling me 17864. 17864 invoice number will come into my sample. Like this, if I click 100 times, 100 numbers I will get, 100 invoices will come into my sample. But now you will say, sir, clicking 100 times, this is difficult. No, yes, difficult. But this is the basic tool which I have shown to you. Today, advanced softwares are available in the market, where those softwares with single click, you can generate 1,000 transactions of sample. See, whatever I am showing you here, this is a very basic version of random number generator. But today in the market, we have various softwares available in the market. Just with one click of a mouse, you can generate samples containing hundreds and thousands of transactions. So whatever it is, if I am going to select the sample using the statistical tools like random number tables and random number generators, that approach I'm going to call it as simple random sampling. Okay, but simple random sampling is going to work only in the case of homogeneous transactions. So what will be the problem with heterogeneous transaction? I will give you an example to understand. Take for example, 10,000 purchase transactions are there. All the purchases are made from single customer, Mr. X. So now if you follow simple random sampling, that will be perfect. But take for example, there are total 10,000 purchase transactions. Out of that, certain transactions are purchased from Mr. X, certain purchases are made from Mr. Y, certain purchases are made from Mr. Z. Now if I follow the technique whatever I have shown, random number generator or random number table, and if I selected 1,000 transactions, can you give me guarantee in the sample of this 1,000 transactions, will the purchase from Mr. X, Mr. Y, Mr. Z, will everything be covered? Can you give that guarantee? No, we can't give that guarantee. So when the population contain heterogeneous, when the population is heterogeneous, when the population contain dissimilar transactions, then simple random sampling will not give accurate sample. In that case, sample will not be representative. So what we do is, in the case of heterogeneous population, we do one more step. So what we do is, first we are going to divide the entire population which is having dissimilar characteristics into subpopulations having similar characteristics. Like I have a population of 10,000 transactions, and these transactions are made from 3 different suppliers, X, Y, and Z. Now what I will do is, I will divide this total 10,000 transactions into subpopulations having similar transactions. That means I will try to divide the purchase transactions made with X. I will try to divide the purchase transactions made with Y. I will try to divide the purchase transactions made with Z. So out of the 10,000 transactions, I got some 3,000 transactions which are purchased from Mr. X. Some 4,500 purchase transactions purchased from Mr. Y. 2,500 transactions are purchased from Mr. Z. So what I have done here, if you pay close attention, the total population which is having dissimilar characteristics, that I have divided into subpopulation having similar characteristics. This we call it as, this division of population into subpopulation, this we are going to call it as stratification. What we are going to call it? This we are going to call it as stratification. What is the meaning of stratification? Dividing the entire population into, dividing a population having dissimilar characteristics into subpopulation having similar characteristics. This process I call it as stratification. Now, once I have divided the subpopulation, what I will do? Once again, I will try to select the sample from each of this subpopulation. So from this 3000 transactions, I selected 30. From this 4500 transactions, I selected 45. From 2500 transactions, I selected 25. So now how I will select this 30 transactions from 3000? Once again, I will follow simple random sampling. I will make use of random number tables and random number generators. How I will select 45 transactions from 4500 transactions? Once again, by using simple random sampling, by using random number tables and random number generators. How I will select 25 transactions from 2500? Once again, by using simple random sampling, by using random number tables and random number generators. So if you see here, ultimately I am doing simple random sampling, but I'm adding one more step of stratification. This entire approach I call it as stratified random sampling. This entire approach I'm going to call it as what? Stratified random sampling. So what basically happens in stratified random sampling? I'm going to divide the entire population having dissimilar characteristics into subpopulation. From each of the subpopulation, once again I will select the sample using simple random sampling technique. This entire process, this collective process, we are going to call it as a stratified random sampling. Clear? So I have till now I have completed only one method. What is that? Random sampling we are done with. So there are other methods also. Now let us try to discuss other methods. Now I will try to explain something called systematic sampling or interval sampling. We'll try to explain systematic sampling and interval sampling. See, in the case of systematic sampling or interval sampling, first we will do some math. This involves doing certain math. So we have to do one math. What math we have to do here is, what simple calculation we have to do here is, we have to determine sample size. How many number of items I want in my sample, that I have to determine. And you have to determine number of items in the population. The total number of items in the population should be divided with the sample size. For example, total 10,000 transactions are there. Out of the total 10,000 transactions, my required sample size is 1000. So if you divide the 10,000 by 1000, you will get one figure. That figure we call it as sampling interval. Some n number you will get. Here, the n is 10. So what you should do in the case of systematic sampling and interval sampling? So you have to divide the number of items in the population with the sample size. You will get some figure n. In our example, it is 10. So that figure we call it as sampling interval. So once we get the sampling interval, what we will do is, every nth item we will select in our sample. So we'll start with 1, then 10th item I will take, then 20th item I will take, then 30th. So like that, every 10th item I will take into my sample. That constitutes my complete sample. That I call it as, this approach I call it as systematic sampling or interval sampling. But this method is very rarely used in the industry. Clear? But you got to know what exactly happens in this systematic sampling or interval sampling. So we are going to do some basic math here. We will determine what sample size we want. We will determine how many number of items we have in the population. When we do that division, we'll get one figure, which I will call it as sampling interval. Some n number you will get, and every nth item we will take it into our sample. That I call it as systematic sampling or interval sampling. Then we have other methods, which is monetary unit sampling. We have something called monetary unit sampling, and we also have something, this is also called as value weighted selection. Monetary unit sampling, or this method is also called as what? Value weighted selection. See, the name itself says value weighted. Weighted means what? Giving importance. Value weighted means what? Giving importance to the value of the transaction. If you are selecting the sample, if you are analyzing the results of the sample by giving importance to the value of the transaction, that method I call it as monetary unit sampling or value weighted selection. I will give you one simple example. So for example, I am telling that I am verifying purchases. Okay. Now the purchases are having a very wide range. The minimum purchase value is 10,000. The maximum purchase value is 1 crore. So what I am trying to convince myself is, so whatever transactions are there which are more than 10 lakh rupees, whatever transactions are there which are more than 10 lakh rupees, that I will verify 100%. Whatever purchase invoices are there more than 10 lakh rupees, that I will verify 100%. So whatever invoices are there which are from 5 lakhs to 10 lakhs value, that I will verify 30%. Whatever transactions are there which are between 2 lakhs to 5 lakh rupees, that I will verify 10%. Whatever transactions are there which are less than 2 lakhs, I will verify 1%. So that means you are trying to determine your sample size and sample transactions by giving importance to the value of the transaction. That approach I call it as value weighted selection. The name itself says value weighted, giving importance, giving weightage to the value of the transaction for determining the sample size and selection of the sample. That approach we are going to call it as value weighted selection. So how many approaches we are done with? 3 approaches we are done with. What are they? Random sampling, then we are done with interval sampling or systematic sampling, then we are done with monetary unit sampling or value weighted selection also we are done with. Now we will talk about the next thing. The next thing is I will explain the last one. First, block sampling I will explain. Sir, what is block sampling? Very simple, guys. In other sampling methods, we will pick one item. For example, if there is a file of 1000, if I have given you a file which contains 1000 invoices, in that 1000 invoices you want to take 50. How you will generally take? You will pick one item randomly. You will pick one item till the time you get a count of 50. So that we do in other sampling methods, but in the block sampling what we do is we will not pick one item. If from a file I want 50 items, I will take continuous, somewhere in between I will take 50 continuous items into my sample. That is the only change when compared with other methods. In the case of block sampling, unlike other methods, we will not pick one item separately. If I want certain number of items, a series of continuous items I will pick. If I want 50 items from 1000 transactions, I will not pick one. I will somewhere in between some 50 continuous item all at once I will pick into my sample. This I call it as block sampling. But this method is not effective. Why this method is not effective? I will tell you simple logic. Why block sampling is not effective is generally the data will be arranged in one order. Either that could be chronological order, that could be name order, that could be alphabetical order, that could be value based order. So when you pick series of continuous items, what will happen is you generally get all similar transactions. Assume that the files are arranged chronologically, date wise they have arranged. If you pick continuous 50 items, you might get all the 50 transactions relating to 1 month only. You will not be able to cover the entire characteristics. So that is one major disadvantage of block sampling. That's why block sampling also will not be majorly used. But whatever it is, block sampling also one method is there. Then we have something called haphazard sampling. Heard about this term haphazard? What do you mean by haphazard? Haphazard means having no specific approach. So in the name itself says haphazard sampling. In the haphazard sampling, we will not follow any specific technique. At the same time, we will also make sure that our bias is not there. So it's a bit confusing, but listen carefully. I will try to give you an example to make you understand. In the haphazard sampling, the name itself says we will not follow any specific technique. Even though we don't follow any specific technique, we try to make sure that even though we don't follow any technique, we try to make sure that there is no bias involved. Sir, how this will happen? I will give you one layman example. See, for example, I have a file containing 1000 documents in front of me. Out of that, I want 50. What I am doing is I am closing my eyes. Randomly, I am touching one paper. Whatever paper touches my hand, that will come into my sample. Am I following any specific approach? No. But at the same time, by closing my eyes and randomly picking the item, I am also trying to make sure that bias is not there. This is simply haphazard sampling. So yeah, this is what exactly haphazard sampling is. As you could find this very funny, that's why this method is also not used. As you might have found, whatever I have told is very funny, closing my eyes and picking the items. Yes, because of that funny reasons only, this technique will not be used. See, if you use haphazard sampling, tomorrow if the judge is asking, boss, on what basis you have selected the sample, you can't show him a video where you are closing your eyes and picking randomly some items. So it is difficult to establish in the future how you have selected the sample. So that's why haphazard sampling also will not be used. So out of all the methods, whatever I have discussed, the most widely used methods by the auditor for selection of sampling is random sampling. And in that random sampling also very commonly used is stratified random sampling. Clear? So these are all the various methods for selection of samples. So now let us talk about a few more important concepts. So I will try to wind up this chapter, will not take much of a time. So let us try to wind up the chapter by discussing few more important terms. Yeah, this one I will try to explain. What are the requirements as to sample design, sample size, and sample selection? What things you have to keep in mind in taking the decision regarding sample design, sample size, and sample selection? Let me try to elaborate these terms here. Sample design means just now we have seen various techniques. Which technique you have to use for which item? For example, for purchases, which technique you have to use? Which method of selection you have to use? For sales, which method of selection you have to use? That decision I call it as sample design. Sample size means how many number of items should be there in your sample. Should your sample contain 100 items, 200 items, 300 items, 400 items? So how many number of items you want in your sample? That I call it as sample size. Sample selection, that means how exactly you are selecting the items in your sample. So while you are taking decision regarding sample design, while you are taking decision regarding sample size, while you are taking decision regarding sample selection, what are the requirements? What things you will try to keep in mind? Very simple, guys. When I am taking decision regarding sample design, which technique I have to follow? One thing which I will always try to keep in mind is characteristics of the population. One thing which I will try to keep in mind is characteristics of population. Like if it is homogeneous population, simple random sampling. If it is heterogeneous population, stratified random sampling. So what things I have kept in mind in selection of in deciding sample design? Characteristics of the population. Then, sir, how much? What should be your appropriate sample size? How many items should be there in your sample? Should your sample contain 100, 500, 600, 700? How many items should be there in your sample? There is no hard and fast rule. The standard simply says that you try to determine sample size which is sufficient to reduce the sampling risk to an acceptably low level. See, the standard is being very smart here. So the standard did not say this will, it did not give certain figure, this much amount will be sufficient sample size. They did not say, but instead what they are telling, it is up to your choice. So simply by using this sentence, what the standard has told us, it is your headache. You apply your professional judgment and decide what should be the suitable sample size. So you as an auditor, you apply your professional judgment and decide such a sample size which is sufficient to reduce the sampling risk to an acceptably low level. And how you will select the items, sir? If it is a statistical sampling, I will give equal chance of selection for each and every item. If it is a non-statistical sampling, I will select it on the basis of my professional judgment. So that is what I will try to keep in mind while taking the decision regarding sample selection. So these are the requirements which auditor has to keep in mind while taking decision regarding sample design, while taking decision regarding sample size, and also taking decision regarding sample selection. Hope you guys are able to understand this. Clear and comfortable, everybody? Now let us try to proceed ahead with remaining concepts. So what does question number 7 talk about? What are the factors which are required to be considered by an auditor while deciding an appropriate sample size? See, previously we have seen question number 5 also. See, question number 5 is also talking about certain factors which are required to be considered by an auditor. And now this question number 7 is also talking about certain factors which are required to be considered by an auditor. But what is the difference actually? The difference is question number 5 is talking about what factors are required to be considered by the auditor in taking decision whether you will go for 100% verification or sampling. Whereas question number 7 is talking about once as an auditor, you have taken the decision that you will verify the transactions on sampling basis. You have decided that you are going to follow the sampling, but will you go for bigger sample size or will you go for smaller sample size? That depends on what factors. Able to understand? So question number 5 is talking about what factors you will consider in deciding whether you will go for 100% verification or sampling. Whereas question number 7 is talking about once you have decided, you have taken decision using your professional judgment that you will follow sampling. So once you have taken that decision, whether you will go for a bigger sample size or you will go for a smaller sample size, that depends on what factors. Will you go for larger sample size? Will you go for smaller sample size? That depends on what factors. Those factors are actually given here. Very, very simple one. Let us try to understand in a quick manner. Number 1, it depends on desired level of assurance. What level of assurance you require. If the auditor wants higher level of assurance, bigger will be the sample size. If the auditor wants lower level of assurance, lower will be the sample size. So what kind of relationship is there? Direct relationship. Higher the level of assurance required by the auditor, higher will be the sample size. Lower the level of assurance required by the auditor, lower will be the sample size. Similarly, it also depends on expected rate of deviation or misstatement, simply risk of material misstatement. As an auditor, if you expect the risk is very high, the sample size also will be very high. If you expect the risk is low, the sample size also you will keep it low. Next, it also depends on effectiveness of internal controls. If you find that controls are very, very effective, you will try to keep your sample size at a low level. If you find that controls are not that effective, you will try to increase your sample size. So one more factor which will affect your decision regarding sample size is effectiveness of internal controls. And it also depends on characteristics of the population. See, if the population contain homogeneous transactions, smaller sample size. If the population contain heterogeneous transactions, bigger sample size. Clear, everybody? And it also depends on tolerable rate of deviation or misstatement. As I've told, tolerable rate of deviation means the risk which auditor is willing to accept. If the tolerable rate of deviation is high, if the tolerable misstatement is high, if the auditor is willing to accept more risk, then he will go for a smaller sample size. If the auditor is willing to tolerate less risk, he don't want to take the risk, then what he will do? He will go for a bigger sample size. So between tolerable rate of deviation, tolerable misstatement, and the sample size, there exists an inverse relationship. There exists an inverse relationship. Why? Because if the auditor is willing to tolerate more risk, if the tolerable misstatement is high, the auditor can verify less number of transactions. Sample size could be low. On the other hand, if the auditor is willing to, if the auditor's tolerable misstatement is less, that means if the auditor is willing to take less risk, he will try to verify more number of transactions. Resultantly, sample size will be very higher. Understood? So these are all the various factors which will be considered by the auditor once he has decided that he will go for sampling, but he has to take a decision whether he go for bigger sample size or smaller sample size. That decision will be taken on the basis of these factors. Understood? Clear and comfortable, everybody? So this is what regarding question number 7. So now what I will do is I will try to explain one more concept. With that, I will wind up this chapter. I'll try to explain one more small concept, impact of sampling risk, that I will explain. So once by explaining this sampling risk, we will wind up this chapter, audit sampling. So let us try to understand the meaning of this sampling risk and what is the impact of the sampling risk on audit, how it is going to have an impact on different kinds of audit procedures. All that we'll try to understand. A bit complicated discussion. I want your complete focus. I will spend some 10 or 15 minutes of time on the sampling risk alone. Why? Because the topic itself is a bit complicated. I need your full attention. So when you pay full attention, you will try to understand the concept in a correct perspective. And from this particular concept also, there is a high chance of asking a true or false statements or MCQ. So that's why everybody remain cautious, stay focused. We'll discuss now the concept of sampling risk. First, let us try to understand what exactly is the meaning of sampling risk. What exactly is the meaning of sampling risk, that we will try to understand. Guys, if I put it in the simple terms, the risk of selecting inappropriate sample. If I have to put simple meaning of the term sampling risk, the risk of selecting an inappropriate sample. That means, for example, if I put it in simple way, you have selected the sample. In that sample, whatever you have selected, misstatements were not covered. That means you have selected an inappropriate sample, because of which your opinion can go wrong. So that risk of selection of inappropriate sample, I am going to call it as sampling risk. So if I give you simple example, take for example, total 10,000 transactions are there. Out of the total 10,000 transactions, you have taken a sample of 100 transactions. In that sample of 100 transactions, you verified you are unable to find out any material misstatement. When you are telling 1,000 transactions you have verified, you are indirectly telling that 9,000 transactions you did not verify. So in that 9,000 transactions which you did not verify, there is some fraud. Since it did not come into your sample, you are unable to find it out. So that means if you have selected an inappropriate sample, because of which your opinion has gone wrong, so that risk only we call it as sampling risk. This is the simple meaning. But as we all know, standards doesn't like simple meanings. They want to complicate everything. Even the definition of sampling risk has also been complicated by using some terminology. Let us try to first read what is the meaning of the sampling risk. Sampling risk is the risk that auditor's conclusion based on a sample may be different from the conclusion in the entire if the entire population was subjected to same audit procedure. Sir, what they are trying to say? Very simple. Don't worry. They are telling that by performing audit procedures on the sample, you formed some conclusion. If you have performed the same audit procedures on the entire population, your conclusion would have been different. So that risk only we call it as sampling risk. If I once again talk about in terms of example, so total 10,000 transactions are there. Total 10,000 transactions are there. This is the entire population. From this, you have selected a sample of 1,000 transactions. You performed audit procedures on these 1,000 transactions. You came to know that in the sample there are no material misstatement. That is your conclusion on the basis of performing audit procedures on the sample. If you would have performed the same audit procedures on the total 10,000 transactions, you would have concluded that there is a material misstatement. That means whatever conclusion that you have formed on the basis of performing audit procedures on the sample, that conclusions would have been different if the same audit procedures were performed on entire population. Nothing but misstatements or did not get covered in your sample, or you did not select the appropriate sample. That risk only we call it as sampling risk. Simple thing. That's what even I have told. That thing only they have tried to complicate in this difficult manner. So what they are trying to say, once again, if I read the definition, very important from the examination perspective, sampling risk is the risk that auditor's conclusion based on a sample, whatever conclusion that you have formed on the basis of sample, it may be different from the conclusion if the entire population was subjected to same audit procedure. Whatever audit procedures that you have performed on the sample, if you would have performed the same audit procedure on the entire population, the conclusions would have been different. So that risk we are going to call it as sampling risk. And this sampling risk is going to impact our test of controls also. It is going to have an impact on the test of details. Nothing but it is going to have an impact on the compliance procedures. It is going to have an impact on the substantive audit procedures. Let us try to understand how the sampling risk will have an impact on the compliance procedures, how it is going to have an impact on the substantive audit procedures. We will try to understand. So now we are going to start the complex part of the discussion. Listen carefully. Right. So first we will try to understand how the sampling risk will have an impact on test of controls. Guys, what happens in the test of controls? We try to verify internal controls. Whether internal controls are working effectively or not, we try to verify in the case of test of controls. So how sampling risk will have an impact on test of controls? Let us try to understand it with the help of one example. Assume that there is a entire population of internal control. This is the entire population of internal control. From this entire population of internal control, you have selected one small sample. From this entire population of internal control, you have selected a sample of internal controls. And since you have selected sample, on what you will perform audit procedures? On this sample, you have performed test of controls. And you came to know that in the sample of internal controls, you did not find any deviation. Whatever sample of internal controls that you have verified, in that you did not find any deviation. So if you did not find any deviation, you have concluded that internal controls are effective. What you have concluded? You have concluded internal controls are effective. Since internal controls are effective, what you will do? You will try to decide that you will try to perform less substantive audit procedures. By performing compliance procedures on a sample of internal controls, you have decided that internal controls are effective. And since internal controls are effective, you have decided that you will try to perform less substantive audit procedures. But if you would have performed audit procedures, if you would have performed on the entire population, you would have found out a deviation. So if you would have performed the same test of controls, the same audit procedures on the entire population of internal controls, in fact, you would have concluded that internal controls are not effective. If you would have performed same audit procedures on the entire population, you would have concluded that internal controls are not effective. You should have taken the decision to perform more substantive audit procedures. Should have taken the decision to perform more substantive audit procedures. This is the appropriate decision, but on the basis of sampling, you are taking an inappropriate decision to perform less substantive audit procedures. So this risk, we call it as risk of over-reliance. This risk we call it as what? Risk of over-reliance. Sir, why the term risk of over-reliance? Because on the basis of sample of internal controls, you are overly relying on internal controls. When the controls are not effective, but because of sampling, you are relying that controls are effective. So risk of over-reliance, you are overly relying on internal controls when they are ineffective. On the basis of sample, you have concluded that controls are effective and you have taken a decision to perform less substantive audit procedures. But in fact, in this case, more substantive audit procedures is required, but you are performing less substantive audit procedures. Now you tell me, because of this risk of over-reliance, which aspect of the audit will be affected? Will efficiency be affected or will effectiveness will be impacted? What will be impacted? Because of this risk of over-reliance, will efficiency of the audit will be impacted or effectiveness of the audit will be impacted? I hope I have already explained the meaning of efficiency and effectiveness and differences also, but I will explain one more time. Efficiency means doing the work in less amount of time. Effectiveness means doing the work in a perfect way. If you take this case, see, you are performing less substantive audit procedures when more is required. That means you will do the work in less time. You will be efficient here, but your audit will not be qualitative. Your audit will not be effective. When you are supposed to perform more substantive audit procedures, you are performing less substantive audit procedures, effectiveness of the audit will be impacted. You will complete the work in less time, agreed, but quality of the work will not be there. Clear? This risk we call it as risk of over-reliance. Okay. Now there will be one more kind of impact on test of controls by sampling risk. Let me try to explain that also. Now let us take another scenario. Take for example, this is a entire population of internal control. Now in this entire population of internal control, you have selected one sample. This sample of internal control you have selected. On this sample, you have performed test of controls. In this sample, you found that one of the control is weak. One control is not working effectively. You thought that if in my sample only ineffective control is there, in the entire population also there will be so many controls which will be ineffective. In your sample, you got one ineffective internal control. You thought that if in my sample only there is an ineffective control, in the entire population also there will be so many ineffective internal controls, and you have decided that you made a conclusion that internal controls are ineffective. You have made a conclusion internal controls are ineffective. You have decided this on the basis of sample. Since you have decided internal controls are ineffective, what decision you will take regarding substantive audit procedures? You have decided you will perform more substantive audit procedures. You have decided you will perform more substantive audit procedures. But if you would have performed the test of controls on the entire population, you would have concluded that whatever deviation you found, that is the only deviation. When you look at from the entire population perspective, that is not material only. See, since you have verified the sample, you thought in a much bigger way. You thought that if in my sample only there is deviation, there will be so many deviations in the entire population. So you concluded internal controls are ineffective on the basis of sample. If you would have performed audit procedures on the entire population of internal controls, you would have concluded that that is the only weakness. In fact, internal controls are effective. So if you have performed audit procedures on the entire internal controls, you would have concluded that internal controls are effective, and you should have taken a decision to perform less substantive audit procedures. This is the appropriate decision. But on the basis of sample, you are taking inappropriate decision of performing more substantive audit procedures. This risk we call it as risk of under-reliance. This risk we call it as what? Risk of under-reliance. Sir, why we call this as risk of under-reliance? Why do we call this as risk of under-reliance? Why? Because when controls are effective, you are not actually relying on them. On the basis of sample, when controls are effective, when you should have relied on it, you are under-relying. You are not actually relying on internal controls. As a result of that, when less substantive audit procedures are appropriate, you are unnecessarily performing more substantive audit procedures. If I ask the same question, which aspect of the audit will be impacted? Will efficiency be impacted or effectiveness will be impacted? See, in this case, effectiveness will be there. You are doing more work than required. Your work will be very perfect, but unnecessarily you are wasting your time. Efficiency will get impacted. Efficiency will not be there. Effectiveness will be there. So in case of risk of over-reliance, what aspect of the audit will be impacted? Effectiveness. In case of risk of under-reliance, efficiency will get impacted. Understood? Clear and comfortable? Similarly, we will try to see the impact of sampling risk on the test of details also. In test of details, what will happen? We will try to verify actual transactions. Actual entries in the books of accounts will try to verify. So how sampling risk will have an impact on test of details? This also I will try to explain it in a detailed manner. Take for example, there is a population. Now what does this population contain? Previously in case of test of controls, population contain internal controls. Now what will be there in the population of test of details? Entries in the books of accounts will be there. Entries in the books of accounts will be there. Out of that entire population of entries in the books of accounts, you have taken a sample of entries. You have taken a sample of entries. On this sample, you performed audit procedures. You verified the supporting documents and all. You did not find out any material misstatement. In this sample, you did not find out any material misstatement, and you concluded that entire population also not containing any material misstatement, and you have given unmodified opinion. Which opinion you have given? Unmodified opinion on the basis of sample. But if you would have performed audit procedures on the entire population, in fact, you would have concluded that there are misstatement in the financial statements. You would have given modified opinion. You would have given modified opinion. If you would have performed audit procedures on the entire population, you would have found out a misstatement and you would have given a modified opinion, which is appropriate. But on the basis of sample, you are giving an unmodified opinion because you did not find out any misstatement. This is an inappropriate opinion. This risk we call it as risk of incorrect acceptance. This we call it as what? Risk of incorrect acceptance. Sir, why the name risk of incorrect acceptance? Why the name? Because see, when the financial statements are not free from material misstatements, but on the basis of sample, you are wrongly accepting, you are incorrectly accepting that yes, financial statements are free from material misstatements. Financial statements are not actually free from misstatements, but on the basis of sample, you are wrongly accepting that financial statements are free from material misstatements. So that's why we call it as risk of incorrect acceptance. Now you tell me, will this risk of incorrect acceptance, will it lead to audit risk? Yes, it will lead to audit risk. Why? Because when modified opinion is appropriate, you are giving an unmodified opinion. When modified opinion is appropriate, you are giving a modified opinion. Yes, this risk of incorrect acceptance will lead to audit risk. Let me explain what other way it will have an impact. Take for example, another way around, there is a population of entries in the books of accounts. From that, I have taken a sample. On this sample, I have performed audit procedures. Lucky fellow, I found in my sample only misstatement. I found a misstatement in my sample only. I thought in my sample only, if there is a misstatement, in the entire population also there will be so many misstatements. If in my population, if in my sample only this misstatement is there, in my entire population also there will be so many misstatements, and he concluded that financial statements contain a material misstatement, and resultantly he has given a modified opinion. What opinion he has given? Modified. But if you would have performed audit procedures on the entire population, you would have concluded that this is the only misstatement which you found it in the sample. There are no other misstatements. That misstatement is not at all material only. So if you would have performed the test of details on the entire population, you would have concluded that actually there are no material misstatements. Misstatement is there, but that is not material. You would have given unmodified opinion. You would have given unmodified opinion if you perform the test of details on entire population, which is appropriate. But on the basis of sample, you are wrongly giving a modified opinion. This risk we call it as risk of incorrect rejection. Risk of incorrect rejection. Sir, why the name risk of incorrect rejection? Why? Because even though the financial statements are free from material misstatements, on the basis of sample, you are wrongly rejecting it. No, financial statements contain a material misstatement. You are rejecting that fact. So that's why we call it as risk of incorrect rejection, because of which you will give modified opinion when unmodified opinion is appropriate. Will this lead to audit risk? No, this scenario will not lead to audit risk. Why? Because if you go back to the risk assessment and internal control chapter, where we elaborated, where we understood the concept of audit risk, I told that audit risk covers only those circumstances where modified opinion is appropriate, but you are giving unmodified opinion, whereas audit risk does not include if you give a modified opinion when unmodified opinion is appropriate. So risk of incorrect acceptance will lead to audit risk. Risk of incorrect rejection will not lead to audit risk. Clear? So with this, I want to wind up the chapter audit sampling. So we have covered all the important content from audit sampling, important from the examination perspective. Hope you guys have understood that audit sampling related revision.